So, good morning to all of you. Thank you very much for being back and on time for the second day of our second 2024 meeting. This is going to be an important day. This is going to be the Sustainability Day. Yesterday, I already said a few things about how important this is going to be. And I think that I don't really need to say much more because for this board, it's absolutely clear. I hope that the discussions today will be critical as we head for the finalization of our standards. In our agenda for today, we have a report back from the feedback provided by stakeholders on the exposure draft. During the recent outreach activities, and there were many, but we will try to make it short. Also, an update on the number of respondents and comments letter to the exposure draft, not much more than you already know. And then we will have a high-level preliminary discussion about subjects which were identified in the analysis of the comment letters. Some matters are for coordination between the IESBA and IESB. IESB, as you know, is also working for the finalization of their standards. So topics of coordination have been identified, and this is going to be a bit of work today. And by the way, Willibot, Dan Montgomery, and Josephine Jackson, virtually, I think, will join us for this discussion to make sure that we are on the same page. And then lastly, we will have receive a presentation on the result of the benchmark exercise from comparing the EU regime, the European regime, and the IESBA regime. This is the plan for today. Very substantial agenda. And I will kindly ask all board members, to be as focused as possible in the conversation and take part in the conversation. As I was saying yesterday, the part of coordination will be critical. Coordination means that we will all be working together for a result which works and which is effective, but this needs the board as much as possible, all the board members to be involved in the discussion, try to understand what it means, the proposals that will be made by the task force in that respect, and hold a substantial, open-minded, collaborative discussion to try to head for good results. So this is the plan for today, and without anything else from my side, I will give the floor to John. Yes, John from the IESBA staff, who will provide you with the report back. John, please.
Okay, thanks, Gabriella. Good morning, everyone. So yeah, as Gabriella mentioned, we just wanted to provide a report back on the feedback that was provided by stakeholders during recent outreach activities in relation to the IESA. So since the IESA was issued on 29th of January, there's been an extensive outreach campaign. Sorry, just bear with me. Yeah, it's been an intense few months, intense few months for the staff, and in particular for Gabriella in relation to all the outreach activities. But the results of that effort have been well worth it. So just go back one. So during that campaign, there's been over 7,000 stakeholders that have been reached in just a matter of few months. So it's a really impressive number there. We conducted 2 global webinars, and I'll go through some of the statistics in a couple of minutes. We held direct webinars with UNCTAD Africa, for which representatives from 14 of the 29 countries of their partnership attended. We also had a webinar for UNCTAD ISA, for which 259 people registered across Africa, Asia, Eastern Europe, Latin America, and Western Europe. We also held 5 in-person seminars. There was one in Toronto, Brussels, Tokyo, Sydney, and also Melbourne. Gabriella has also been very busy with media interviews and international press coverage. I'm sure you've seen a number of her emails in relation to that, and also some emails from Dave and all of the LinkedIn posts that have covered all those. There was also an extensive and from all accounts a very exhaustive week of outreach in Australia, which Jeff will discuss in a few minutes as well. Gabriella, Ken, and Sylvia attended numerous engagements in Japan, and Sylvia will address those in more detail soon. So Gabriella, Ken, Cam, and myself, we attended Toronto for a series of meetings with CPA Canada, also Canadian regulators, and I'll provide a bit of an update on that one. And there's also a series of outreach activities in Singapore, which Jeff will cover. So just in relation to the global webinars, we had 2 global webinars. The first one was on February 27th, and there was almost 460 people registered for that across a whole range of stakeholder groups. So really good outreach in that capacity, and also good spread of stakeholders that were addressed there. And so that first one was targeted more so at the Americas, Europe, and the Middle East and Africa. And then on to the other webinar, which is on the 5th of March, and that was targeting Asia Pacific and Oceania region. And again, there was almost 250 people registered for that seminar. And again, a really good spread across stakeholder groups. So I'm just going to now pass to Sylvia just to talk through Brussels and Tokyo.
Thank you very much. So as the board agreed previously that we are going to organize a series of seminars to get input on the exposure draft during the public consultation. As the board agreed, the format of these seminars would be a bit different than the roundtables we held previously, because the focus is to get input on the key topics and have a focused discussion with representative of the wide range of stakeholders. So the first seminar was in Brussels at the Office of the Financial Services and Market Authorities. It was held in mid-April. And the seminar included 2 plenary discussions, 2 plenary sessions with 5-6 panelists, and it was moderated by the staff, and Mark was there as a panelist as well at both plenary sessions. And while we were organizing this seminar, the key objective was that we invite representatives of a wide range of stakeholder groups. So not only PAs and firms, but also investors, preparers, and non-PAs. And as you can see of the slide, there was 46 participants from 30 organizations, and we have a really good representation and the great interest of the seminar and the great number of attendance, and I believe we get a really great input. One of the plenary session focused on the key attributes and the key characteristics of the sustainability reporting and assurance standards, and focused on the enforcement and implementation issues and potential challenges. And the second plenary discussion was focused more on the independence issues. The discussion was around the proposals regarding the groups and the value chain. So the input we have received during that seminar was that there was a clear recognition of IESBA's work and the role of ethics regarding the sustainability reporting and assurance as well. What we have heard from not only from the panelists, but also following that, the Q&A sessions, so the participants, that there were some concerns around the potential challenges when the jurisdiction is already adopting a set of standards, ISO standards, or based on the EU, and there could be potential fragmentation between the standards. So participants didn't point out any issues or contradiction between the standards, but they just suggested that the board coordinate with these other standard setters and national jurisdictions going forward. There was also, during the discussion in the groups, there was a strong support for the ethics and independence standards addressing the group sustainability assurance engagement. There was a recognition then the sustainability assurance will be mandated for the large and listed entities that are usually operate in the group. So they believe it's important that there will be standards available. but participants raised or pointed out some perceived complexity around the proposed group standards, especially because this is something that has been just approved recently, and they had concerns that non-PAs are not familiar with these group concepts. But I think the issue was more around that we need guidance and we need further coordination with IESB on these matters. There were a couple of questions around the proposals, the independence consideration with respect to value chain entities, especially the requirement, the proposed requirements on the knows or has reason to believe principle. That includes the knows or reason to believe principles. During the panel discussion, there was a discussion around the potential application of these principles, and there was suggested that if IESBA keeps these requirements, there would be a need for further guidance on how to apply consistently this principle. Regarding the proposals on the non-assurance services, there were a couple of discussion. I think it was one panelist particularly who raised whether the services that we are currently addressing are the appropriate one, and whether we need to do a bit more work to address more sustainability specific NAS services. And there was a couple of other views that we need transitional provisions, but this is something that the board already and the workstream one already think about. What could be the appropriate transitional provisions for the proposals on non-assurance services. There were some discussion around the fees and the proportion of fees, and questions around the argument or what is the perceived conflict of interest in relation to the fee proportion of the fees. The proposal regarding the proportion of the fees that we are currently having in the proposal, and there were some suggestions to provide a better explanation about these perceived conflict of interest. The panelist or the panel also included a few non-PAs, and we have a discussion around the independence considerations proposed for the use of another practitioner. And we heard views and arguments that these non-PAs who are going to participate in the sustainability assurance, either as practitioners or other practitioners who participate in the work, they have a long, or they are already subject to specific standards, and they are aware of what's the independence requirement. So it was really useful to hear their views regarding how they could apply our standards and whether it would create issues, or whether they believe that these standards are actually complex or not. And I think there was generally there was a support for the direction, but there was a recognition that there could be some early challenges as they are implementing the standards. And I think the key word we have heard that more guidance is necessary for the implementation. The next I would say stop was the Tokyo seminar, where it was, as John said, it was Gabriella, Ken, and Tomoyo and Masahiro participated, and thank you very much for Masahiro for organizing the agenda. We met quite a lot of stakeholders in Tokyo, including investors, Big Four representatives, representatives of those charged with governance. So it was a really packed agenda, and that included 2 seminars. One seminar that was organized by the Japanese Financial Services Agency, the JFSA. It was a smaller, but still a couple of representatives, smaller seminar where the JFSA organized, that included a lot of representatives outside of the accountancy profession. You can see on the slides the name of the organizations. And also there was another seminar that was organized by GICPA that was a virtual and in-person seminar where we have more than 600 participants. It was a bit longer seminar that included an in-depth presentation, a plenary discussion that was moderated by Masahiro, and there was a Q&A session as well. So just a couple of points on the feedback. It's not just the feedback from the seminars, it's the feedback we have heard during our discussions with the investors and other stakeholders as well. Again, there was a general support for the IESBA proposal, but the participants or representatives raised a couple of concerns or asked for some clarification. I think what we have heard was that there were some concerns regarding the implementation of the standards by non-PAs, and there was a request that IESBA should put resources or emphasis the capacity building going forward, especially in the case of the non-PAs. And there were some suggestions that during this capacity building, work closely with AIF as well and coordinate with ISO. There was some discussion around, or there were some questions regarding the enforcement and the licensing of non-PAs and what's IESBA's information about that. So we had a discussion, especially on the seminars, on our information. And again, I think the questions were mainly around the independence with respect to the proposals for the value chain entities. And I think investors pointed out that how difficult it is to get credible information from value chain entities and perform assurance procedures. So it's not just the independence, but also from the assurance side, there see some difficulties. And they pointed out that we should work closely with IESBA, especially with respect to value chain entities, where we had these 3 scenarios that we are addressing currently in our proposal. And they believe that more work should be done regarding the coordination to be clear that how do we respond to IESBA's proposals. We heard some comments regarding the proposals on non-assurance services. Again, there were some questions around the appropriateness of the NAS or the NAS that we are currently addressing on the subsections. It wasn't really an objection. It was just they believe that more clarification is necessary to understand that how these proposals are relevant in the context of the sustainability assurance engagement. There were some suggestions for further guidance to understand the application or on the self-review threat prohibition, and also some questions around what kind of services that include advice and recommendations are permitted. They believe it's a really important point to understand, or users of the code to understand whether they can provide advice and recommendation, because they saw that it's in the public interest that the sustainability assurance practitioner can communicate or provide advice to the client, especially at the early stage. And they believe that clear guidance will be necessary on that part, and not just clear guidance, but clear transitional provisions as well. There were discussions around the NOCLAR provisions and requirements, and there was a strong support to strengthen the NOCLAR proposals beyond just the consideration of the communication to a straightforward requirement for communication with the auditor of the financial statements. So these are just a couple of points, and of course the detailed notes from these seminars will be shared or already shared with the work stream, so they will consider it while developing the proposals. And I think I will turn to Jeff.
Thanks, Sylvia. I just wanted to check before we do that whether Ken and Gabriel had any other additional thoughts on on those other outreaches?
I don't know, Mark, anything you would like to add in relation to Brussels?
Thanks, Ken. I suppose I'd make two comments. Firstly, it was very good in one of the panel sessions that we had the president of the IAF. And the one thing I would say is that whilst PAs seem to write in abundance telling us that non-PAs won't be able to understand how to use the code, non-PAs actually seem to think they'll be able to cope. So I think that's a bit of a distracting noise. I think the other really important thing about the Brussels outreach was an opportunity to engage directly with the European Commission and the CEAOB and say, don't make decisions too quickly about what you will and won't do, because there's an awful lot of stakeholder support for developing the sustainability proposals within the code. And if they move too quickly to rule things in or rule things out, it won't achieve the thing that everyone is looking for, which is a consistent global line.
Thank you very much, Mark. In relation to Tokyo, I'm just looking to Tomoyo or even Maz, if you would like to add anything in relation to the meetings we've had.
Thank you. Thank you, Ken, and thank you, Sylvia. I think Sylvia summarized the output quite well. One thing to focus is that in Japan, we got quite great support from the non-PAs about the current ED. I think that's one positive. And as Sylvia mentioned, the non-assurance service, the independence of the non-assurance service in the early period was one, probably of course, the value chain entity as other regions are concerned that we will talk later. And the other thing that the people were concerned was about the non-assurance service independence in the early stage. And yes, but I think the seminar was good and we got great support for the ED. Thank you.
Thank you very much, Tomoyo. And just in relation to the non-assurance point, Silva, I don't know if you can just go to the previous slide. There's just this, and maybe it's a point of detail, but one example was raised, which is about a firm providing strategy advice on an entity's ESG strategy or sustainability strategy. And the question that was raised really was, what if 10 years down the road, the entity turns to the firm that provided the ESG strategy advice? Would there be a self-review threat by the time we get to that point, 10 years forward? So it just triggered a thought for further reflection. Not that we necessarily have this direct answer, but as we think about precisely the area of the very much evolving, very rapidly developing area of sustainability reporting, and companies are turning to consultants, accounting firms for advice as to how to develop their strategies on sustainability. What might be the implications further down the road when those firms will need support for their sustainability assurance engagements and so forth. So just for further reflection, but really I took away a very positive impression from Japan, and I'm really grateful for the Japanese Financial Services Agency. I'm just looking for Yohei is there. Very supportive, really, of from the regulatory stakeholders in Japan about the work that IESBA is doing. In Japan, I mean, the message we took is that stakeholders really have an expectation that Japan will align to international standards or international frameworks, be they on the reporting side, assurance side, and ethics and independence. We were informed that in Japan, the Japanese Sustainability Reporting Standards Board has just recently issued an exposure draft of the reporting standards aligned to IESBA S1 and S2 standards. And the FSA is essentially tracking and monitoring the work of this board and IESBA as well very closely, with a view to potentially exposing or consulting on our proposals once our ESI is finalized. So very supportive there, and a lot of encouragement for the work that we're doing. Importantly, the point about profession agnostic standards, there was a lot of support there, but not a given necessarily, because in Japan, they have to go there for their national due process as well. So they will very much consult with stakeholders nationally on the approach to profession agnostic standards, but otherwise directionally, there was a lot of support there. So that's really just kind of a high-level messages that we took, but of course, there are a lot of detailed comments that we have received, which our task force and our work streams will consider as the regroup in smaller group meetings. Gabriel, anything to add? Okay, thank you. So Jeff, over to you.
Thank you, Ken. Good morning, everyone. Just want to give you a brief update on the Australian outreach, particularly focusing when we were looking at sustainability, particularly on IESBA. As you've heard yesterday, Gabriella and Jans, Paul, and Chana and myself, we had a 5-day, outreach series with a series of events back in May in Sydney and Melbourne. We conducted a number of seminars. These are perhaps different in nature to the ones that we did in Tokyo and Brussels. These are perhaps more presentations with panel discussions that were open to members of CANZ and CPA Australia in particular. And want to certainly thank CNZ and CPA Australia in hosting these events. So the first one was a breakfast event. We had maybe just about 150 participants. The second one was a virtual and also in-person event, and we had over 2,000 participants attending that event, which was a great outcome, I think, for CPA Australia and also for ourselves. Just having that opportunity to share with professional accountants what we are doing and really socializing with them the importance of ethics and importance of independence in sustainability assurance and sustainability reporting as well. And during the panel discussions, I think we were able to address questions on a series of things, including, really the ultimate aim and objectives of our standards, our connectivity and collaboration with IESA on IESA 5000 and with IESBA. There were a few questions on in terms of how it relates to non-PAs and how it's going to work with non-PAs as well. We also actually in Singapore back in April, you've heard yesterday from the firm culture discussions that Chana, myself, and of course Carla were in Singapore to conduct a series of firm culture stakeholder engagement meetings. But whilst we were there, the institute in Singapore, ISCA, also hosted a sustainability seminar similar to the ones we've had in Australia, and there were maybe 100 to 150 participants in the event. And interestingly, in the crowd, there were a bunch of lawyers there who are looking into registering as sustainability assurance practitioners. And the regulator there, ACRA, had been working quite closely with this group of non-PA practitioners, just trying to work with them how it's going to work with the proposed regulations and how in terms of how to upskill them, and they've been looking quite closely, and they were actually quite interested in certainly our strategic partnership with the IAF because it impacts that group of sustainability assurance practitioners, or the group of lawyers and any other non-PAs who are interested. So there were a few questions there on that. So back to Australia, whilst we're in Australia, we also had the opportunity to meet with some of the firms, both in Sydney and in Melbourne. So yesterday we heard that we talked about the firm culture, but as part of those two meetings, one in Sydney and one in Melbourne, we also talked about sustainability assurance, of course, and we had the opportunity to meet with some regulators as well. If I can turn to the next slide, please. Perhaps in terms of our meetings with the regulators, we met with the audit regulator there and the prudential regulator, and also the accounting standard setting boards, and also the audit and assurance standard setting boards in Australia, and also the Australia FRC as well. I would say from our meetings with them, we didn't really discuss technical points, but I think there's certainly general support for our work. And there's a view that in terms of sustainability, certainly global benchmarking is important and will be helpful for all practitioners across the globe. There was a comment that there were strong connections between some of our work and some of our projects, particularly with our tax planning work, projects, sustainability, and also firm culture. In terms of our meetings with firms, we had 2 meetings, one in Sydney, one in Melbourne, as I said just now. I would say that overall there was some really helpful and open and honest discussion with the firm representatives at these 2 meetings, and I think it really gave us a sense how they felt the pressure points are with our proposal. So from that angle, I think that they were really good discussions. Many of the comments, I would say, if you had a chance to read some of the comment letters, are fairly similar to what we've heard from the firms, and particularly from the bigger firms. Most of the comments, particularly relate to the operability of proposed requirements on value chain entities. And we've got some points there, for instance, on challenges in getting the right data, the constant changes in terms of who are the VCEs for an audit client, for sustainability client. There's some comments about there could be a lot of suppliers that are direct suppliers. There are some concerns about how the proposal might impact firms, including impact on the sustainability services, and what firms are expected to do in terms of monitoring the VCEs. And there are also some concern about how related entities in the sustainability assurance space would work. There's some, I guess, a suggestion whether we would consider a transition period, and also in terms of consideration of a post-implementation review sooner than later. So as we see, as we learn about the changes in the landscape, we might consider, instead of waiting 5 or 6 years, whether we would consider a post-implementation review a little bit sooner. There were also comments about potential overload of some of these new sustainability related standards, not just of course ours, but you also have IESBAs, and people are still working on the IESBAs. There's also, I would add, also in Australia, there's now a proposal in terms of the sustainability assurance standards, and what in Australia are doing is that the proposal is that for the auditors to also conduct a assurance on climate reports. So it's a slightly different approach to some of the other jurisdictions. And whilst we were in Singapore, I think some of the regulators are certainly watching with interest how that's going to pan out. I think they are the main points, but I would like to pass to Chana or Gabriella if they have any additional comments.
Agree with your comments, Jeff. I think the main sort of pushback, if I can say it that way, came on the value chain entities and the firm's concerns about how to operate it. So I think that's something that we'll have to look at closely, but otherwise I think there was general support.
Gabriella, is there anything you would like to add?
No, just probably just a more general comment about this outreach, not only about Australia, but about everything that we went through over the last months. I don't think that I need to say anything about what it meant for the IESBA, and I think that after these 3 months of outreach, we are in a different place, and it's really amazing and rewarding to see how everybody is starting to understand the value of ethics and discussing it, etc. And if it wasn't anything else, I think that just that will mean a step in the direction that we want to go. It's not only about the development of standards and the adoption of the standards, but also about the awareness that we are creating in that respect. And for that, first, I need to thank the staff for the amazing work that was done over the last months, and that it's probably not immediately visible, but this all takes an incredible amount of work in terms of preparation. All that was done in terms of preparing, I don't know how many presentations, I didn't count them, but the presentations that were made in Brussels, Tokyo, Singapore, Australia, Japan, etc., meant hours and hours and hours of work for our staff, all the preparations, but also those who joined me and even those who were in places where I wasn't, like in Singapore, took a lot of their time to dedicate to this. This is not travel for travel. This is really a lot of work, but I think that the result is very visible. Now, on the report back, it's also very important. And again, thank you to the staff for being able to provide these notes to the board, because it's not easy in so many conversations, thousands of stakeholders and etc., to be able to pick what is important. This is a very good work because it's what remains for us to work. But what impressed me the most, alongside the clear support for the proposal, which was very significant and strong everywhere we went, is that the topics for attention are consistent all over the place. Brussels, Tokyo, Australia, Singapore, etc. We were told the same about these are the topics where you have to focus and where we have concerns. And this is very valuable because, of course, we have the comment letters, which are extremely important. And from what we have seen, they are not different from what we have heard. So there is a lot of consistency, which helps us very much in finalizing these standards, because we will know exactly what are the concerns and suggestions of our stakeholders and where we will have to do a little bit more work. This is really, I think, rewarding to see where this board went with the work that we did and the way we were apparently able to provide a message to our stakeholders and receive the necessary feedback. So that's it. Everything that has been said is very comprehensive and focused on the most important topics.
Thank you, Gabriela. So I'm going to pass to John. There's a few more.
Sorry, Jeff. Of course, I need to add. It's so obvious that I was almost forgetting my gratitude to not only to the staff but for board members who were involved in these initiatives and others that were taking place at the same time, less visible but as important as these ones. And of course, those who behind the scenes prepared everything in their jurisdictions in Tokyo, Tomoyo, Masahiro, but also on the JFSA side, in Australia, in Belgium, everywhere, everyone who was involved, and we know how much work this involves. Our gratitude goes to these stakeholders. Thank you for making it possible. Without you, it would not have been. It would not have happened.
Thank you, Gabriela. So I'm going to pass it to John. We have a few more slides to present to you. Thank you.
Okay, thanks, Jeff. So I'll just give you a bit of an overview of the feedback from Toronto. So we had a number of meetings with regulators there, so the Office of Superintendent of Financial Institutions, the Canadian Public Accountability Board, and also the Ontario Securities Commission. We also had a series of meetings with CPA Canada, including with their Public Trust Committee when they oversee the ethics standards and also the Canadian self-regulatory process. And then on the final day, we held a seminar with CPA Canada's Sustainability Advisory Committee and also their Preparers Working Group. And in relation to Toronto, there was broad support for the IESBA proposals, including the profession agnostic approach and also having the standards at the same level as those for audit. A lot of the feedback in Canada was focused specifically on Canadian situation, sort of reinforced to us the complexity in Canada around the provinces and the different regulations across the different provinces. And a lot of the feedback actually was around sort of more around adoption implementation. So in Canada, there's no current regulation on mandatory sustainability assurance. And who can provide that assurance. There was one province where the legislation actually sets out that it has to be done by CPAs. There was also, concerns raised about who would actually be overlooking non-PA sustainability assurance practitioners. Again, as I mentioned, the provincial differences, that's creating complexities and possible fragmentation. And that will also impact the timeliness of implementation of a framework within Canada as well. An interesting point that was raised by one of the regulators was around the Big Four firms, that they actually started to build up capacity for sustainability assurance, but because these things haven't come through as quickly as they anticipated, they actually got an overcapacity, which is very different to what we've heard in other regions and countries. And then they've used that. That's resulted in them deploying those resources to other jurisdictions. Some of the other feedback, there was at the seminar we held, there was quite a bit of a discussion around a publicly disclosed aspect of the scoping for the international independent standards in the IESBA and whether it would capture the voluntary disclosures. There was support for the IESBA to address the groups, so definitely that came across. But again, there was that emphasis on ensuring that there is that coordination with the IESBA. A number of points raised around value chain entities, and to ensure that it doesn't create a disproportionate burden. Then the idea around that continuous assessment, because there's always going to be changes within the makeup of the value chain, and that will change over time. There was a suggestion around considering independence regarding the value chain entities on a sample basis. A lot of discussion too. There was a lot of support around the IAF and that work, but they did ask a lot of questions about how that would work in reality or in practice, in terms of how the IAF would ensure that the standards are complied with, those sorts of things. And but again, a lot about capacity building, especially for non-PAs, and coordinating with the IESBA and other standard setters. And they were the main points, but I'll just check whether Ken or Gabriella wanted to add anything there.
No, John, I think that's very, very, it's very comprehensive. I suppose maybe a broader point in relation to the assurance framework and the regulatory regime in Canada, as John mentioned. The situation in Canada is very complex because of the different provincial approaches to regulation, and that is creating complexity and friction in terms of the speed and the fluidity of the development of the framework in Canada. And even in relation to oversight, CPAB, who are it is the audit regulator. Currently, its mandate is limited to audit firms, and not even the individuals, because individuals come under the oversight of the provincial accounting bodies. So there's a big question there as to how the non-PAs will be overseen in Canada, and that is a question that's going to take a bit of time within that jurisdiction to work out.
Okay, we'll just pass you, Ken, now to go through IESBA and IFIA.
Yep. So if you could go to the next couple of slides, and I'll be quite brief here because we have shared some notes with the board previously. Gabriel and I had some meetings with IESBA Sustainability Task Force in Committee 1 in February of this year. Essentially, the main positive takeaway I would say is yes, the standards that this board is developing will be critical to the overall quality of sustainability information, sustainability disclosures, and that is how at least the regulators are saying it. A question there as to how to ensure auditors will be open to sharing information with non-PA sustainability assurance practitioners. And that's in the context of considering a potential sort of scenario that involves both auditors and non-auditors being involved in carrying out a sustainability assurance engagement, potentially in a group context, and the question is how to ensure that connectivity, if indeed the jurisdiction doesn't allow a free exchange of information. Value chain entities again came back as point of highlight there. A question as to they're not so much as to whether the board has gone too far, but whether the board has gone far enough, especially in relation considering the independence implications vis-a-vis the reporting firm when it comes to value chain entities, and whether the reason to believe or knows or has reason to believe principle is sufficient in and of itself. There was an acknowledgement as to whether the jurisdictional challenges relating to the licensing and related to that the oversight of the non-PAs as we mentioned in particular. And in jurisdictions that limit system practitioners to auditors, whether the regime addressing the use of experts will be adequate. Again, that's a matter that individual jurisdictions will have to work out. Next slide, please. We also had some meetings with the IFIA Standards Coordination Working Group. That was in April, and then in May, Gabriel was at the plenary session in Osaka with Tom Seidenstein of IESBA. So in terms of the key takeaways there, first of all, very positive support for the interactions this board has had with the International Accreditation Forum and the commitment that IAF has made to adopt the ESR once it is finalized. There was support also for the premise of the standards in the ESR being at the same level as those that apply to audits of financial statements, and that they apply equally to both auditors and non-auditors. There were some questions focused on the IF side, how IF will be equipped to basically oversee the conformity assessment bodies as they carry out the system assurance engagements and their compliance with the ESR, and also concern as to whether they will be capable of really fully applying and doing so on a consistent basis the proposals in the ESR. There were also concerns around the value chain entities, again, so no different there from what we've heard in other jurisdictions and in our interactions with our stakeholders. And there the emphasis was really on coordination with IESBA. And on the technical side, in the area of NOCLAR, this is a matter that will come back to the board. The proposal that went out in the exposure draft, as you well know, was a consideration of communicating NOCLAR to the auditor from the system assurance practitioner's perspective. And the question there was whether really that should be a strict requirement to communicate instead of a consideration to communicate. But as I said, this is a matter of detail that we come back to the board. Oh, well, in fact, later this session, I think Workstream Rexham too will raise this matter. Next slide, please. And I think that should cover the brief report back on the interactions with ISCO. And if you also, John, I don't know if it's you. Okay.
Yeah, thanks, Ken. Yeah, just a quick update. We presented an update to the Stakeholder Advisory Council at the end of April. And we sought specific feedback on a few things, so around whether there was support for the profession agnostic approach, for the IESA to be equivalent to the standards for audit, and also to get some feedback on potential around challenges for jurisdictional adoption of the IESA. So essentially, yeah, there was strong support for the profession agnostic approach, but there was a lot of discussion and noting their jurisdictional differences, especially around the voluntary versus mandatory sustainability reporting, whether jurisdictions will allow both PAs and non-PAs to provide the assurance, or whether it will just be PAs. And also some, again, concerns around the implementation, enforceability in terms of the timing and how that would work. Also strong support for the equivalence to the audit standards. Support for the work we're doing, but noting some of the challenges we're facing, especially around value chain entities. Again, there was some discussion around I guess the move towards integrated reporting in time, and whether there was different views approached or viewed around whether there's importance of sustainability information may surpass financial information in time. So there was just some general discussion around that. Around challenges for jurisdictional adoption, there were clearly some challenges that were considered and raised, and that relating to the difference in laws and regulations across jurisdictions, high need for capacity building, especially for non-PAs, and just some suggestions to assist the IESBA in terms of that stakeholder engagement, guidance, implementation material, and also leveraging off the SAC members. And we're obviously having a session tomorrow on the capacity building, so we'll go into that in a bit more detail. But I'll just pass now to Sylvia around the NSS meeting.
Thank you. So right after the SAC meeting, we have a meeting with the National Standard Setters Liaison Group in early May, where we have a session on sustainability. It wasn't an in-depth discussion, given that we didn't have the comment letters or the outcome. It was really that we provided a brief update on what we have heard during the outreach activities and asked input from the NSS. So it was really just a brief discussion. It doesn't represent the views of the specific NSS organizations that we will get back to that point during the analysis of the comment letters. But during the discussion, there was a couple of points raised regarding the capacity building that John mentioned and the support for IESBA's initiative and the intention to focus on capacity building, and especially the partnership with IAF. We believe that that could be a good avenue to address the concerns regarding the complexity and the implementation by the non-PAs. We had a discussion around the coordination with IEESB, and we specifically asked for their input on where are the areas where they believe further coordination would be necessary. And the comments we heard that there is need for alignment, especially, so this is just examples, especially regarding the approach and the definitions around with respect to groups and value chain. So they suggest that we focus the discussion around these areas. And there were a couple of comments regarding the non-assurance services and the appropriateness of the specific services in the subsections to section 600, whether they questioned whether all these services are relevant in the context of sustainability assurance engagement. And there were another topic around the NAS as well, is the question regarding the determination of related entities in the context of the sustainability assurance engagement. There were one NSS, we heard from one NSS that probably the threats and the relevance of related entities in the context of sustainability reporting is not the same that in the context of financial reporting. And they suggested that the task force and the board consider that point and consider the determination of the client and the involvement of the related entities. So this is something that came up in the comment letters as well, and we will discuss that within the task force. But the next topic that we would like to discuss is one of the focus of the today's agenda is the coordination with the IEESB. So as we have heard from IEESB in March, the public consultation of the proposed ISSA 5000 ended in December last year, and the board and we received a report back on the feedback from these comment letters. As it was mentioned, the IEESB scheduled the approval of the draft ISSA or on ISSA 5000 in September this year. Given this timeline, there is an emphasis on this coordination and to identify and agree on the key coordination point before this September date. So therefore, at the staff level, so staff participating in the sustainability, we formed a coordination working group. And really the objective of this working group is to identify and develop proposals regarding this coordination matter to those boards. So we meet on a regular basis to really help the coordination efforts to the best we can. And based on this discussion on these topics, both boards will have, so IESBA and IEESB as well, will have a coordination session on their June agenda meeting. This is really important for many reasons. One of them is because in July, mid-July, Gabriela and Tom and the task force chairs and the staff will have a meeting on these coordination issues to really discuss and agree on these matters based on the two boards discussion and the input we have received from you and from IEESB during this June meeting. So I wouldn't even go into further details because we will get back to that later on when we are discussing the coordination. So I would just turn to Laura.
Thank you. So just going very briefly into the responses that we got from the exposure draft, we have received a total of 88 comment letters so far. We are expecting an additional response from the UN Trade and Development from the African region. So we have a fair diversity of stakeholders in terms of the respondents. We've received responses from regulators and investors, preparers, academia, while the majority of the responses came from the accountancy profession. As you can see from this table, we have separated the number of respondents between individual stakeholders and umbrella organizations. What we mean by umbrella organizations, it's basically international or regional stakeholders with a broader reach or representation. And who are we talking about specifically? So in terms of the regulators and oversight authorities, these umbrella organizations are the CEAOB, IESBA, IOSCO, and IFIAR. In terms of the public sector organizations, we are talking about the UN Trade and Development, the UNCTAD, the Latin America Regional Alliance. In terms of the professional accountancy organizations, we are talking about Accountancy Europe, the Global Accounting Alliance, IFAC, and the Pan-African Federation of Accountants. In terms of the other assurance providers and accreditation bodies, we are talking about the IAF, the International Accreditation Forum. And finally, the two under the other categories, they are both these umbrella organizations, and they are the International Bar Association and the Institutes of Internal Auditors. In terms of regional representation, we also have a fairly representative feedback from this perspective. Also noting that Latin America, even though the number is 5, it includes the response from the Latin America Regional Alliance of UNCTAD, and this represents 15 jurisdictions.
Thank you. So these were the numbers on the comment letters, and we also prepared a slide on the summary of the key themes from these comment letters. Obviously, it's 88 long letters with 26 questions, so we didn't have time to go through all the comments and prepare an detailed analysis. However, we just wanted to provide you an overview that what were the key topics that we have identified from reading through these comment letters without this intent to be an analysis. And I think the issues we have seen is no surprise, that the same issues that came out during the outreach activities as well. And the feedback is fairly similar. That in the comment letters, there was a broad support for the global ethics and independence baseline and the main characteristics and attributes of the standards. Namely, there was a support for part 5 to have a standalone part 5 within the code. There was a support that the audit and sustainability assurance standards should be equivalent, so for equivalency as well, and also support for creating a level playing field and to aim for a profession agnostic approach, that the same rules should apply for those who are providing the service, irrespective their background and the profession. However, regarding the profession agnostic approach, there were some concerns about the complexity, or I would just say the perceived complexity from the stakeholders. And there were a lot of suggestion for including guidance. So they understand the proposals, but there were just the concerns around how the implementation and how the non-PAs mainly understand. But interestingly, as Marcus mentioned, these comments came from the PAO organization and the PAOs, not from the non-PAs organizations. There were also some concerns about the lack of current enforcement regime for the non-PAs. There were comments on and requests for further coordination with IESB regarding the definitions and the approach to the groups. So I would say there was support for addressing the groups, but it was pointed out that further coordination will be necessary, and that's what we are going to discuss during this session. There were a couple of questions and concerns regarding the complexity and the practicality of the proposals regarding the value chain. From the comment letters, there were some points that this is a developing area, and we need to be principle-based, and we need to provide a practical approach regarding the value chain. That's something that we also agreed on and emphasized while we were developing the ED. And I think the concerns regarding the value chain came mainly regarding the perception that the proposals might create a barrier to providing sustainability-related services in the future, if given the current proposals. And also we got comments and questions regarding the approach, the proportion of the fees. And I think the questions were around the providing further explanation regarding the conflict of interest that we explained in the EM. And I think the main point was that the proposal shouldn't provide a barrier or shouldn't have unintended consequences in the future or to hinder the integrated reporting. So this is the areas, and the task force and the work stream will discuss the specific comments. So the 2-day session, we wanted to focus on the elements that really requires coordination with IEESB, and also we will bring an of other matters that where we believe, or the task force believe, that the board's preliminary input would be useful or would be beneficial for the further discussion. So it's not the intent to discuss these matters, that's what we are going to do in September, but really to get your input on the matters that we believe it's necessary at this stage as well. So I would just turn to Laura for the last topic, that's the timeline.
Thank you, Sylvia. So just to get back to this calendar, we are basically in the middle of our timeline here, and the target remains the end of this year for the approval of the final standards. So nothing has changed so far. And I would pause here for any additional comments or questions from the board.
Thank you very much, all of you, for this comprehensive presentation and information provided to the board. It was extensive and long, but I think it was absolutely necessary to provide you with a full information about what's going on between board meetings and what it means in terms of the feedback received for the finalization of the standards. I would have some comments, but I think that we are running late, so I hope that they will appear during the conversations. Andy?
Yeah, thanks for the comprehensive presentation. I heard during many of the outreaches that there were non-PA assurance providers. Is it possible to please provide the board with a list by location of those non-PA assurance providers? I mean, I see who responded to the letters and that doesn't line up, so I'd just appreciate more information on that, please.
Absolutely. So our all the comment letters are publicly available on the website.
I wasn't referring to the comment letters. I was referring to the non-PA practitioners who showed up in one of the seminars, who provided some of the feedback that formed the basis of some of your presentation to the board. I would, at least I would be. It would value me if it would be a value to me if I could know who those other ones were, please.
Yes, in fact, the slides contain a flavor of the level of participation and the diversity of participants from the non-PA side. So if you were to flip through, you'll see some of these organizations that attended some of the seminars.
Okay, Rania, please.
Just a very a quick comment. Just want to say that I can appreciate why the concern about the application or the implementation by non-PAs would come from the PAs. I think it's more about a concern that perhaps non-PAs might not really appreciate the nuances and the details in the code. And especially if you relate that to one of the comments in the, I think the Toronto outreach, that, I mean, who's going to oversee the implementation by non-PAs? I think it's an issue of leveling the playing field. So just.
Okay. Yes, but if I may just to react to this or provide some additional insights. Yes, there were questions about everywhere, I would say, about implementation and monitoring and etc. But as you know, this is something that the regulators will have to solve, not us. The IESBA is not saying, I've said that 100 times, but I'll say it again. The IESBA is not telling the jurisdictions that they have to accept non-PAs. What we are saying is that if you want to accept them, here is the product that you need to provide that level playing field, public interest objective, etc. So we are neutral with respect to what the jurisdictions do. Now, the oversight, monitoring, etc. This is not for the IESBA to tell PAs or non-PAs or whoever how this is going to work, also because this is going to work differently from jurisdiction to jurisdictions. What I may say is that I don't believe that in any jurisdictions, policymakers, decision makers, legislators will make a decision to allow the PAs to come in without having made a decision about how to monitor, how to supervise, and etc. Thirdly, the perception that I got, and this is a very personal perception, but I will share it with the board, from the conversations that we have been having with them, is that probably the future, we don't know how the market will evolve. The non-PAs who will be there providing sustainability assurance when and where they are allowed will be the bigger ones and the most sophisticated ones. We don't know. This is just a guess. But what I can tell you is that, and I think it's important to tell you this, that the level of sophistication that we found and that we met in some of them is really significant. We are not speaking about people who don't know what they are doing, and the work that has been developed with the IESBA with this objective of having a common standard for non-PAs and PAs in terms of sustainability assurance, and I think that Ken and John can confirm this, made us get respect for who they are and how they do things, because some of them are really sophisticated. So we should not just think that because they are non-professional accountants, they will not be able to adopt, implement, understand. Of course, there will be an additional effort to be made because they will work in a system, an ecosystem, which is a little bit strange for them, and that's why, of course, they will need help. But that doesn't mean that by design and by definition, they will be struggling to adopt these standards. Of course, there will be cases, and they will need help, and we will need to help. But
definitely, I agree, and I hear everything you're saying. my point is that I can understand that the concern would come from the PA community because they feel that, I mean, because of the code and all the intricacies in the code and the complexities, I mean, you would wonder how come they are so comfortable to just take it on and, roll with it, as they say. So yeah, that's it. So
if I may just add something, this request for help or support or guidance or whatever that the non-professional accountants are conveying to the IESBA is not very different from the message that we are receiving in many places from PAs. It's just that we are highlighting that probably more because it's a new space and these are new stakeholders. Non-PAs, just like PAs, will need guidance, will need to make an effort, and we have a session this week about that, about capacity building, implementation, etc. That's going to be a very significant area of effort. Doesn't mean that we don't have to make it a little bit different from ones and the others, but this is also truth for PAs. In many areas, they are like being conditional. We may be able to adopt your standards if you help us with understanding, creating capacity, and etc. So the differences are not that significant. It's just that, of course, it's a new group of stakeholders, it's a new space, and you need to provide a little bit more attention to this to make sure that we get it right. Sorry, Paul, please.
Thanks so much. I think strong commendations to the team for the extensive work that was done. Maybe an inquiry, because to your point, Gabriella, it's evident just how sophisticated and deep the pools of people we're engaging with are. But how do we plan for almost the engagement with those who are not as sophisticated? That is there any risk that the pools of conversations we're having are almost speaking to those at an equivalent level of development complexity as us? But once the standards are rolled out, there's a whole spectrum of the world that will need to apply them and be bound by them. And I can only imagine it's very hard to speak to those who are not speaking to you. When you ask for feedback, if they're not giving feedback, it's very hard to engage. But how do we almost go to that layer below who don't necessarily have the bandwidth to engage with us in these processes, but absolutely are almost potentially the majority who are going to have to deal with these realities when we roll it out? Just inquiry. Thank you.
Paul, this is a very important question, and I think that I will bring it to the session on capacity building implementation, but just not to leave it without any response. It's really important, and we will need the help, your help, to understand how to do it. We'll have to be very smart, but we can definitely and absolutely not leave this lower level, as you say. I would not call it that. It's all the others who will be wanting to adopt the standards and use them. We need to be able to reach them directly or indirectly, most probably, because we can't be everywhere. But please. I will coach you in the session on capacity building implementation, and because this is really what we need to focus after. Thank you for that comment. Laurie, please.
Yeah, just briefly, and I sort of wanted to reiterate, I think the importance of something you just said about the application to non-PAs, because as I read through comment letters, both for sustainability and frankly for experts, because we get picked up in a very tiny section of your overall plan, that we're not saying we have that it has to be accepted. That depends upon the jurisdiction picking up that. And first, I would say it points back to, I think, ultimately a very wise decision to have this in a separate section, right? So that it was portable and territories could make that decision without causing problems with code adoption. I know, and I just wanted to point that out because it becomes very apparent that the code remains as the code, and this section will have to go through a process of being adopted, et cetera. But I did see a lot of confusion in that point in both the sustainability comments and gets picked up in the expert comments as well. So I do think we need to keep working on that, because I actually think now on looking at that, I hadn't really anticipated this playing out that way, but it was a really good choice as you went through and did that. So kudos to the board and to the in particular to the team.
Thank you very much, Laurie. Sorry, Yohei?
Thank you, Chair. So, firstly, I really appreciate the comprehensive overview for the ED feedback. And I understand that there is very limited time, but I'd like to comment here that in order to appropriately identify the important issues based on the comment for EDs, I think preliminary overview of the comments on sustainability ED containing the percentage of the positive and negative comments should be provided as soon as possible to the board in order to identify, like those provided by task force expert in Agenda 7A. So in addition to the so I think it's important to identify key strategic issues to be discussed by the board. Thank you.
Thank you very much, Yohei. Well, I think that there is no one else. Tom, I don't know if you want to say anything, but I suppose that's not yet, but feel free.
Oh, thank you. I will talk about it a little later, but this is I would like to reiterate the comments of as you said, that's the importance of the coordination, and at the same time that because of the timeline, as this morning we've gotten additional comments from IESBA, so we need a very close communication, and I think that's the July meeting of the chair of the board is very, very important, and as was suggested that before the September meeting, there needs some sort of the coordination of perhaps the sharing the detailed information among the board members before the September meeting might be very, how can I say, important, because I understand that the pressure of the timeline, but it's very difficult for the task force to formulate the September meeting, but at the same time, that the September meeting is crucial. So it means that between July meeting and September meeting, need some sort of the very closely communication, and the detailed sharing of the information among board members is very important. Thank you.
Okay, thank you very much, Tom. Of course, we are doing our best, and outside in some circumstances, more than our best to meet those expectations. Of course, we will do everything that we need to do, and of course, also respecting the due process and the board's opportunities to have a say on everything that we will be doing in that respect. Thank you for conveying this additional message from IESBA. And with this, well, I'll have a lot of additional comments on what has been presented, but I don't dare taking more time. We are 20 minutes late, so I hope that I will be able to provide some of those comments along the conversations that we will have. And I would call Vili and Dan to the table. And I think that Josephine is online, right? So while you get your seats, Dan and Vili, and in the interest of time, I will start introducing you and the reason why you are here, and Josephine as well online. Good morning, Josephine, or good afternoon in your case. So we are being joined by Vili Botov, who is the Senior and Program Director from IESB, then Montgomery, consultant to the IESB involved and responsible also for the sustainability project, and Josephine Jackson, who is the IESB Vice Chair and the Chair of the Sustainability Task Force. Very welcome, and let's do the best out of this session. The objective of this session, as I had said before, is to analyze some comments that resulted from our exposure draft already identified and with some proposals from the staff, but also in coordination with IESB. IESB has consulted earlier than we did. They got their feedback. They got some feedback on some areas which initially were not identified because they were not in the proposal as areas for needed coordination. So it came after the consultation that IESB ran. And we are now, as Tom from PIOB was saying, needing to coordinate a few things in these proposals so that at the end we will have a result which works effectively for the usefulness and the effectiveness of both proposals as if they were one proposal only. So the efforts that that we are all doing in that respect are evident, are obvious. So the IESBA staff and the IESBA task force is working in both advancing the analysis of the comments and our own ghosts in terms of what comes out from the consultation and what we still need to do, and the coordination topics. And IESB is also very much busy with these coordination topics. So we have a few things identified for this session, and for that I would give the floor to Sylvia, yes, who is starting to present on those topics identified in the analysis of the letters, but also in the conversations between the two boards. Sylvia, please.
Thank you. Before I just turn to IESB, I just wanted to provide an overview of the approach to today's session that you can see on the slide. So first, we will talk about the coordination matters with IESB. We will receive the presentation from both the IESB Sustainability Task Force representatives and the IESBA Sustainability Task Force, so we can discuss these issues jointly. And you can see the list of the matters that we are going to present to you today. And after that, probably way before after lunchtime, we will also have a session to discuss a couple of other matters that we have identified during the outreach activities and from the comment letters that are not related to the coordination, but we would like to get your input. So without further ado, I will just turn to IESB for the matters for coordination.
Good. Thank you, Sylvia, and thank you, Gabriela, for the opportunity to participate in the meeting today. I think this is part of the coordination efforts that we want to give a lot of visibility to in terms of making sure that we are coordinated in this sort of home stretch that we are going into now, and also in the lead up to the additional coordination that we are planning for the July that I also heard that you spoke about earlier. So I think the slides were shared with you beforehand. We've just now layered in the slides from our side. So I think there's about 4 specific topics that we want to talk about, and Dan and I will handle them in turn. And Josephine, as the task force chair, is online, and she will come in as necessary. So I think, Sylvia, if you can go to the next slide. So I think the first topic that we wanted to discuss was the definition of sustainability, this definition of sustainability information. And I think, you know, the one thing that we certainly can see
sorry, this is a topic that Dan and Claire also updated you on in March, but we've obviously progressed a little bit with this now since the March meeting. But I think if you also look at the board papers that were posted both for the ethics board as well as for our board next week, I think we recognize that the journey on this is not complete, and there's certainly more to be done post-June. But we also appreciate the fact that this week is IESBA's first opportunity to look at the feedback that you've received on your ED and to consider the recommendations from the task force. So in that context, if we can go to the next slide, I'll just give you a quick update of where we are at the moment. So just at a high level, on our exposure draft ED 5000, we did hear, and I'm going to start with the last bullet there on the left-hand side, we did hear strong support for the clarity of the relationship in our standard between sustainability information, sustainability matters, and disclosures. There obviously were a few suggestions for improvements, and we've tried to do that now as we've progressed since exposure draft. We also heard from our stakeholders that our reference to economic matters and cultural matters in the definition of sustainability matters was confusing, and they would much prefer that we stick to the ESG term that is relevant, that is well known across the world. In that regard, they were also therefore encouraging us to refer specifically to governance matters, which we did not have upfront in the definition. It was sort of a bit lower down in some of the bullet points. So basically what we've done is we've reverted to referring to sustainability matters as environmental, social, and governance matters. We've also separated out the impacts so that it is clear that sustainability matters, when you look at the impacts that are addressed by sustainability matters, it is in both directions. It is both in terms of the impacts on the entity's strategy, business model, or performance, as well as about the impact of the entity's activities, products, or services on the environment, society, or the economy. At the March meeting, the task force did actually present to the board a more concise version of a definition, a more type of core description. But at that time, our board did say that they preferred the more detailed description. They preferred that, and so we've continued along those lines. We have also decided now in the papers that were posted for June to reinstate the simple sentence that we had when you describe sustainability information, and that is sustainability information is information about sustainability matters. It's clear, it's concise, it's straightforward, and it also goes back to some of our underlying concepts. And then in the definition now for sustainability matters, we have included a reference to the criteria, because the board and the task force did feel that it is important to highlight that the matters that you will be dealing with during your engagement are the matters as identified or described in the reporting framework or in the criteria. So on the next slide, you have the definitions as they are in the papers that we've posted for our board meeting next week. You will see that in these two definitions, we've shaded some text in gray. And that shading in gray is really just to indicate that that is text that we believe we need in our standard for our purposes. And I think as we've been considering these definitions and continue working with them even after the board papers have been posted, I think we recognize that each board, ethics and the IESB, each board requires a definition to fulfill a particular function in its standards, to work in its context in accordance with the aims of its requirements. And therefore, you know, what we try to reflect here is there's a core description, and that core description is sustainability information is information about sustainability matters. Sustainability matters are environmental, social, and governance matters, and then a description of the impacts. And I think we would probably revisit and based on the board feedback next week, there's probably value in again looking at a type of a core description before we add what we need for our standards. So there's the core description, and for purposes of the ISAs, we do need to say that subject matter sustainability information results from measuring or evaluating the sustainability matters against the criteria. We do need to say it's the equivalent of subject matter information in our other standards. We do need to say that not necessarily all the sustainability information is subject to the assurance engagement, but that's stuff we need to put in on our side for purposes of the ISAs. So, Sylvia, I'm going to pause there. I think the next section is that you're going to update your board on your work on this.
Okay, thank you very much, Vili. So in that case, I think that we should just see if there are immediate comments from the board, or no, if not. Okay, so Sylvia, is that, or Mark? Christelle? Sorry. Oh, sorry, Hector.
No, I'd suggest we take questions after we've had a chance to hear from the IESBA side.
Okay. So Christelle, please.
Okay. So workstream 2 discussed the revised IEESB proposed definition late in May, very late in May. And so the coming slides are based only on IESA BD preliminary feedback and do not represent a final proposition concluding full coordination efforts, right? Both boards are committed to achieve an aligned and clear set of definitions, avoiding misinterpretations. However, we are now in a very narrow tunnel with time stress, given the objective of IEESB to issue after their September board, so it's almost tomorrow. So our July meeting is a very important opportunity to overcome, I would call that last unintended divergence, if any, right? So just as a reminder, this is the definition that was included in the exposure draft. And based on a sample of responses that I think it's around a third of the total responses, we noted that there is an overall comment that we should maintain coordination. It's a very important point, thus discussing that the first point today. There is also a general support for our proposal with some interesting suggestions. We are going to present in a slightly revised version today. Main ones are swapping the letters A and B of our definitions, meaning put first what is required by law, regulations, frameworks. And then if you are in a situation where you do not have such definitions, then this is what we mean by sustainability information, which was acceptable to our working group. Second general comment or suggestion was to use different terms. If IESBA and IEESB are using different definitions to avoid confusion or inconsistent application. Some minority positions expressed no support because of the definition being too broad. At this stage, only one answer. And some suggested to adhere directly to IEESB definitions. I don't know which one, those from the exposure draft or those from now. And so Workstream 2 explored two options involving creating a new definition of sustainability matters and aligning the wording with IEESB definitions. So our conclusion, preliminary proposal, is to retain the exposure draft proposal subject to slight adjustments at this stage. We feel that there is an appropriate alignment with the ISA 5000 definition achieved when we say that in our definition that their assurance framework where we call for the relevant assurance framework in paragraph B that already covers, without saying it literally, it covers the assurance framework of ISA 5000. There would be a possibility to add an application material explicitly saying that ISA 5000 definitions are encompassed in IESBA definition. So you will see in our proposition, there is an addition in red for your thoughts and comments. Since we feel the alignment is achieved in substance, the reasons for retaining and not adopting ISA 5000 construct and definitions fully, may I remind you that the assurance and reporting framework neutrality is foundational to all our work. That IESBA's draft definition uses simple, profession agnostic language and encompasses all realities that ISA 5000 describes in 4 technical definitions. And that all these being strong attributes to address the PIF characteristics. And I remind you that IESBA covers the needs for reporting and assurance, and not only assurance, which may make it necessary for us to have a wording that covers the whole code. So our proposition is the following. Swap A and B. So the first would be information defined by law, regulation, or the relevant reporting or assurance framework as sustainability information or equivalent terms or descriptions. B, if it is not defined, then it should be understood as information about the opportunities, risks, and impacts of economic, environmental, social governance, or other sustainability factors on an entity's activities, services, or products, or an entity's activities, services, or products on the economy, the environment, or the public. The wording of this new B should be revised after a full read of our comment letters and the coordination in July. Okay, so this is just the way forward that we propose. If need be, we could add, for sake of total clarity, this red sentence. An example of sustainability information for the purposes of the code is sustainability information as defined in ISA 5000. And then we would maintain the second part of our definition, which is illustrative of all the different kinds of situations we might encounter as examples to illustrate our definition. And it's not changed because we have not yet identified any comments asking for change on that part. So, as Gabriela and Ken asked, now what if we have board members having questions or expressing preliminary support to what we are proposing and eventually comments on the way forward? Welcome.
Oh, thank you very much, Vili, first, and Christelle for your presentations. And I really think that we are now in a position to have the first exchange of views of what is on the table. The slide asks, do IESBA members support these proposals? But of course, we are open and interested in also knowing the IESB perspectives and possible suggestions that you may have. So Mark, I think you were the first, please.
Thank you. So I can be accused of going rogue and being a slightly tawdry pragmatist, but I think we look very odd to stakeholders if we're adhering to a position of having different definitions to what people ostensibly think is the same thing. So the outcome, to my mind, of the coordination meeting on the 20th is for both boards to walk away from that with common terminology and common language wherever possible. And therefore, I sort of almost see the question to this board being slightly different, which is, do we actually say in going into that meeting, the mandate from this board is be as close and consistent as possible? Because otherwise, I just don't see that position, and any other position, is not really defensible. And we are working with a different group of stakeholders, a broader group of stakeholders, and therefore I think we've got to take a fairly pragmatic line. There has to be a very high bar to not have the same terminology. Now, the purpose of the meeting on the 20th might be to say, having had a mandate from both boards, what is that final definition? But we have to walk away with one final definition, not two. So, I think wherever we can, that definition should be as simple and as clear and as straightforward and as unambiguous as possible. But I don't think any sort of academic discussion about the rights and wrongs of maintaining that doesn't work. We just look daft. And I think the very clear steer from groups like IOSCO, IFIAR, some of the other stakeholders we've engaged with, there's sort of quite a big nudge there to say, hang on, guys, it should be the same. So therefore, my preference would be to seek this board's views about going forward on a single, consistent definition that both the IAASB and IESBA can use.
Thank you, Mark. That was very helpful. Luigi, please.
Thank you, Gabriela. And I agree with what Mark said. I think that the purpose of this coordination would be to arrive at one definition that could be used by both documents. If there are compelling reasons to have customization, like the shaded wording that we were provided before, or other reasons, because the definition is also relevant for reporting purposes, this should be an add-on to the common definition. But I really would struggle in explaining to our stakeholder why we were not able to find a solution and to adopt one single definition with the customization needed in order for this definition to work in the document they are included in. There could be another option, but it is, my view, the less optimal, and I would not recommend it. But the option could be not to highlight the definition of IAASB as an example, but the definition to be used in case an assurance service provider will use IAASB document. So it is the only one, not an example, in this specific situation, which is pretty the same result of having one single definition.
Thank you very much, Luigi. Sadia, please.
So it's easy to agree with the solution of having one definition. Coordination is in both our board's interest. However, I'm finding it difficult with the timelines proposed, because at the July meeting, there would be a decision made, and hopefully it is one that's coordinated, but there wouldn't be time for the IESBA board to have a consideration of what that definition is and whether it still works within the remit of our code. I remember a discussion about whether this definition works within part 2 of the code, which is non-audit related. And then we need to think back to, does it cater for all purposes, not just for audit?
Thank you very much, Sadia. Hector, please.
Thank you. I completely agree that we should try to go with a simple, same definition. I understand that there may be requirements for boards to have add-ons or specific differences, in which case I think the key is not to use the same word for the definition. So we shouldn't be calling sustainability information and using 2 different definitions. If possible, we should be using a different term. And I'm reading in your great text, you talk about subject matter information. So you could talk about, that's just an idea. I'm not telling you what to do. I have no clue about the ISAs, please. But you could be referring to sustainability matter information, subject matter information for sustainability, and use the technical aspects that you need. And we keep the other definition similar or equivalent.
Thank you very much, Hector. Paul, please.
I think first and foremost, it's to affirm the concurrence that we need a single definition. And if anything, to my earlier point, if we're already frankly struggling to bring convergence, cohesion, and multiple voices around these realities, if we have more than one definition, it'll be 10 times worse than we already are in. So we need to double down, make that possible. Thanks.
Thank you, Paul. David, please.
Thank you, Chair. So I agree wholeheartedly with what's been said by Mark, Luigi, and fellow board members. I think it's really important that we go with a common definition and we keep that definition as accessible and don't over-engineer it and make it complicated, because as soon as we start adding words to tweak here and there, I can tell you in practice, practitioners get very confused, then we see inconsistency and we see application problems. What I would say is when we think about sustainability information, it's a broad definition. Assurance is a subset to that. And I think it's important that we recognize that it's a subset, and it's basically just some of the information gets assured, the rest of it doesn't. So I think, you know, in that spirit, I think that's really important. And I would echo what Paul has said. I think when it comes to, and I think Gabriella, you alluded to it a little bit earlier with capability, you know, imagine trying to explain to individuals who are well experienced in these processes, but others who are new to the process, and trying to explain why we've come up with a definition that's complicated or over-engineered, and then different people with different languages have different understandings. So hopefully I've echoed a little bit what my peers have said, and I agree with Sadia as well. I think some appropriate time for due diligence, debate, and reflection is important so that we don't have unintended consequences that we might not be thinking about in this immediate moment. Thank you.
Thank you very much, David. Amajit, please.
Yeah, thank you, Chair. So I have one general comment and a couple of specific comments. So general comment is that definitely it would be helpful to have a common definition, common language. It would help. But just one flag there, as I note that IESBA standards encompass not just the assurance, but also reporting. So we should not leave that objective while we fine-tune the definition. So that is a general comment, and I'm not sure if it's the right time to give some specific comments. Nonetheless, so in terms of swapping B with A, I'm not very sure why we should do that. The rationale for that has not been explained, and I think the earlier A, I mean the original A, is what IESBA has worked on, and I think I would give primacy to that rather than just giving a general reference to the local laws, which is in B. So that is one. Secondly, again on the specific definition, can we include the word in B1, I mean in the revised B1, information about opportunities, risks, or impacts of economic, environmental, social, etc., on an entity's activities, services, or products. Perhaps I would like to see the addition of word performance as well. Performance, entities, activities, services, or products, and performance. I guess that would bring in more consistency with IAASB's definition. And also, if we can, that's a minor one, if you want to substitute the word public in B2 by society, it's just optics. It doesn't really change anything. So, but again, it brings a little more consistency with the IAASB's definition.
Okay, thank you very much, Amarjit. Rich, please.
Thank you. First of all, I want to acknowledge that I recognize that we have somewhat different objectives, and that, as Willie referenced and what Claire and Dan spent time with us earlier on, the IAASB has to get this to fit in the assurance model, their definitions. At the same time, we're looking at something that is designed to be reporting framework agnostic, to encompass, to actually be assurance framework agnostic, but I'm not sure there's going to be many other frameworks that from assurance other than the IAASB. But we also have to address engagements that don't have anything to do with assurance, but do have to do with sustainability. And so maybe, and so I fully understood where we were going into the respective EDs coming out, but it appears that, you know, many stakeholders just don't comprehend the differences between the objectives of the auditing standards and the objectives of IESBA. So what I've been thinking about is perhaps we could figure out what word we want to use for the base raw material, right? That would be what we need to consider all-inclusive, encompassing non-assurance engagements, and then have a word, the words, and I think it might have to be more than one definition, that then says, this is what happens when you apply the criteria in an assurance engagement. And so somewhat to Hector's point, it might be about just the word we're defining, not necessarily what we said in each of the definitions. So I do appreciate that the collaboration had occurred, and I want people to know that it was robust at the time. And I don't think any of us foresaw kind of the broad reaction that said, I don't understand why it's not the same. The only other thing I would add is perhaps we could work on this in the very near term before whatever the big meeting in July is, and get this worked out so that we can, to Sadia's point, maybe share electronically what things are looking back at for each of the boards to react to. So thank you.
Thank you very much, Rich. I think this is an evolving discussion, but I'll conclude or try to wrap up after everybody has spoken. Andy, please.
Thank you, Chair. Yeah, I guess I'll also just express that while I have comments, I won't give them now because I am signing up to what Mark started it off with, that I think we ought to have a common definition, and maybe it's a little bit as further added by Rich right now about the base raw material aspect of it, as Hector described, that perhaps there is some engagement specific like financial statements, and then you maybe have subject matter, in terms of the financial world. But I mean, I think there is the avenue for a base raw material, that it seems a little silly to have a different definition of to at least to describe the topic matter. But I also would sign up with what Sadia says, that if we're going to go with a single definition, it needs to be we maybe just need to take on a responsibility to have outreach in between this, so that we could get that behind us, so that then we don't diverge after July and September with that understanding. But I'm responding very favorably to a common definition.
Thank you very much, Andy. Yohei?
Thank you, Chair. So the one point I would like to make here is, yeah, I'm very much resonant for the one single definition, and same as a comment from IOSCO shared by Ken yesterday. The consistency of definitions and terms and key concepts is essential to promote interoperability, to ensure consistency in practice, and to avoid confusion. It's very important for the stakeholders' high expectations. And so concerning the high expectation for stakeholders, I think it will be important, or it will be helpful to have the discussions with the key stakeholders before the ISSA 5000 is finalized. Yes, thank you.
Thank you very much, Yohei. Chana, please.
So when this sustainability information definition was developed, I think we looked at various reporting frameworks as well, right? So there is, we have to keep in mind that when you look at, even if you look at the PA community, you know, the majority are non-auditors, right? There's reporting accountants. I mean, in Australia, if you take it, only 7% auditors and 93% is on the other part. So we need something that they understand as well. And this definition that was in the ED is more like it's easier to communicate. We have looked at different reporting frameworks. So I'm signing up to what Rich sort of said, let's have a base thing, and then you add the assurance part at the bottom, but people can understand the top part.
Thank you very much, Chana. And finally, David, do you want to speak again? Sorry. Tom, please.
Thank you very much. I would like to emphasize the point of the POB. You can see that the public interest issue. At the same time, that I'd like to emphasize the importance of the word that Mark mentioned, the mandate. I mean, that the July meeting is very important. And then the point is that the giving the mandate to the chair of the SSB and chair of the task force to formulate the common definition, then come back to each board if they need some sort of the very exceptional additional note. That's sort of the starting from the different standpoint and getting to the closer, not that way of thinking, but the setting up the common single standard. Then each SSB can evaluate if there some sort of a needs for the exceptional diversion, limited diversion, maybe a better way of dealing with this issue. In that perspective, I think that's the mandate to the chair is very important. Thank you.
Thank you, Tom. Ken, please.
Thank you, Gabriela. I think really when we are going to be working on trying to find a way forward on what should be the aligned definitions, really the rubber is going to need to hit the road in terms of the wording that we have. So as I look at the definition that we have on the screen, first of all, I think we need to understand the context in which we are referring to sustainability information as in information defined by law or regulation. I'm leaving aside the reference to assurance framework, which essentially is a reference to assurance standards. But what is the context for IESBA to be referring to sustainability information defined by law or regulation? And clearly there's a broader context when it comes to the ethics and independent standards versus the same term when it's used in the context of assurance. And we understand that on the IESBA side, the focus is really on the information that is subject to assurance. So there isn't necessarily need to refer more broadly to information that might be defined by law or regulation. So I think it's important to understand what is really the context, or what is the trigger for making a reference to law or regulation. And if that's in the context of sustainability reporting, might this be let's say, an add-on to what would be the core baseline. The idea of a baseline, a common baseline, is resonates with me. And I think if we are able to identify what might be the add-on from the perspective of the ethics and independent standards, I think that might really help us. So just to essentially not disagree with what I perceive to be the direction of travel from the discussion here, which is let's try to identify a common core, but let's also be clear as to what the add-ons might be from the perspective of both boards, and what the add-on is for IESBA's purposes is what really we have to work on. And I don't have an answer right off the bat here. But Sylvia, if you could just move on to the previous slide, or whoever is holding the clicker. I just had a question on the IEESB's wording, or maybe the one before. Yeah, the shaded, so the IEESB proposal. Yes, so just in relation to the proposed definition for sustainability matters, there is a reference in the second sentence to criteria. And that might be a bit of a challenge if we were to try to align to this, or at least attempt to align to this proposed drafting, because the concept of criteria is not per se defined in the code when it comes to sustainability reporting assurance, and therefore I have a question as to whether on the IEESB side there might be a possibility of considering some more general, or some more, let's say, non-technical terminology, perhaps reporting framework, for example, and whether that might work from your perspective. Again, not trying to come up with a solution here, but I'm just sharing a reaction as I read this wording and trying to understand how we might seek alignment if we are going to try to come up with a common core. So that's where I would leave it. Thank you.
Thank you, Ken. Laura, please.
Yes, thank you. I would just like to make some maybe two clarifications. Maybe starting with the last one that Ken mentioned, the fact that the sustainability matters in the IEESB definition mentions criteria. That would actually be because sustainability matters the raw information that is collected from various sources by the company, and then some of that information will be the sustainability information that will be subject to assurance. And so as the raw information, it's before we apply the criteria. So that's actually an issue for our definition, to have sustainability matters as the raw stuff, a reference to the criteria. That's the second step. So I think that's one thing that we would need to coordinate when trying to align the wording. And my second comment is, why did we, maybe going to the proposal, why did we swap A and B? Because as Christelle mentioned during her presentation, it's not for the IESBA or the IESBA code or part 5 to define sustainability information. That's for the reporting and the assurance frameworks. And so the first thing that we need to say is sustainability information is whatever is defined in the reporting or the assurance framework that you're using. And if there is no definition, because it's an entity developed framework or something like that, then we have a general understanding of what we're talking about. And to really stress that first part, that new letter A, those two lines, whatever is defined in law, regulation, or the applicable framework, it really is the key of our definition. So I would say that's the most important part of our definition. And another thing that the work stream considered in our May meeting, as Christelle mentioned, in terms of aligning to the construct or adhering to the construct of the IEESB definition, because we have one definition, sustainability information. And the IEESB is using two, the sustainability information and the sustainability matters. this is mostly due to the construct of ISA 5000 that is built upon ISE 3000, which is an assurance framework. And like Hector said, they are using the equivalence of subject matter information and underlying subject matters. We tried to use a construct where we would have two definitions. So again, sustainability information and sustainability matters, saying what would be essential for our board, and then using the add-on suggestion. But we would end up having a second definition that we really don't need. We only need sustainability information, which for us works as the raw material that is relevant for the reporting part. And then we use sustainability information that is subject to an opinion, and that is the wording that we need for the ISF, the assurance part. So that's just another clarification I would like to add. Thank you.
Thank you very much, Laura. Mark, please.
I think that's really helpful intervention, Laura. But I do think it goes back to one thing. It's, as you say, from a code perspective, we only need one definition. However, from an alignment perspective, we may need to accept the fact that we need two. Because in a sense, the alignment is probably the bigger prize at the moment, and the one that I think, you know, international regulators are pushing us to try and do. So although everything that you say is absolutely right from a code perspective, do we need to flex slightly in order to achieve the better outcome from a sort of collective sustainability reporting and assurance perspective?
Thank you, Mark. Willy, please.
Thank you, Gabriella. And I just wanted to maybe respond to one or two things, and also the question that Ken asked. Well, firstly, thank you very much for the discussion. I think it was really very good. And I think, you know, as we've continued to look at this, I think, you know, we've come to the realization more and more, the more words we have to align, the less the chance that we're going to be successful. So we really need to go back to a very core description, and then accept that there may be add-ons for the IESB. And like I said, we've got a vehicle to do that. You know, if we can get to a core description, we can always say for purposes of the ISAs, and we can add what we need. And we've got application material that we can also use. So I really think that that is an avenue to pursue, and that will get us there. And maybe in line with that is exactly then the point that Ken raised. I think, Ken, if you look at the two definitions on the screen, there's probably the first sentence of the information about sustainability information that has been shaded that can also be actually part of for purposes of the ISAs. And to your point, even the point about criteria could be for purposes of the ISA. So I really think if we can go down this path, that is our best chance to get to a solution.
Thank you very much, Willy. Ken, please.
Yeah, at the risk of being provocative to this board, I would say maybe the answer is staring at us in the face here, which is to take the first sentences of both definitions. So sustainability information about sustainability matters, and mass sustainability matters, environmental, social, and governance matters. And that would be the core, so to speak, and then leave it to the individual boards to figure out what the add-ons would be, so to speak.
Yes, I think that this discussion is making very clear what everybody wants. It is clear that everybody wants a common, as much as possible, a common definition. It is clear that a very technical or detailed definition will not serve the purposes of the two boards, because we cover different realities. And what works for assurance may not work for also for reporting, and to keep the neutrality of the framework. We have to have the PIF, as Christelle rightly mentioned at the start, very clear in our mind. It has to be clear, it has to be understandable, not forgetting that we have non-PAs involved, and that we promise to be profession agnostic and to have simple language, something that everyone can understand. And this, all in all, together with the preferences expressed by most of the board members to have a single, simple, and I'm using Hector's words, single and simple definition. I think it's the preference of everybody, if I may conclude from this discussion. And then each one of us could do what we need to do to make it more detailed, to break down the more general or more high-level definition into technicalities adjusted to our needs in the very many instruments that we have for that purpose. So I think that leads me to conclude, but correct me if I'm wrong, that what we are, the place where we are now, and that I think that IESB agrees, is that we should look for something along the lines proposed by Ken, or something different, which is probably not what we had dreamed before when we discussed at our respective boards the details and the intricacies of this definition. And I still remember a meeting that we had in March last year where this was discussed until we were all exhausted about the details and which words to put and not to put, and etc. Of course, we did a lot of work, and it's sometimes difficult to let go of everything that we worked and we proposed and we suggested, and we thought it was the best solution. I think that it's clear that we need something which is common, which is very simple, very high level, very non-technical, very professional agnostic, very understandable, very framework neutral. And so now I think it's, I don't know if we are able to come up with something here now, but after Ken's proposal, I think it will be relatively easy if we keep this mindset and if we take this as a decision of the two boards to reach something which is which works for both of us and works for the stakeholders who are asking for something more consistent. Comments, reactions, immediate proposals of a simple definition which meets all these criteria, or do we need a coffee break for that? I'm sure we did. We do. But Rania, please.
Thank you. So definitely, I mean, I'm in support of everything that's been said. In terms of a simple definition, I like the suggestion information about sustainability matters, but when it comes to what sustainability matters are, and in the spirit of future proofing, perhaps not to keep it as narrow as environmental, social, and governance, keeping in mind the possibility that you never know if the definition ever expands. So either keep it as such, and I mean, I like what we had in there as item, I don't know, A or B, which is information defined by law, regulation, or whatever relevant reporting or assurance framework, keeping in mind that the definition might at some point expand. So, yeah.
Thank you very much, Rania. I think it's difficult to draft here in the meeting. It's always a little bit of a risk unless there is something which is absolutely evident. But I think that it's going to be easy for the two groups to come up with something which is which works for everybody. Vanya, please.
I've been dealing with definition of sustainability information for other standard setters as well. And I think, Rania, that the dimension of environmental, social, and governance is important to be there because it's what the public is used to do. So I understand that we can keep, and we have the commitment to be agnostic. So we cannot find a final solution that will work for both of us as brothers and sisters standard setters, but not for the other standard setters. So if you want what we are doing here to work for Europe, to Asia, and to others that will be dealing with sustainability information, we should keep a wording that the stakeholders will be able to understand. But I also understand the necessity of IESB to have the mention of subject matters. So I understand that the better is to have the principle base, the general definition, and then IESB could qualify their definition whenever in reference to assurance. That's what should be subjected is the kind of sustainability information that will be subject for the assurance. Just a suggestion, but I understand your necessity, but I also understand the necessity to have a definition that is able to be immediately understood by everyone that deals with sustainability information.
And the magic word, interoperable. Because you rightly mentioned, I think it was understood in this discussion, but you rightly put on the table something which is important, is that at least for us, this framework will have to meet or will have to be interoperable with other frameworks on the reporting side, with the IESBA, with Europe, with the GRI, you name it. So it has really to be flexible and agile to make sure that it is interoperable with everything, of course, with IESBA framework as well. So I think that we should be happy with this conclusion, and of course, leaving it to the two groups to work on something that works, but which responds to these requests and these conclusions. Right. So thank you, Billy. You had raised your card, but you.
Yeah, I think I put it down, Gabriela, because you said we're going to look at it afterwards, and the teams will sort it out. But maybe I can just mention, I don't think we. Well, let me put it this way. I think we are willing to also look at the importance, because we can see what the importance are of referring to law, regulation, or the reporting framework. I think that is certainly one of the things we also need to look at.
Okay, thank you very much. So we will break now for coffee break. For I would say, yeah, I'm gonna pass to Ken because he's the guardian of the clock.
Yeah, I'd suggest we reconvene at 11:35. So 18 minutes break. Yeah, we just lost 2 minutes. Thank you. So 11:35, please.
So welcome back after this short break. I hope that you are refreshed and ready for the second round. Thank you for the very good contributions and the constructive approach of the first round. And now the next topic identified for coordination is on the determination of components and the definition of components. And for that, I will start by giving the floor to IESB, Vili. I don't know if it's Vili or who, Dan, please, to present what you are presenting to your board, and then I'll switch to Mark, who will present on the IESBA side. Dan, please, the floor is yours.
And thank you very much, Gabriela. And I think we're going to first look at group engagements, and then we'll come back in a little bit and look at components and component practitioners. But first, it's just a pleasure to be back with you. Claire and I were here in March and gave you an update on a number of matters, including this topic. So I don't want to repeat too much of what we told you back in March. If you could go to the next slide, though, please. Just a refresher on what the IAASB heard on its exposure draft of ISSA 5000. With respect to group engagements, the comments from respondents fell into three separate camps. One camp was respondents liked the principles-based approach in the exposure draft with respect to group engagements. The second camp said, well, we support that in principle, but really need some additional guidance. And that guidance can be provided outside of the standard. And then the third camp, which was fairly loud, a fairly loud voice, including some of the monitoring group members, said, no, the final standard really needs to include some requirements and guidance that is specific to group engagements. So back in March, the task force had considered this and presented some options to the IAASB for consideration. The overarching principle, if you will, was the need to be responsive to the stakeholder comments, but keep in mind that this is an overarching standard and that whatever requirements or guidance is provided in the standard could be supplemented with additional guidance, or as some respondents had suggested, even a separate ISSA at some point on group engagements. So the task force and concluded, and the board agreed that the most appropriate way to address these stakeholder comments was to add some targeted requirements specific to group engagements. In order to do that, also needed to add some, I'll call it group-specific terminology. There were 5 different terms that were added to the standard in March, still there. Group sustainability information, group sustainability assurance engagement, and then components and component practitioners. We'll come back to that in just a bit. The new requirements really were focused in 3 principal areas that respondents had highlighted. The first one was judgments about scoping the engagement. So a requirement was added to for the practitioner to develop an overall strategy, engagement strategy and engagement approach. And there is quite a bit of application material that supports that. It was based on a similar requirement and similar guidance in the IAASB's group audit standard, ISO 600 revised. There's a separate requirement for communication among the members or among the parties to the engagement, if you will. And that also was supplemented with some additional application material that was drawn from ISO 600 revised. And then finally, the last bit that respondents had pointed to was the need to understand and evaluate the aggregation process, if you will. So there's a requirement in the standard, I'll call it a baseline requirement that applies to all engagements. And then there's this incremental requirement that's basically a conditional requirement for group sustainability information. That's where we were in March. In fact, there has been very little change, substantive change to the standard since March. There have been some refinements and clarifications in both the requirements and the application material, but nothing to change the overall direction that I just described. A couple of things in the application material, though, that I did want to mention to you. One thing was with respect to the definition of a group, the task force noted that ISO 600 indicates that a single legal entity that's organized with branches or divisions is also considered a group for purposes of the group audit standard. So that was added now as application material to the definition of a group in ISSA 5000. And then the last bit was application material to the definition of sustainability, group sustainability information. And this is to recognize that the requirements of the framework for reporting sustainability information, including the reporting boundary, are driven by the framework, by the criteria. And therefore, importantly, the information to be reported is subject to a wider boundary than group financial statements. So this application material just goes on to say that the framework might say if you start with the same reporting entity, or the information reported should be for that same reporting entity as for the group financial statements, but it may be extended to include information from the value chain. So essentially now this says that group sustainability information is information from the controlled group plus information from the value chain. In essence, it's the entire package that is the the subject matter information for this particular engagement. So I'm going to stop there, and I'm not sure who I'm handing off to here, Gabriela. But
thank you very much. Then I have sometimes myself some doubts, but I think that this time I won't be wrong if I say that it's Mark who is going to present.
Okay, so thank you. If we can move on to the next slide, please. Just in terms of key messages that have already been raised earlier, I think that the general sort of response that we got back was that stakeholders did support the inclusion of material within the ED to deal with group reporting engagements, group assurance engagements. But the message has come back consistently all the way through that we should ensure that there's proper alignment between ISSA 5000 and the IESA. And we had pushback to ensure that there was appropriate coordination with IAASB in this respect. I think as Dan's just explained, the work that the IAASB has done both at its March board meeting and the work that's proposed for the board meeting next week will bring within ISSA 5000 requirements relating to group engagements. And if we can move on to the next slide, please. And what that should then do is mean that there is alignment between what we had proposed in the ED and what the IAASB will propose subject to the agreement of its board. I think one thing that I would just flag is that as a task force, we just have to go back through and make sure that as a result of the changes, we are aligned in terms of the language that we use and the terminology. So there may be things that we need to pick up there, but effectively it will gel around the use of those components and sorry, those terms, and we'll move on and discuss the component one next. But if we can go to the next slide, please, because this is the ask of this board. You know, the task force is now of the view that with the work that the IAASB is undertaking, there will be alignment between both proposals in terms of how they align and in both covering group situations. Obviously, we'll continue to do our full analysis of the comment letters that we've got through, but this just really is an opportunity for just to confirm with the board that we should include those specific provisions relating to the group sustainability assurance engagements, and now in doing so we'll have alignment with ISSA 5000. So I'll pause there.
Thank you very much, Mark. So the question to the board is clear. Is to seek for your visions whether these changes on ISO 5000 address the comments regarding aligning and coordination, and how do you see this as a topic for coordination? Which are the visions and the views of this board? And also IAASB, of course, you are very welcome whenever you think it's important to take the floor. Please do. Comments? Laura, I will assume that you have forgotten your card. Sorry. Rich, please.
Actually, not so much comment, just clarification. Then this change, then I don't want to exactly say it this way, but this essentially conforms what you're suggesting in ISSA 5000 to what the existing ISAs do as it relates to group. Is that kind of the case, Dan?
I think, you know, by and large, at the highest level, Rich, that's correct. The specific requirement, the conditional requirement that was added in 5000 for group sustainability assurance engagements takes it, maybe it's a little bit of a deeper dive. It still follows the principles in 5000, which is when you're planning the engagement, figure out, you know, what information you need, where the information resides, figure out what resources are needed in order to obtain evidence about that information. And it could be, those resources could be, I'll call it the group team or component practitioners. And then the third leg of that stool is whether the practitioner either needs to or plans to obtain evidence from the work of another practitioner. So it was meant to try to, I'll call it, create the distinction between work being done within the controlled group versus the value chain. When we get to components, we'll see there's a little bit of spillover on that for work in the value chain. But essentially the point was align it as closely as possible with the principles in ISO 600.
Well, then to answer Mark's question, and I realize we got to talk about components, and we're all going to have to deal with the message we received today from that addresses some issues around components and value chain. I think this, Mark, fits with what you said. And I think that helps us, but I also would agree that we should continue to leave in our IESBA document the provisions of grouping, addressing group sustainability, which was your second question. Thank you.
Thank you, Rich. Amarjit, please.
So I'm not very sure if it is the right time to give some specific drafting suggestions, or maybe I can send it over email.
I think if it's specific drafting suggestions, please send them through to us by email, and we'll look at those, because this is just really to get the sort of high level agreement in principle for our discussions really in July.
Okay, so just one general comment then. I'll not make specific suggestions here. So I found, at times the drafting, if I can say, is little complex, is not very clear. So it would be helpful if we could use examples, or maybe use certain graphics to explain what we are saying. That would be helpful. And I'll probably point out those specific areas where we need more clarity. Okay.
Okay, point taken. Ken, do you want to?
Well, more really to try to better understand Amarjit's comment. So in referring to drafting, are you referring, Amarjit, to the drafting in the exposure draft? Or drafting that we presented on the slides? I don't know, Laura, if you could flip to the previous slide. I don't know if there's any drafting on the...
It's the exposure draft.
Would you be referring to the IESBA, the draft, the proposals that this board put out?
I think whatever was circulated, so...
It's the IESBA.
Yeah. Let me
we can take it offline.
Yeah,
we can take it offline, but maybe my broader point is in relation to your suggestion to provide diagrams, graphical sort of walkthroughs and so forth. Clearly, we can consider that within the task force, but there is also the route of doing explanatory guidance materials, etc., outside of the code. So that is always a matter that is going to be considered as part of the rollout.
So anywhere, either by way of guidance, frequently asked questions. So maybe this may not be the right place here, but just to elaborate and explain, that would be helpful. Yeah, right. Thanks.
Thank you, Amarjit and Ken. Christelle, please.
Yeah, I support the workstream proposal to keep IESBA continuing addressing the group issues in the IESBA code, because we see that overall comments are agreeing that it is necessary, useful, and I understand that IESBA has heard that also in its comments. So it's full support to keep our group addresses.
Thank you very much, Christelle. Very clear. Luigi, please.
I think that the amendment that has been proposed for in March and now go, in my view, in the right direction in order to have more clarity and content about what a group assurance is in this context. I think, as you already mentioned, that it is still at an overarching level, so it is not at a level of detail that could be operable in practice, or let's say operable in practice in a consistent way. Let me put the matter in this way. So probably there is still a need to more details now, later, but in any case, there is still the need of further details on, and also for ensuring that the application is consistent across jurisdictions. In this respect, I think that some of the issues we discussed previously with incorporating the concept of group assurance into our code has been solved. Not all, I think, but part of them. Of course, it will depend how the details are written, as usual, into the code, because this changes a lot, I think, in terms of, or at least these amendments require proper alignment of the wording of the section 5 or 5 and or 6 probably. And of course, directionally, I agree, it is difficult to anticipate an assessment without seeing, of course, the details as it will be written into the code.
Thank you very much, Luigi. Well, apparently there are no other comments. So, Mark, back to you to conclude from these responses what you think should be concluded.
No, I think that's helpful, and I think the work that the IAASB has done has now made this a more cohesive package where we're both sort of working towards the same outcome. Obviously, I do take on board the need that when we're working towards final text, we're going to have to make sure that we've got alignment in the terminology and that we've not just got stuff that doesn't reflect the journey that the IAASB have been on. But certainly that's a helpful steer. It's nice to have this one as comparatively straightforward as we descend into the world of components.
Yeah. Yes, but Mark, let me just add, I think it's important that as we move forward with this discussion, that we always stick to what were the reasons for each one of us to make the proposals as we made and to move forward in a certain direction. What I mean here with the groups is that we had a very, very intensive discussion at our board with respect to groups. It was not the easiest part of our exposure draft, but at the end we agreed that it was important to include it. And so I'm happy that the board is still not only still supporting, but supporting with more conviction the inclusion of these provisions on groups, because actually most of the sustainability assurance engagements will happen in the context of groups. So if we were to leave them out of our framework, the framework would be too short and very much less impactful and meaningful. So yeah, thank you. So back to you, Mark.
So if we can go on to the next slide, please. The next subject, which is a more complex discussion, is determination of components. So if we move on to the next slide, and I think it's handing back to you, is it, Vili, for this one? Or no, is it for you, Dan?
Yeah, I get to start off on components here, and you will recall that we did have a bit of a discussion on this topic at the March meeting. First thing I will say is that in March, the board did support the definitions of component and component practitioner, and basically supported in general the approach for determining components. Some work has been done since that time to clarify, provide some additional application material and the like in the standard. You might recall that in March, Claire and I shared with you a fancy diagram on components that was a work in progress at the time. And that diagram has continued to be revised, discussed, refined, and it will be presented to and discussed with the IAASB in Madrid next week. So I am not sharing that updated diagram with you today, but what I can say is that the basic concepts that were included in that diagram back in March have not changed. And maybe I can just quickly run through with you what those basic concepts are. The first one is that consistent with the group audit standard, ISO 600, the notion of or the concept of a component is a practitioner-driven concept. In other words, when the practitioner is determining the best way to plan and perform the engagement, it's taking a look at the universe of where the information resides, what's the best way to approach obtaining evidence about it. So that is done by identifying components, entity, business unit, whatever, as it's defined in the standard. And it's defined in ISSA 5000 the same way that it's defined in ISO 600. So the practitioner could define components either within the controlled group or in the value chain. So that's the first principle. The second principle here is that in developing the overall strategy and approach, I'll call it the group practitioner may determine that it's necessary to use the work of another firm to obtain evidence. Importantly, when the practitioner, the group practitioner, is able to be sufficiently and appropriately involved in that work of the other firm, that other firm is referred to as a component practitioner in ISSA 5000. Now, there's an expectation, dare I say, a presumption that the practitioner will be able to be sufficiently and appropriately involved in the work of another firm that is done within the controlled group. However, the task force and the board agreed, but they did not want to preclude the possibility that work could be done by another firm outside of the control group in the value chain, and the practitioner, the group practitioner, would be able to be sufficiently and appropriately involved in that work. The standard, though, is pretty clear to say that probably less likely that that's going to happen. If it does happen, it's probably not going to happen more than a step or two, either up or down the value chain. So again, then consistent with the basic principles in 5000, if the group practitioner is not able to be sufficiently and appropriately involved in the work of that other firm, then that other firm is referred to as another practitioner. Now, the key difference is component practitioners, just like in ISO 600 and group audits, they're members of the engagement team and subject to the same direction, supervision, and review responsibilities as any other member of the engagement team. Another practitioner, by definition, is not part of the engagement team, but there are very specific requirements in ISSA 5000 in terms of what the practitioner needs to do in order to use the work of that other firm. So a couple other things that I will mention. And by the way, we're going to come back to another practitioner a little bit later, so can park that for right now. But in terms of a couple things that I can point to, changes that the board will consider, the IAASB will consider next week. The definition of a component, say maybe a small change, but an important one, just to indicate that a component is an entity, business unit, function, or business activity, or some combination thereof within the reporting boundary. So the reporting boundary is established by the criteria, the framework, by law or regulation, and so it can include the controlled group. It can extend into the value chain as well. And the reporting boundary can, is going to vary based on what the criteria says it would be. A positive development, I think, in terms of our coordination efforts. The 5,000 now has application material, again, acknowledging that a component may be within or outside of the reporting entity's operational control. And for purposes of the ISSA 5000 or the ISSAs, a group component relates to a component within the reporting entity's operational control, and a value chain component relates to a component outside of the operational control. The task force thought it was necessary, certainly helpful, to add those references, because it made referring to those individuals, or who's doing that work, easier in other parts of the standard, referring to it in some of the requirements, some of the application material, in terms of actually performing the engagement. And the other one I'll just point out, just so you don't get concerned, but if you look at the draft for June, it looks like there's a change to the definition of component practitioner. In fact, there has not been. All that has been done is some wording from the application material was brought into the definition, just to make the definition of component practitioner and another practitioner align in terms of structure. But it hasn't changed the fundamental concept that a component practitioner is another firm or a firm other than the practitioner's firm. You're going to use that work for purposes of the engagement, and the practitioner is able to be sufficiently appropriately involved. Another practitioner going to use that work, unable to be sufficiently and appropriately involved. Oh, that's where I will stop, Mark, on components, and turn it back to you.
Okay. Thank you, Dan. So we can go to the next slide, please. Couple of things just probably worth flagging before I run through the next few slides. This is where we've got to in terms of our early thinking as a task force. We wanted to run it by the board and get your views. This will probably be one of the substantive discussions that the task force has at its meeting in July. But we wanted to share it with you because we think that we have a way that is certainly worth exploring in further detail. The other thing I should say right at the outset is that you'll remember when we discussed the value chain at length in some of our earlier board meetings, one of the concerns was that we took a decision to exclude value chain entities from the component definition because of the specific independence considerations and the complexity of those independence considerations. And colleagues may remember that we were trying to avoid a situation where you ended up with independence requirements on the value chain that were so onerous you could never get anyone to do the work. And therefore, the way in which we chose to address that was to exclude value chain entities from the component definition. So as Dan's explained in the version of ISSA 5000, which the IAASB will consider further next week, rather than using the operational boundary for the application of the component definition, they're using the reporting boundary. So that, of course, includes the value chain entities. And you can see in the blue box on the right the proposed definition that the IAASB is putting to the board for ISSA 5000. So that is a different approach to the one that we've taken. However, we've done some further thinking about what we might do to align with that. And the two bullets there explain what the IAASB are doing, but I'm not going to run through those again because Dan's already explained them. So we can go to the next slide, please. We don't believe that there's misalignment, but nevertheless, again, one of the things that was put back very clearly in the discussions around comment letters and the feedback, and some of the feedback we've subsequently received from some of the international regulators and monitoring group members, are the importance of having a consistent approach. So can we look to align? One of the things that I want to put to you now is a potential way of doing that in a way that potentially simplifies our standard. And of course, what it doesn't do is it doesn't unpick the position that the board agreed to consult on, which is we're not proposing to put additional independence requirements on those who are assuring elements in the value chain. So where we got to with the independence requirements will not change. If we can go to the next slide, please. So where we've got to is we can align with where ISSA 5000 gets to and revise the component definition so it includes both group components, so within the operational boundary, and value chain components in accordance with where ISSA 5000 is. So that will align with the IAASB's approach to use the reporting boundary for that purpose. And therefore, that would have a knock-on impact on the group sustainability assurance client definition, because now that would include value chain components. You'll see what we've done on the right in the blue box is to exclude that final sentence, which said that components exclude entities within the value chain. But effectively, what we've done now is we're looking at changing section 5405 in the exposure draft. So that now addresses independence in respect of the component firm, engagement team members, with respect to value chain components when the engagement team is carrying out the assurance work. And also group firms with respect to value chain components, depending on whether or not the engagement team has performed the assurance work or the firm uses the work of another practitioner. So again, the important thing to emphasize to the board is, and again, this is subject to review of all of the outstanding comment letters. We've been through them, but we want to make sure that we've captured everything. We're not going to propose any changes to the independence considerations, but a streamlining of the structure. If we can go on to the next slide, just to remind you, in case it's not scarred on your memory, this is what we discussed in December last year. So we had an approach, 3 sections, or I suppose 3 and a bit sections. So we had section 5405, assurance work at a group sustainability assurance client, 5406, assurance work at a sustainability assurance client, that could be group or standalone, where the firm is using the work of another practitioner. And we'll get into the discussion of another practitioner later. And then, of course, we had 5407 and 5700 in respect of assurance work in respect of a value chain entity. Now, what I said about allowing us to not change the independence requirements, but use the same approach to the component definition that the IAASB are using, is it allows us to restructure that section of the code, and that's on the next slide, please. So we no longer have 5407 and 5700. We have a potential new structure which has got a restructured section 5405. So those contain the independence considerations for group and component firms effectively under direction, supervision and review. And that now covers assurance work at the group sustainability assurance client, including value chain components. And then you've got a restructured section 5406, which is where the firm uses the work of another practitioner not under direction, supervision and review. And that includes work at the group sustainability assurance client and value chain components. So again, subject to full analysis, no change to the proposed independence requirements in the ED, but it does allow us alignment between ISSA 5000 and the IESA in terms of both the definition that we use and the approach that we take. And it also has the bonus of allowing us to respond to some of the feedback from stakeholders who said, you've actually got quite a complex model there. Can you simplify it? And I think what we've sought to do is take our steer from the very clear direction of the board, which is don't put excessively onerous independence considerations on the value chain, but at the same time, can you simplify the way in which the code presents that? So that's what we are looking to do. We will discuss that further at our task force meeting in July. But if I can go on to the next slide, please. Questions for the board, obviously, as follows. So can you give us your views on the proposed changes to the component definition, and also the restructuring of the provisions, so moving from 5405, 5406, 5407 to a restructured 5405 and 5406. So I think with that, Gabriella, I will hand back to you and take any questions.
Thank you very much, Mark. But I think that before we take questions, Dan wants to add something.
I just wanted to, before the IESBA provides input, to see if Josephine had anything that she wanted to add with respect to the IAASB's approach to components and component practitioners as we've described. So Josephine, I'll turn it over to you.
Thank you. It's probably because I sent Dan a flurry of messages on Teams. Apologies for not jumping in earlier. The one thing I just wanted to make very clear, so that we all know where we're coming from the IESB's perspective, is in our application material, we make it very clear that we recognize that a value chain entity does exist within the group, within the operational control of the group. We recognize that the value chain can be within the group, and then of course outside of the group's operational control. But we use the term value chain component and group component, as the slide says, just for ease of reference, so that when people are thinking outside of the operational group, we're just going to call that value chain just to make it easy. But it's not to suggest in any way that we're suggesting that a value chain entity doesn't exist within that operational group. And I think that's really important, because to Mark's point, it makes a very big difference on how you're thinking about where the independence requirements lie and which independence requirements that you're looking at when you're in the operational group. So I just wanted to make sure that that was clear, because it wasn't necessarily coming through on the slides. Thank you. Thanks, Dan.
Thanks very much, Josephine, for that clarification. And now I'm going to listen to the board members. Laurie, starting with you.
Sorry.
Great, so thanks. And look, I think the discussion by the IAASB and IESBA starting to get these definitions around operational control versus not, and aligning is going to be very helpful. So for me, and you know that we had that long discussion and it was very confusing for me and I always kept feeling maybe I was the only one, but I think this starts to go a long way toward solving what that means. In addition, the dropping of 5,700, which was a not small part of how that fit with the other sections, I think is good. I think the devil will be in the drafting detail, but I would say in terms of direction of travel, this just makes more sense to me. And the outside of operational control issue is important because of course the risk of harm is very different in that situation. And so thinking about what rules or controls you have around that should be different, I think. So I think good progress, and we'll wait to see the language.
Thanks, Laurie. And I think possibly now you've raised that point, what we should look to do as a task force is when we've got to the end of our July meeting, look to share with the board the proposed text of 5405 and 5406 to allow plenty of time for consideration.
Thank you very much, Laurie and Mark. Andy.
Thank you, Chair. So thank you for all this information. I'm still taking it on board. So I had first a very specific question. I heard about 5407 and 5700 and the restructuring. Are those sections that were previously known as 5407 and 5407 and 5700 going to be absorbed into the 5405? Or I wasn't clear on that part of the restructuring. Then I have a more substantive question to ask.
So on that one, the independence requirements in respect of 5407 and 5700 will be bought within 5405 and 5406, but is 5405 and 5406 going to get exponentially longer as a result? No, that's the careful thing for us to do, to be very sparing in the way that we do that, to make sure that we preserve the board's position on independence, but not just lump in stuff regardless.
Okay, I'll obviously need to see the drafting, of course. So, and help me understand on the value chain component and operational control. Is the thinking that the value chain components are those value chains within those entities or business process within the operational control, but there may be some value chain information that's outside the operational control? I'm thinking I'm prejudiced that a component is something the group assurance provider can intimately react with. So is the value chain component those within the operational control of the reporting entity?
So what we're doing, and I'll come back to Dan as well on this, what we're doing with this is the revised definition aligns with where the IAASB is, which they're using the reporting boundary rather than the operational boundary for the purposes of setting the definition.
So, okay, and it was really more of an IAASB question because I want to understand which comes first. So you've got value chain information that appears in the reporting entity's sustainability report. Sometimes that value chain information may be something within the operational control of the reporting entity, and sometimes it may be not. So I think I have agreement there. With regard to those entities referred to as value chain components, are those only entities is that only information that's within the operational control, or could it be anywhere? That's the part I just want to understand where your proposal is.
No, Andy, as Josephine explained, that for purposes of 5,000, the reference to a value chain component is a component that is outside of the reporting entity's operational control.
Okay, and then I understood her explaining that, and then that kind of contradicted what I thought I heard before. Yeah. So a value chain component, there's going to be a question mark at the end of this if I don't put it in that form. A value chain component then is not one within the operational control of the reporting entity.
Yeah, that's correct. The standard uses the term group component in referring to the work that's being done on a entity business unit within the group's operational control.
And so then did I hear that the members of the engagement team would be those people on a group component, but not those people on a value chain component?
It depends on the group practitioner's ability to be sufficiently and appropriately involved. So you, right?
Okay. Oh, no, I
let me
understand
say
now.
this. The presumption, Andy, is that if you've got a component within the operational control of the group, that for obvious reasons, there's a strong expectation that you're going to be able to be sufficiently and appropriately involved. Direction, supervision, review, all of that.
Like in a financial statement audit, I'd expect that.
Exactly. And so the references throughout the standard to group components take that, I'll call it that presumption into account. And then for a value chain component, it's that, I'll call it that possible but maybe unlikely situation where you're able to do work outside, at a value chain component, right? And the difference is if you are able to be sufficiently appropriately involved, that other firm is referred to as a component practitioner, just like any other component practitioner within the controlled group. The more likely scenario is you've got entities in the value chain where you're not able to be sufficiently and appropriately involved, and we're referring to those as another practitioner.
Right, and I'm not expecting this is not the right venue to walk me through the IEESB proposal, but is this the part where I saw that in the event of a value chain component where the group auditor is not able to be sufficiently involved, that the concept of alternative procedures with regard to the value chain information could be performed? I saw something where added text dealt with alternative procedures.
If I understand or remember correctly, Andy, the reference to performing alternative procedures was in the requirements for another practitioner, right? So the baseline requirement says if you're going to use the work of evidence from the work of another practitioner, you've got to do various things, right? Understand competence, capabilities. Right now it says evaluate independence, but also determine that the nature, scope, and objectives of that other firm's work are appropriate for your purposes, and that the results of that work are appropriate for your purposes. Then it goes further to say that if you come to a conclusion that the scope of that work isn't appropriate for your purposes, or not sufficient, then you've got to do something else, basically. And that's I think where the reference to alternative procedures is.
Right. I mean, I don't mean to have just a conversation with it, but I think this is significant for our understanding of where to set the independence boundaries. That's what I'm still trying to figure out the information that is on. Here's my sustainability report. It's got information on it. It comes from the value chain, but the reporting entity does not have an intimate operational control over that information. I then need to educate myself more on what is sufficient appropriate audit evidence under the auditing standard in order or is that that could possibly be a scope limitation then possibly?
Yeah, that's exactly right. And the evidence section of the standard talks about some of the factors that a practitioner might consider in terms of evaluating relevance, reliability of that information, right? And how you're going to use it as evidence. But if it's in the sustainability information, if it's material, you have to obtain evidence about it in some way. And therefore, if you can't use the work of another practitioner, you can explore whether there are other avenues, alternative procedures available. If that's not a possible route, then you may be faced with a scope limitation.
And part of it is the devil of what the it is that the assertion is in that reporting, because as I understand, the S1, S2 is the information is preferred to be verifiable, but doesn't have to be verifiable. So the reporting entity could say, we obtained this information from the value chain regarding the carbon emissions of scope 3. All it takes is probably a confirmation to confirm the accuracy of that assertion. Okay, all right. Well, anyway, thank you for that. But I really am trying to work to understand the boundary of our independence, because it's very important to me that the independence boundary does not exceed information that can't possibly be part of the entity that I'm auditing.
Thanks very. Sorry.
I was just going to say in response to Andy, that's why we need to share the drafting with you after our July meeting, because what we will be doing is restructuring 5405 and 5406 in a way that makes clear that where independence requirements relate to information from the value chain, we are maintaining the independence requirements that we included in the exposure draft. We're not saying because you're under section 5405, the full independence requirements apply to you, regardless of whether this is within the operational boundary or within the reporting boundary of the wider value chain. So we need to look at how we do that.
There are a lot of moving pieces, and I appreciate that it's all coming on board, and I'm going to try to keep up with it as it comes out.
Okay, thank you very much, Andy and Dan, for these important clarifications. It's important for you, Andy, to understand that it does not go beyond what, in your opinion, should be included, but it's also important for the board to understand exactly what is being captured in this proposal and definition. So thanks for that, and I think it was a very well-used time of conversation. Luigi, please.
And thank you for the clarification. I have not a clear understanding why we are saying that these are not substantial changes, because if we stay with the current text of 5405, including value chain entities into this section where previously they were explicitly excluded, it seems to me that it is potentially or apparently changing significantly the framework. I understand that it is a matter of writing this amendment and the proper details of the wording, but in appearance at least, if we put these value chain entities into this section, the outcome, the potential outcome would be significantly different. And I don't think that we should think of this matter in terms of likelihood or frequency, because when it is written, and we don't know in a mature market how the things could evolve. And therefore, unless everything is written in a way that it is maintained the current meaning and scope of the exposure draft, I think this is a very significant change.
So it's a very helpful prompt for us, Luigi, and we'll have to be very careful in doing that. I think the approach that the task force has taken is that we will not be changing any of the requirements on any individual assurance provider. So what we went out to consult on in the exposure draft, those requirements won't change. They will be reconfigured into those restructured sections. So if you were providing assurance in respect of information from the value chain, what is expected of you in terms of the independence requirements will be no different to what we consulted on. But I think it's a really important prompt for us to bear in mind when we're looking at the drafting.
Thank you, Mark. Rich, please.
Yeah, I have the same caution that Andy articulated, and I appreciate very much we're going to get a chance to look at this comment, and maybe I'm not understanding it, probably not. But from my perspective, one of the challenges with the ED was that as it related to a value chain entity, where you did not have the ability to direct, supervise, and review the engagement, you were therefore going to be in reliance on the work of the sustainability assurance provider for the value chain. It still strikes me that anything beyond asking and getting confirmation from that entity that they followed Part 5 is not going to be practically operational. And so I'm concerned that what I'm hearing is we're just going to move 5,700 into the other two sections. And I think 5,700 wasn't operationally if practical. So I think that's where my concern resides with this concept that we're not going to change anything, because I think we need to think about how to deal with that. Thank you.
In terms specifically, Rich, of your point about the confirmation, I'm in violent agreement with you. Nothing changes in that respect. So, you know, where we got to and where we consulted on about requiring just a confirmation of independence will be no different as a result of the restructuring that we're proposing to do. The only difference, as you see on the slide up there, is the consideration of whether or not the person or organization that you are proposing to use the work of is whether or not they're under your direction, supervision, and review or not.
Okay, thank you, Rich and Mark. Christelle, please.
Yes, thank you. Just to try to make it clearer to me. There is a distinction between operational control by within the group, the audited group. Okay, what is in its operational control, what is outside. Most of the time, value chain entities are out of its control unless some kind of weird situation where its initial boundaries did not include a value chain entity, or did include and then not because of time. I don't know. I don't imagine what are the situation where there could a value chain entity could be in a operational control if it's not already within the reporting boundaries on financials. But so if there are circumstances that this could happen, I am interested just to understand the concept. Then if we speak now on value chain components, what are the circumstances where the group auditor could have direction, supervision, and review? It's because by chance, they are also auditor of value chain components. What other circumstances might be that an auditor could have this direction, supervision, and control and review on a value chain component auditor if he is not the auditor, or his network? Yeah, his network. Yeah. If there are circumstances there, I would like to understand also, because otherwise I think it's going, including our restructuring, as you say, would pose a difficulty, because that would mean that there would be additional requirements in terms of independence when it is in your network than if it's not in your network, the value chain auditor, right? But if you are the auditor of a value chain entity, you might well, depending if you are the auditor of financial statements or the auditor of sustainability, if you're not, if you are the financial auditor, you have the independence level that we require. So, okay, no problem. If you are only sustainability auditor of the value chain entity, then we might ask for more independence requirement than for another entity. So I need to understand all these captions, and then to understand when you finalize your drafting, if we have an uneven requirements between auditors, if I'm clear. I hope so.
So again, a really helpful prompt for us, Christelle, and we will take. I won't attempt to answer all of these things now because I think we need to actually take them away into the task force and do it. The only point that I would say, Christelle, is when I think the IASB explained their reporting boundary and how that drives the component definition, that is, of course, the sustainability reporting boundary, not the financial reporting boundary. So we just have to be clear. But we'll take those points away into our discussions in July and make sure we address those. But the starting point for that the task force is approaching this from is it is not placing additional independence requirements onto those who are providing assurance over value chain information. There is a consideration whether or not they become a member of the engagement team because they might be under direct supervision and review or not. But either way, where the assurance relates to information that comes from the value chain, we are not proposing to change the independence requirements that the board agreed that we went out to consult on.
Thank you for that clarification, because I think that beyond the technical issues that we are discussing, it's important for the board to understand where it takes us and what it means with respect to the decisions that we had discussed and made. So thank you for that, Mark. Sunam, please.
Thank you. From the perspective of simplifying and also aligning with IESBA, I agree with what working group proposed. After hearing from you in response to all the questions, I'm assured, but my concern and comment was especially when I read the material last week, my concern was the possibility that the practitioner for value chain entities should have applied more stringent independence standards as compared to those proposed in the ED in the past. So I believe the working group will take that into consideration. But we have received a lot of pushback and challenges facing value chain entities. Thank you.
Thank you. And it is just a reflection of the fact that things are moving extremely quickly at the moment, and will continue to move extremely quickly. But we will take all of these points and all of the feedback from the board into that discussion that we have and into developing that material that we can then share with you.
Thank you, Sunam and Mark. So I think it was Yohei who is waiting for a long time.
Thank you, Chair. I have 2 points. The first one is regarding the definition of the component. I support the direction for the proposed definition. Is conceptually aligned as that of the IESBs, but I think there still exist differences in description. So, like ISSF 5000 said that the component is within the reporting boundary, while IESBA code says nothing about it. So I think the definition of component should be consistent with that of the IESBs. This is one thing. And the second one is, it is said that the new structure is to address perceived complexity. And I'm not fully convinced that whether or not the structure change can fully address the concern of the perceived complexity. So my point is necessary to analyze comments for concerns regarding the complexity, and which I think many respondents commented. Thank you.
Thank you, Yohei. Tomoyo, please.
Thank you, Chair. For the potential new structure, the restructured 5405 and the restructured 5406, at the first look, I thought this is a good approach. And I think many of the feedback in the ED comments or the outreach activities was that this process is still just started, and we never know how broad the value chain entity can expand or so. I thought so. One thing I wanted to clarify is whether we are using the word value chain components and value chain entities as the same scope. I thought value chain components are more those substantial value chain entities. And if that's the case, I thought this makes sense, but I need to see the language to finally confirm. But to some content, I think this approach will reduce the concerns around the complexity. The other thing I just want to highlight is that it is very interesting that the Willie Dunn use when he mentioned about another practitioner use unable to be sufficiently appropriately involved, and the IESBA people use another practitioner under DSR, but seems it's the same. It's same thing. So I think for this purpose, either needs to compromise and use the same, but it seems that we are just using the different language for the same meaning. Thank you. And also one more thing. So for this new structure, I think we need to confirm that the reason to believe issue that has been going around in March is also covered in this context. Thank you.
Thank you very much, Tomoyo. Sadia, please.
So it's easy to agree with if this restructure adds to clarity, understandability, better coordination. But we are moving at an terribly fast pace. And the one bullet says they're subject to full analysis of comments, no changes to proposed independence principles in the ED. Maybe it's not changes to independence principles, but it's clarity that was required or requested from several comment letters that will need to be considered. And if this restructure leads to that, then it's easy to agree, but it's hard to know now without seeing the detail whether that's going to be plausible. This has been a discussion of the board for every time we considered it. This has been the most difficult decision. And it's leaving me a little bit uncomfortable with agreeing with something without having time to analyze it sufficiently and understand what the pinpoints and the trends have been on these sections. So I understand the timing issue and that we're moving to a July meeting, but I do think that my agreement with going with this restructure cannot be held in case after seeing the detail, this doesn't help the underlying issue that has been raised in comment letters.
Okay, thank you very much for that warning, Sadia. I think it's important. We don't know what we don't know, and we don't know what's in the responses that we haven't analyzed or had the opportunity to see yet, nor what it will bring us in terms of reflection. So I think that we can take this, and we should take this as a preliminary or a tentative or directional approach. But of course, we can't agree at this point as a final and have a final agreement before seeing what's coming, what's in the responses, and what the discussions will be at the task force level after further consideration. So that should be clear in our minds, and take this conversation as what it can be at this stage. So David, please.
Thank you, Chair. So I would say, Mark, in answer to your question, I'm broadly supportive of a restructure that simplifies. I think I share the concerns that have been raised around the devil's in the detail. So definitely, I think it'll be important to be attentive. The one thing I would say is I share Christelle's concern about the definition of, what is it, value chain component. To me, it makes sense that anything in the value chain wouldn't be within operational control. So I struggle a little bit to think about why there would ever be something in the value chain that would be under operational control, or if it's under the group, why it wouldn't be under operational control. So I really struggle with that concept a bit, because I think about how organizations look at it. So, and maybe this is a question, and maybe it applies to both the IAASB as well, since the definition comes from there. When I think about operational control, it's something that literally an organization can direct. So yes, you can put things in contracts with suppliers, for example, but that doesn't mean that you can actually direct the supplier or the operation. You can only say, look, these are the parameters around which I need you to do something, or I need you to report back to me. So I share Christelle's concern. I struggle a little bit to understand how that works in practice. So maybe when the wording comes out more clearly, it'll be helpful, because that'll be something, for example, that I think we all need to reflect on a little bit, because that's what practitioners will be struggling with. Thank you.
Thank you very much, David. So Chana, please.
So I think on 5407 and 5470, what is being suggested on the assumption that that was acceptable, the restructure, I think, works. But the issue is, I think we have heard a lot of feedback that there can be operational challenges in what the original independence requirements were proposing. So I think subject to full analysis is a huge qualification.
Yes.
So I'm still not on the page. I'm on the task force, by the way. But I'm still not on the page that, 5470 and 5407 is fully operable unless we have some sort of way of identifying which are the significant ones.
I think that's a really helpful prompt, Chana, and one of the things that I had been wrestling with, and indeed Josephine and I exchanged messages on this the other day, is whether or not, if we are bringing value chain into the definition of a component, should it actually be material value chain entities or material value chain components. But in order to get that probably relies on me arm wrestling Josephine, and she's more likely to win than I am. But I do think we need to have that caveat in there to reflect the fact that, when we've talked about value chain reporting before, we've gone to some lengths to say actually value chain in a number of reporting frameworks is driven by materiality considerations of how that's brought forward, and we'll need to discuss that as a task force. But I think that will, if we can do something like that, I think that will help to address some of the concerns that board colleagues have raised in terms of actually, what are you talking about here? You're not talking about everything. You're just talking about those things that are caught within the reporting boundary by virtue of their materiality.
Thank you, Mark. Ken, please. I think. Andy, sorry.
Yeah, no, thanks. Just real quickly. So yeah, you've gotten inconsistent messages. It's too complex, and there's not enough explanation. And so I realized that those things go counter. But I do recall that in the exposure, Mark, you were advising the board that let's put it on the exposure because it's easier to retract it in the final. And so I guess I'd encourage you to try, the task force, to try to reduce the material, to reduce the complexity, and maybe get, because I'm hearing a lot of things about most of the time this will be the case, is try to get those situations that'll be most of the time, not answer every question now, but maybe put some of that in the post-implementation review, as long as it's not contradictory. So I guess I was hearing your voice saying that we could always take it out later. So if there's a way to reduce complexity not necessarily answer the nth question, but answer the most pressing questions, then I'd encourage you even more to do so. Thank you.
Thank you, Andy. And finally, Ken, please.
Thank you very much, Gabriela. I think the conversation really has emphasized, and like Andy had said earlier, that there are a number of moving parts, and the board won't be able to land on a final position until it has the benefit of the drafting as proposed by the task force in due course. I just wanted to come back to this point that I think Josephine emphasized earlier in the session about this, and a number of board members have also raised this question as to when a value chain entity would be considered within the operational control of the reporting entity, and the relevance of that concept when it comes to the assurance or the planning of the assurance work, because that will have implications on how we think about the independence requirements. And I wondered if you could give an example as to when that would be the case. Is it that, for example, I mean, David has used the example of an entity entering into a contract with a supplier. And yes, we understand that entities may well specify broad parameters in terms of the supply of a particular product or range of products or services. But when we basically raise the concept of a value chain entity being under operational control, that essentially means that the reporting entity has total control over the value chain entity. And is that relevant in the context of really defining the concept of a component practitioner versus a value chain practitioner? So maybe some clarity there, I think, would be very useful. I don't know if Dan or Josephine, if you could elaborate on this.
Maybe I can just come in, Ken, and say that we can certainly have another look at it. And the example that has been used most often maybe is more along the lines of the contractual agreement. That's where there's a direct business relationship of some kind between the reporting entity and the value chain entity that allows more flexibility for management to have access to information and for the practitioner, the reporting entity practitioner, to have access to the assurance practitioner at the value chain. That's the example that we've heard either through the comment letters, through outreach, whatever. So maybe clarifications along those lines might be helpful, but we can have a look at it, Ken. And I think just in the context of everything that is done, that on both sides that is going to be done, we can have another look.
Thank you very much, Dan. Luigi, please.
I know that it is a matter already dealt with previously, but I also think that having clarity on what an operational control is in this context is quite key. Because if we are thinking situation where there is a contractual agreement or something like that, depending on which type of contractual agreement, we can scope in everything, because value chain entities have contractual agreement with the reporting entity. So operational control would need to mean something different, and should not be only referred to possibility to access information or possibility to have some sort of significant influence on the entity. It should mean control, an operational control, which, and if it is the case, I can reconcile with your comment that it is not frequent. It is not expected to be frequent. If it is something different, well, I'm less sure that it is not free. It is less frequent. So I think that a clear definition of the meaning of this wording is needed, either in your work on or in our work in order to make sure that the scope of what is to be included into a section instead of into another section is very clear, very well defined.
Thank you very much, Luigi. Rania, please.
Yeah, so just a clarification. Are we talking about another, let's say, a value chain entity that is within the operational control, or is that the distinctive factor, or is it that whether or not the other practitioner is under the direction, supervision, and review? Because I can think of circumstances where, I mean, and also very much to Luigi's point, where there is a control, there is perhaps, I mean, significant influence, and that's also another, I think, a nuance we need to draw out. Sometimes you might have like, for example, between two companies, the majority of the business is, let's say, of the value chain supplies this company X, or company X, let's say, comprises 90% of the revenues of that value chain entity, but it is not the only one. It does not have to be contractual agreements per se. Sometimes there might be operational control, but for practical purposes, the value chain resides in another location, and it is very difficult for the practitioner to actually direct, supervise, and review the work of the practitioner doing the work for the value chain. And so I think these are important. I mean, since we're getting into those different, that scenario, it's important to exercise, to exhaust all the, most, at least, not all, but of the possibilities. Thank you.
Thank you, Rania. And David, do you want to come in again? Right?
Yes, thank you. What I would maybe encourage you to think about is the use of the word control, because I think it's the use of the word control that's causing some of the feedback that we're providing, because it has a very specific meaning in many contexts. So it could be solved with another choice of word that doesn't get people going down a rabbit hole of, whether there's effective control, whether there's ownership, and I think to Rania's point, and I agree with her, if there's a significant relationship where you're effectively controlling a company by virtue of a sales relationship, again, it's something quite specific. But I think what you're intending to mean is not actually control the way it's thought of generally. It might be another word that helps solve to convey the meaning. So just encourage you to think about just that one use of the word, and can you convey it the way you intend to, so it's more broadly understood.
Yeah, I mean, if I could just come in, David, that's I think a useful suggestion. And what we're really talking about here is, in most cases, a value chain component will be an entity that's outside of the reporting entity's operational control, and we're looking at the set of circumstances that flips the firm that's doing the work from another practitioner to a component practitioner because of the ability. There's something about the relationship that provides the ability for the group practitioner now to be sufficiently and appropriately involved. Really is almost, it's separate but related to the control aspect. So we'll have a think about that.
Thank you, Dan. Thank you, Dan. Thank you all. I think that with this, we exhausted the comments from the board. I'm not sure that we have a clear conclusion here, but I think that the conclusion is that there is still some work to be done by both boards. But I think that we are closer than we were 1 hour before. So I think it became clear which are the limits of each of the boards, or at least in our side, which is not to put additional independence requirements over the value chain entities and etc. So, within that limits and boundaries, of course, we are willing to make what is necessary to meet to reach a common point on where we can all agree. The fact that we have already consulted and received the comments that, again, we haven't finalized, which analysis has not been finalized, also provides us with the information which is, I think, important going forward to see the direction that we can take and that we can't take after having exposed. So same on your side in a different way, but I think that with this, the task force and the group, the joint working group will be able to advance something for discussion between the two boards and the two teams very soon. So thank you very much for these very good substantial contributions and very constructive again. By the way, I don't think that anyone is here with any different approach, which is not the one to get to common and effective workable solutions, practically workable solutions. So we are late, a little bit late. We still had a few coordination topics. I don't know if, sorry. I think that just asking the IESB team if you would be available after lunch to continue this conversation for a while on the rest of the topics that still require some coordination.
We only actually have two that require and they are actually just updates from what the IESB is proposing to put to their board at the June meeting. So
do you think that we can?
Is it an unreasonable ask, Vili, to say is this actually a 5-minute update on the two remaining issues? Well, because that does sit between you and lunch.
This is a very significant negotiation technique, which is to try to solve things between lunch. I'm kidding, of course, but really, I'm just kidding. If you think that it's possible, so of course, but.
Yeah, it might not be 5 minutes, but I'm definitely willing to push through and get this done. So it's really up to your board. So
okay, I think it's. I'm sorry, Mark, but I think it's better to break because otherwise we could be blamed for not providing people the time enough to discuss or to making them discuss too hungry to be able to take the conversation to a nice place. So yeah, it's a human's right. Like Laurie says. So let's break for 1 hour. We'll be back at 2:05. Okay. Thank you very much. So, good afternoon. Thank you very much for being back. We are still missing 1 or 2 board members, but we will restart the meeting. Now, we have 2 additional topics for coordination discussions. But before we move into them, I'll give the floor to Ken, because he needs to share a little bit of what the IOSCO has conveyed to these boards yesterday or 2 days ago, which are also matters for possible coordination or at least additional reflection. Ken, please.
Thank you very much, Gabriela. And yes, the matter I am just going to flag to the board is a matter that's been raised to both this board and IESB through a note that Vili and I received yesterday from Paul Munter, who chairs ISCO Committee 1. The board has had the benefit of seeing the note that I circulated overnight. But just for the record, I just wanted to at least convey the essence of the comment from ISCO Committee 1, which is a matter for the 2 boards to reflect on, and that's under the encouragement of Committee 1. So essentially, Committee 1 is flagging that based on the IESB's June 2024 board meeting materials, a practitioner performing work on information sourced within the organizational boundary or within the reporting entity's operational control may be classified as either a group component practitioner, i.e. an engagement team member, or another practitioner, i.e. not an engagement team member. However, such an approach related to group component practitioner could be viewed as being inconsistent with foundational concepts embedded in the existing quality management and audit standards and could be unclear, especially to non-PAs unfamiliar with ISAs and the code. Stated differently, in Committee 1's view, there is a key distinction between activities within the organizational boundary and activities outside the organizational boundary, but within the value chain. And it goes on to say, we believe there is an equal level of detection risk that could exist within a sustainability assurance engagement, a detection risk of material misstatement, that is, within a sustainability assurance engagement, which may not be sufficiently mitigated if the group sustainability assurance practitioner is not sufficiently and appropriately involved in the work of the group component practitioner. And as Committee 1 finally goes on to say, we believe that a sustainability assurance practitioner should only accept a sustainability assurance engagement when it can take overall responsibility for managing and achieving quality on all aspects of the engagement within the organizational boundary, which requires being sufficiently and appropriately involved throughout the engagement, such that the engagement leader has the basis for determining whether the significant judgments made and the conclusions reached are appropriate given the nature and the circumstances of the engagement. So all to say is that this matter has been raised to the two boards' attention for further consideration and coordination. But clearly, this is a matter that first and foremost the IESBA task force needs to address, because it addresses the conceptualization of a component practitioner and another practitioner and how those different types of practitioners are defined. And once this has been clarified from the IESBA side, then we can have our consideration at IESBA. Thank you.
Okay, thank you very much, Ken. It was important to bring this to the attention of the board, even if you have received the email, but also for those who are watching online and who must be aware of these additional or concerns or suggestions brought to us by the IESBA. So thank you very much, Ken, for presenting on that. If there is no question on this, on what Ken has just shared, then I would give the floor to, I don't know, Willy or Dan, to present on the first of the two topics on which that we still have to discuss on coordination. And the first one is on the relevant ethical requirements and quality management, namely the very famous topic of as demanding as, which has also received some substantial feedback, mostly on the IESB side, but that in our outreach conversations has also been subject to some attention. Willy, please.
Thank you, Gabriella. And I'm going to feel very stupid now if it only takes 5 minutes, but let's see. So on the relevant ethical requirements and quality management part, so we can go to the next slide. Yeah, thank you. I think, on exposure and also even through our outreach, we have heard very, very strong support for the premises of quality management and ethical requirements for performing sustainability assurance engagements. We have certainly received calls for clarifying what we mean by at least as demanding, as well as who the decision makers will be in the terms of determining what is at least as demanding. And then there were various suggestions in terms of, that range from we should just straight out require that it has to be ISQM 1 in the case of quality management, and it has to be the IESBA code in the case of ethical requirements. But I mean, obviously we can't go there because that's not that has not been our policy and approach to this, and that will have unintended consequences even for the ISAs. So, and then there were also some other suggestions that are mentioned there on the slide as well. But really where we've landed is the following. we have gone what we have proposed, that we have a 3-pathway requirement, what we refer to as a 3-pathway requirement with a clear hierarchy in terms of what applies. And there's a requirement in paragraph 29 that deals with quality management, and then a requirement in paragraph 33 that deals with relevant ethical requirements. Those 2 requirements and application material to those requirements are intended to mirror each other, because it is about the 2 premises of quality management and relevant ethical requirements. And how this 3-pathway requirement basically works, and if I then use relevant ethical requirements that is more relevant to this board, is it says that the practitioner shall comply with relevant ethical requirements, including those related to independence, that comprise A, the IESBA code relevant to sustainability assurance engagements, and when relevant, national requirements that are more restrictive, or B, professional requirements or requirements in law or regulation that an appropriate authority has determined to be as least as demanding. So similarly, on the quality management side, there's also that A and B. It has to be ISQM 1 or professional requirements or requirements in law or regulation that an appropriate authority has determined to be at least as demanding. And then the third layer is where we say if A or B is not relevant in the circumstances, then it is professional requirements or requirements in law regulation that the firm has determined to be as least as demanding. But we're trying to make it very clear that it is A, B, those are the preferences. And only in those exceptional cases where you may land in a situation where it's not A or B that's relevant in the circumstances, then but because you have to close the loop, otherwise you're going to leave people hanging on that. So what we've then done in the application material is to firstly describe what an appropriate authority is. And we said an appropriate authority can be a standard setter, a regulator, or oversight body with responsibility for audit or assurance. And so that is an appropriate authority. And then we've also added application material that if it is the firm that makes the determination, then it is very important that the firm will also look to what's available. The firm will look at what did the network firm maybe decide is. Is there a relevant professional body in the jurisdiction that has made such a determination? And so we've given some guidance in that regard as well. We've also said that in those instances where it is the firm that makes the determination, then there's a specific documentation requirement. In the engagement documentation, you will then have to document the basis for that determination. And we've included transparency in the assurance report, where there needs to be an explicit statement, both in respect of quality management and relevant ethical requirements, as regards to which quality management standards have you applied if it isn't ISQM 1, or which relevant ethical requirements that you apply if it isn't the IESBA code, together with who made the determination. So that is what we are proposing there. In terms of at least as demanding, what we've done there, and again, it mirrors each other. So in the case of the relevant ethical requirements, we already actually on exposure had a description of what the IESBA code addresses. So it dealt with the IESBA code as a conceptual framework. It's about identifying threats. It's about evaluating those threats. It's about specific requirements and application material on certain specific topics. It's also about highlighting the factors that would influence the consideration of the independence of the firm or the practitioner. So that's all laid out. We've also now on the QM side similarly said what must a system of quality management deal with? What are the elements of a system of quality management, including monitoring and remediation and all those things? And then what we explain is that at least as demanding means that those other professional requirements or requirements in law regulation has to address all those matters that we set out in the application material, and has to impose obligations that achieve the aims of the requirements of the ethics code or the aims of the objectives and the requirements of ISQM 1. So that is how we've structured it. In March, there was a lot of support for that. The only thing that we had to tweak a little bit from March to now June is that hierarchy. The board wanted to have a clear hierarchy in terms of the A, B, and C, and we've done certain further refinements to the application material, and we've now also showed the mirror version QM1 and the version for relevant ethical requirements. So, Gabriela, I think I'll maybe let's pause after this one to see if there's any comments.
Thank you very much, Billy. I think so. I think it's important enough, and it has triggered enough questions for the board to be able to provide their views and questions. Andy, please.
Thank you, Chair. Thank you, Billy. Has there been any feedback, I guess really from anyone who's dealt with any public sessions, from non-professional accountants, if they are more likely than not to choose one of those three buckets, that is the IESBA code, the other required code, or the firm developed code? Has there been any anecdotal views as to which way they're going? For non-professional, I mean, professional accountants will choose the IESBA code. So this is really a question of the non-professional accountants. Have we gotten any input one way or the other?
So Andy, the evidence that, well, not evidence, the information that we do have is that when through our outreach that we did during the exposure period, we deliberately made sure that at all the roundtables there were non-accountant assurance practitioners present as well. And I must say the feedback that we got is really throughout that they were very supportive of making sure that there is robust quality management requirements and robust relevant ethical requirements. As to which of those three options, no, we don't have specific information about that, but in terms of at least as a baseline, we got no pushback from the fact that they want the robust relevant ethical requirements and quality management requirements.
Thank you, Andy and Billy. Any other questions? Rich, please.
Yeah, I'm a little, are you saying in your bottom right box that people will get to choose what are the relevant ethical requirements and the relevant or the applicable quality management standards? Is that where we're headed?
No, I don't think it's a choice. I think it's a question, because remember, the other thing that's going to happen is these standards are going to be implemented at the jurisdictional level. And at the jurisdictional level, the oversight authority or the regulator will make a determination of whether they believe it is ISQM1 or whether, and we know that even on the ISA side today, not everybody uses the QM1, but they have requirements in their jurisdiction that are at least as demanding as QM1. And it's at that level. But what we just wanted to do with the C part, but that's why the board also said it must be clear from the hierarchy that it is A or B that is what we need to aim for. And it's only really in those cases where it's that you sit there and there's really nothing relevant, and you have someone that wants to comply and say that I've done my engagement in accordance with ISA 5000, we just had to create that option there, so to close the loop. But yes, we don't see it as a choice. Here it is, so choose which one is the best for you, A, B, or C, because I think it goes together with the adoption that needs to happen at the jurisdictional level.
Okay, thank you.
Thank you. That's very helpful. And I think that the way you explain it really addresses some concerns that were probably still floating around about how to address these three options. Of course, the last one is not desirable, but then considering what you explained also about the guidance or non-authoritative material that you are developing in that respect, I think that, subject to seeing it, we can be more reassured. Anyway, this was an important topic for the IESBA because it is the hook that clearly connects the IEESP with IESBA and may ensure a joint adoption of the two standards, which is also desirable. But I'd like to see if the board members are comfortable. Oh, sorry, I still have Tomoyo.
Thank you, Chair. Yeah, so one thing that I want to make clear that about this one, to adopt the same for the RER. One difference about the QM RER is, as mentioned, for the QM side, there's a requirement to put it in the assurance report, whereas I assume there is no requirement to put which RER is applied in the assurance report, and that transparency will be very important, I think.
Sorry, I'm just going to the standard now. So in terms of the recommendations that, or the proposals that we have for the board next week, it relates to both the relevant ethical requirements and the quality management requirements, that transparency in the assurance report.
Yes, I think in the past it was only the quality management side. So newly, there will be a requirement, or was to put which RER following was in the assurance report from the past?
Yeah, in actual fact, I think in the case of relevant ethical requirements, we've always had a statement in the report that says you have to identify it as the IESBA code or whatever then is applied in that jurisdiction. And we actually didn't have something similar for the quality management side. Okay. And we've added that now. But so what you will see now, the transparency that's required in the assurance report in terms of both the relevant ethical requirements and the quality management now mirrors each other in terms of you have to be clear, this is what you applied. And if it's not QM1, then you will have to explain, well, what is it that you applied and who made that determination?
Yeah. Thank you for your clarification.
Thank you very much, Tomoyo and Philly. Ken, please.
Thank you, Gary. I really just wanted a clarification, or maybe if you could just explain again, Billy, how you are articulating the concept of at least as demanding in application materials. So what are the main elements of the explanatory material you have as far as at least as demanding is concerned, and maybe what would be of benefit to this board, maybe at the next iteration or the next meeting, is to actually see the guidance. But if you could just remind the board as to the main sort of aspects of the guidance.
Yeah, sure, Ken, I can do that. So maybe just to give you a reference, if you want to go and look at it yourself, is in our application material, paragraphs A44 to A48 was there already. That was already exposed. That was part of the ED already. And that already explained that the IESBA code sets out fundamental principles. It provides a conceptual framework that addresses identifying threats in the following categories, evaluating whether the threats are identified at an acceptable level, and it talks about the safeguards that should be implemented. It then also says the IESBA code sets out requirements and application material on various topics, for example, conflict of interest, professional appointments, second opinions, etc. It goes on to say that there are various matters that may affect or influence the practitioner's independence that's addressed in the code, including, and then it lists all of that. And then it says, so that is A44 to A47. And then it says, when it comes to A48, it says other professional requirements or requirements imposed by law or regulation addressing compliance with relevant ethical requirements are at least as demanding as the provisions of the ethics code related to sustainability assurance engagement when they address all the matters in those paragraphs and impose obligations that achieve the aims of the requirements set out in the IESBA code related to such engagements. So, and that was already in the ED, so we're actually not proposing to change anything there. We have then added 2 further application material paragraphs to explain the notion of an appropriate authority for that B section of the 3 pathway requirement, and then another application material paragraph to indicate that if the firm makes the determination, if you were to fall into that C category, that you would also maybe want to refer to what your firm's network has determined, what a relevant professional body may have decided, to give them a little bit of direction on that, that it's not just a, you get up one morning and you decide, well, this is, I think it is at least as demanding.
Okay, thank you. And really, Andy.
Yeah, along those lines, I'm just thinking through that C category. So I understand if there's an appropriate authority and the appropriate authority says do this, then the practitioner does that. So if there's not an appropriate authority and they elect to follow the IAASB standards, why couldn't it just be use our IESBA code since they're professionally agnostic?
Yep, 100% correct. I think that they could be.
No, I know they could, but why couldn't they be required to use that since they're professionally agnostic? Why? I understand you'd get an out if there's an appropriate authority determination, but I'm still working through if there's not an appropriate authority, and we've gone through the trouble of writing an IESBA code that's professionally agnostic, why wouldn't the default really be then to the IESBA code? I could see if it was written for PAs, that would be the answer, but it's not. It's professionally agnostic. So why should there I'm suspicious that forces will drive to C a lot. And I understand that you can write it whereas the preference to the IESBA code, but anyway, I'm just now absorbing this more, and I thought there were two choices, and now there are three choices. So I'm wondering if there's not an appropriate authority, why it shouldn't be the IESBA code.
And look, well, the same applies really on the QM side as well. So why couldn't it be ISQM1? But remember, that was one of the suggestions. Why don't we just write into the standards that it has to be ISQM1?
Well, if there's another authority that says it must be something, and I'm talking about just the ethics code right now.
Yes.
So if there's an authority, I recognize the authority. If there's not an authority, and they're going to do something at least as demanding as our code, then I understand why not just use our code. We've gone to great lengths to write it in a neutral fashion.
Okay. Josephine, I see you want to come in.
Yeah, Andy, thank you. I think what we're trying to do on both sides is recognize that there are other professional bodies out there which we wouldn't necessarily call our appropriate authority in our accounting world, who organizations have signed up and they're members of, who do have ethical standards that those members, those non-accountant assurance practitioners, have to comply with and are, accredited to. And therefore, in that situation, and, we're working with the IIF on both sides to think about the mapping and how things map across and whether things are at least as demanding or equivalent in some way, but to recognize that there may be other codes out there that are developed by professional bodies to which somebody or an organization has signed up to. And that's really what we're thinking about in this bucket, that you may not have being able to sign up to the IESBA code because of, I don't know, jurisdictional situations. You may not have adopted QM1, but you do have, QMX in accordance with your own accredited bodies. And therefore, this gives you that option as a non-accounting practitioner to apply those standards when you're performing the assurance work. And it's the important point that was raised earlier about transparency is really critical here, because we will have now transparency, particularly on the QM side, which is very important. If a different quality management standard has been applied, it's not QM1, and that particular body is allowed to apply that standard, then they'll be transparent about it in their assurance report that they've applied that standard. And they'll also have to document it as well as part of their files and their documentation as to how that body that they're signed up to, that membership, that member organization, what that might, I'm trying not to name names here, obviously, which makes it harder sometimes to explain something, that how that particular body came to the conclusion that something was at least as demanding. Hopefully
Yeah, I did look up, one of the first things I looked up was the transparency requirement in the reporting element. So I was very happy to see that. But it seems to me that could be nestled into the appropriate authority bucket, because I'm not worried about those folks, the ones that have a robust, I'm worried about the ones that don't have anything and then just make their own determination. So anyway, but I appreciate the input. Thank you.
No, Andy, and I also do appreciate your input because it really triggers here, I think, the need for further reflection about if we really, if this third option really meets the objectives, namely of fostering and achieving some consistent framework, because this really opens the door for a number that can be very significant of other frameworks to come into place, which is the opposite objective that we are trying to achieve, and that we try to address with this coordination with the IAIF and etc. So yeah, I think that we should give it a second thought, because I think that if AIF entities are going to use the IESBA code, if accountants will be using the IESBA code, what's left out? And it can be a number of, as you say, small or not very robust entities. I don't know. Your comment really triggered some additional thoughts that I think that should be subject to reflection. Rania, please.
Thank you. Yeah, and so very much to Andy's point, I mean, I'm thinking that if another code is at least as demanding as ISQM1 or the IESBA code, then wouldn't the practitioner be actually implementing ISQM1 or IESBA? I mean, just because they subscribe to another code doesn't mean that other code, if it's at least as demanding, that they might be actually implementing or in compliance with both ISQM1 or IESBA code and that other code. They don't have to be mutually exclusive, especially if they are at least as demanding. So just wondering if that makes
Okay, Ken, please.
Yeah, I suppose Andy's observation just raises a question in my mind, more from a practical perspective, because if we were to take this particular case where if he's making its own determination, and based on what Vili has explained, that firm has to essentially demonstrate and justify its basis for having reached a conclusion as to at least as demanding, which to my mind potentially could amount to a lot of work. Why not simply follow what's in the IESBA code and not having to do your analysis and comparison, mapping and documenting everything, and then actually disclosing what you've done and potentially exposing yourself to being challenged and questioned? So I'm just looking at it more from a practical perspective as to what the implications might be.
Okay, I don't think we will solve it here, but I think that this is important feedback and food for thought for the IESB to process in its next meeting and conversations about the topic, right? I think but it's really important to assess if there is really a need for this third option, given the practical implications, but also the implications in terms of possible fragmentation and use of inappropriate frameworks. Anyway, thank you very much, Vili, and thank you to the board for the comments. And I think that with this, we can move to the next topic for coordination, which is the one on the use of another practitioner and the use of the term work.
And I'm going to bat cleanup on this one. So we've already talked a little bit earlier today about another practitioner, the definition of another practitioner, but I did want to at least point out one change from March that could have an effect on our coordination discussions. But by way of refresher again, the comments that the IAASB got back on exposure, there was a lot of support for using the work of others or obtaining evidence from the work of others. There was the notion of another practitioner was included in the exposure draft, but there was not a definition, and respondents asked for a definition that was added back in March, and we've already talked today about that definition. I'm going to come back to that in just a minute here. What we also heard from respondents generally as it relates to another practitioner was some of the challenges in practice. And again, some of those challenges have been discussed earlier today as well. Just the ability to coordinate with that other firm. One thing that respondents said was there's a wide range of sustainability matters, different types of practitioners that might be performing engagements on one or more aspects of the sustainability information. So definitely need guidance in terms of evaluating competence and capabilities, the nature of the work performed, and determining that the work is appropriate or adequate for the practitioner's purposes. And all of that was addressed in March. There was some additional application material that was added. But one of the things that we, and Claire and I talked about this when we met with you in March, one of the requirements that was added to 5,000 to address some of these practical challenges was this notion of one-to-many assurance reports. So, particularly as the reporting ecosystem evolves, there may be more likely instances where a value chain entity that is now needing to respond to a number of different reporting entities can satisfy their need for information through this one-to-many report, similar to what would be done in a service organization report. So that requirement, conditional requirement, was added in March. The board supported it. It is still there. Some tweaks were made to it, including lessening the focus of the core requirement on controls, making it broader, because the board said, indeed, such reports could cover more than just controls. It could be a broader report on the information itself. So that aspect still remains in the standard. So what has changed, however, from March relates to references to assurance work. So in the definition of another practitioner, for example, in the exposure draft and in the March draft, the definition of another practitioner was a firm other than the practitioner's firm that performs assurance work that the practitioner intends to use for purposes of the assurance engagement, and the practitioner is unable to be sufficiently and appropriately involved in that work. Subsequent to March, the task force had some further discussions on that, and basically recognized and concluded that the work that might be done by another practitioner can vary, and it might not be an assurance engagement as it either defined or referred to in the IAASB standards. So that broadening the term made more sense. So the reference to assurance work was changed to simply work in the definition of another practitioner, and that had a cascading effect in a number of other places throughout the standard. The task force noted that there's not a definition per se of assurance work or audit work in the IAASB standards. Changing it to work, however, is consistent with what was done in the group audit standard. ISO 600 revised has many references now to work instead of audit work for the same reason, that the work that might be done by a component auditor is broader. So just to point out, though, if the practitioner does intend to obtain evidence from the work of another practitioner, you still are required to comply with the requirements in paragraphs 51 to 53 of the standard. unless Villy or Josephine want to come in on this, there's not much more that I can say at this point, because this has not yet been discussed with the IAASB, and we need that board to weigh in on this change in terms of whether they see any implications from that.
Thank you very much, Dan. Any comments from the IESBA board members or questions? Tom, please.
Thank you very much. I'll just come back to the letter from the CI, IOSCO CI, and it says that there is some sort of the definition of the another practitioner is a little bit broader than the only DSR. It means that it's should sufficiently and appropriately involved is in sort of the way IWSB is taking. It's a little bit on principle based and broader. And I understand that in IESBA, it's a little bit more closely related to the DSR. Is that the way of thinking? Or IESBA is also taking the same identical approach with the IWSB? I just want to clarify that. Thank you.
Thank you, Tom. Sylvia, please.
Thank you very much for raising that point. Regarding the alignment between the definitions of sufficiently involved and the DSR, just something that we adopted from the previous version of the ISSA 5000. So we will align the wording, and we plan to use a similar wording that IAASB is currently using. It's just because when we went out with the proposal, that was the wording that was available to coordinate. But there will be further coordination on that matter.
Thank you very much, Sylvia, for clarifying that. And thank you for the question, Tom, so that everything is clear. Any other comments or questions to Dan or to IAASB on this part of their proposals? Well, if not, I think that we are getting to the end of this joint session on coordination. There are, for the time being, no other topics that identified for discussion, which doesn't mean that going forward we will not identify others, but at least I think that we can be confident that the most relevant ones have been identified, tackled, and that we are, I hope, in a good shape to evolve to the next step, next stage, which is to try to coordinate as much as possible. So I'd like to thank Villy, Dan, Josephine for your participation in this meeting, which was really very important because we could be discussing this all alone, but it would not be the same. And above all, I think it's important that we, as much as possible, avoid any kind of information and gaps between the two boards, misunderstandings, and things like that, which are absolutely not necessary, and sometimes also unnecessarily introduce difficulties in our work. So thank you very much for your availability. Very welcome. And of course, you want to stay. If you want to stay for the rest of the meeting, you are very welcome. But I suppose that you have a bit of work to do. So thank you very much. And if I don't see you, I wish you a very good travel to Madrid. And a very successful board. Thank you very much.
Thank you.
So, and on our side, we go back to our housekeeping on sustainability, and there are still other matters, other topics that we should discuss here, which have been already subject to some attention from the task force and the staff regarding some questions and comments raised in the comment letters that we received and in the outreach that we have been doing. So this is the next and last part of this discussion on the analysis of and the preliminary feedback to our consultation. And the next one is on the IOSCO's comment on scope of international independent standards in part 5. And for this, Mark, I think it's your turn. I'll give the floor to you.
Okay, thank you. So if we can go to the next slide, please. So you'll remember we had discussions about the scoping of part 5 and that we came up with criteria that we would use to determine what fell within the scope. And our thinking at the time was that things that weren't caught within the scope of part 5 may be subject to, well, would in any case be subject to part 4B for anyone using the code. But was there going to be a future project that the board would look at to revise part 4B in due course? Anyway, one of the comments that we received that came through IOSCO is that they were fully supportive of what we'd done with part 5 in respect of sustainability assurance engagements, and that we should use a bar which says, let's identify those that have the same level of public interest as an audit of financial statements. So what they questioned is, should we extend the scope of the independent standards in part 5 by having an and or at the end of the different things that we've identified? So previously, we'd said that things should be reported in accordance with a general purpose framework or required to be provided, and they've just sought to say that we should use the and or there because they've argued that any assurance engagement that's required by law or regulation should actually fall within part 5. So, and it shouldn't just be information reported in accordance with a general purpose framework. So previously, we'd identified the criteria. They want us to add and or. So there weren't any other significant concerns, but it would be helpful to get the views of the board really so that we can take account of those in our task force meeting in July. And Andy's smiling, so I think he's already got a question or a comment. Thank you.
Thank you very much, Mark. I'll just add something so that we can have all the information in our minds when discussing this. This is not very different from what we heard, for instance, in Canada, and Ken will correct me if I'm wrong, but there were some concerns which were not that different from this proposal. So it's when it says no significant concerns regarding the proposed scope, but I think that in the outreach that we had some similar, not many, but some similar ideas being conveyed. Andy, please.
So I guess I'm trying to figure out what's going to be left into part 4B then. As I understand, we were leaving in part 4B the notion of a publicly disclosed but entity developed set of criteria, which I don't endorse in any. I mean, I don't think much of entity developed criteria, just like I wouldn't think much of entity developed financial criteria. You know, we develop our own financial statements. That's how we report. So that's my concern, is that last one with the or, that it would be entity developed criteria if it was publicly disclosed. And I think we were keeping that in 4B for a public interest purpose. So that's my concern. That's what I've identified. I don't know what others have identified.
Thank you, Andy. Luigi, please.
I'm struggling in understanding how we would like to achieve with this amendment, because the current the exposure draft definition is reported in accordance with general purpose and one of the two, B or C. Now we are changing, or propose to change to consider all three elements of the same with the same importance. But I don't know, and I wonder whether you have practical example of when we have a law or a regulation requiring a similar assurance performed not under the general purpose framework? Because if it is the case, I'm not sure this amendment is correct in all circumstances.
Well, and I should just say in response to that, Luigi, this isn't a change that we're proposing, and I should have actually asked if we could go to the next slide. This is the communication that we got from IOSCO, and we wanted to test it out and get the board's views before we go down the route of making any change. Like in terms of your question and really Andy's point about entity developed criteria, sometimes I've seen examples of that, but generally in reporting accountant related work or prospectus related work, not in a traditional sort of financial or corporate reporting context.
David, please.
Thank you, Chair. So one of the questions I had, Mark, relative to the proposal is if we put and or, I wondered if it would and should be seen as a hierarchy. So as soon as you meet one, you stop. But if you put and, for example, then you have to meet all three. If you put or, you can meet any one of the three. But then is it a hierarchy where if you meet one, you stop because you're in? If you don't meet one, then you go to two. If you're in two, you stop. And if you don't, then you go to three. So I think it's maybe thinking through, is it a hierarchy and then you stop? Or is it optional and a choice? That was what went through my mind.
I think it's a very good question. Mark, if you could, sorry, Sylvia.
So we have, just to clarify, I think IOSCO's comment was not focusing on the proposal, is that all assurance engagement that was required in accordance with laws and regulation, irrespective whether if it's a general purpose framework or not, should fall under part 5. So the focus is on the national laws and regulation and not on the type of the sustainability reporting framework.
So I think that
clarifies their intent.
I think so, and I think that we should focus first on the proposal, on the substance of the proposal from IOSCO, which is include all the sustainability engagements over sustainability information, which are required to be provided in accordance with the law and regulation inside Part 5, irrespective of whether the information is reported in accordance to a general purpose report or not. So the objective of this proposal, as I see it, is every time that it is required by law and regulations should be covered by the same independence requirements which are in Part 5. And that, I think that is the question. And then if yes or no, then we will see how it reflects in our proposal or in how it is drafted, etc. So I would separate the drafting and the response to the substance of the proposal of IOSCO's proposal. Rich, please.
Yes, I have this similar concern that it's not clear to me what's left in 4B. It's also not clear what, the other part of our definition said that if it was just for information between parties, and I'm not saying this very well, Mark, but we had that caveat that said it didn't apply if it was just you're satisfying a contractual requirement. Secondly, I'm a little worried about we've probably not had enough time to think about unintended consequences and how that fits in with our general model relative to other assurance work, because there are things that assurance is provided on that the requirement to disclose it and have assurance unrelated to sustainability, I think, is currently covered by 4B, and even though it's required by law and regulation. And so we seem to be, there may be an inconsistency and an elevation here. And so I wonder, I'm just worried that this is gonna raise questions about why we don't require the equivalent of Part 5 level independence for all assurance work. And I think particularly as relates to things required by law and regulation, which there's a growing number of those, I think we see out there in the marketplace. So those are a couple thoughts. Thank you.
Rich, that question has been raised already a few times, and in the many outreach meetings, that question pops up sometimes, and it comes with I'm afraid with the fear that we are not covering sufficiently the realities and etc. Of course, we have the argument, which is true, that we could not do everything at the same time, and that we decided to cover part 4B, whatever it means, at a later stage, and that's what we are going to do. What is being proposed here, as far as I understand, is a small step which would allow what we are doing now to be a little bit more comprehensive and introduce less cuts, so to speak, in the design of the scope without touching upon the decision that we made, which was not to include things that were currently included in part 4B or voluntary or whatever. It's a small step. And I'd like the board to think, I mean, of course, about the consequences that may have, but also if it may help with the clarity of the scope, which I must say sometimes has also been subject to some comments in at least in outreach. I'd really like to hear from the board in a very open way what this brings you. Amarjit, please.
Thanks. So I'm also struggling with what IESBA is suggesting. If we go this path, then it would lead to a situation where sustainability information, which is prepared in accordance with general purpose framework, there the standards would be applicable irrespective of the B or C, the publicly disclosed information or the requirement of law. So I think that's not a very ideal place to my mind. I would probably put B as A and take A down, and B should be more defining, more clear requirement that this is not negotiable. So not a very happy spot to my mind.
So if I may ask you, Amarjit, with that change, you would be suggesting that whenever it is required by laws and regulations, it should be covered by part 5.
Yes, so I would put that first, and I would say or, and then I'll put A goes to B and C remains where it is. So
okay,
I don't know if it makes sense, but yeah.
Okay, yeah, I mean, it's not only a change of the order, it's really going into the direction that is being suggested by IESBA, as far as I understand.
No. So I think I should make it clear. So what IESBA is suggesting, A is enough. I mean, if you look at this box, and B and C may not be there, just A is enough. So I'm not sure if you want to be there. I'm not very comfortable. So I would probably put B, I will take B to A, and then say or, and bring A in place of B. And remove or after B. I don't know. I can maybe draft it and circulate. So
I might suggest again that we discuss the substance of the proposal, and the substance of the proposal from IESBA is everything that whenever it is required by law and regulation, it's covered by part 5. I think this is what IESBA is suggesting.
If you read the comments, let's forget the drafting for a bit. So there the emphasis seems to be more on the public interest, and so if you go by that, that is not really captured in the drafting here. So public interest has to precede everything else.
But the problem, well, maybe is it me? But I think that the problem that IESBA is seeing here, as far as I understand, is that there can be situations where even if the information is required by laws and regulations, if it's not reported in accordance to a general purpose framework, then it's not covered by part 5. This is what IOSCO is trying to address, I think, broadening the scope to cover everything that is covered by laws and regulations, irrespective of if it's reported in accordance to a general purpose framework or not. Am I seeing well? Do you read IOSCO's proposal as I do, or no?
No, the wording doesn't work with the insertion of the and or, because essentially all you need is just or. The and is completely non-operative.
But yeah, but I was not focusing on the draft.
No, but it does create a problem here, because if you just take the first one, for example, the potential unintended consequences, even for companies that prepare system information according to the general purpose framework for restricted distribution, would be caught under Part 5. And would that be in the public interest? One could argue that that could be a disincentive for companies to call for assurance on that type of information, because you know the cost of it, etc. And equally under bullet C, publicly disclosed to support decision making by investors. Well, it could be information that's prepared in accordance with entity design criteria. That's not part of any kind of due process, but yet we are going to bring that type of assurance engagement within the scope of Part 5. And again, is that in the public interest when you know, even the basis for this the reporting framework might be questionable. So I think there are a number of issues that I see with the formulation of the scoping. But to Gabriela's point, I think it's important to first and foremost know what it is that this board would like to scope in from a public interest perspective. Then that will drive the articulation of the scoping.
Okay, so let's restart. Christelle, please.
I was wondering why, if there is a law and regulation expressed somewhere, which is not driven by a general purpose framework, why it should not on its own say what are the independence requirements that they want in their market. Because on the other side, putting that as a principle, we include a lot of, I don't know, certification type of, because, well, if it's not a general purpose assurance framework or reporting framework, then it can be a lot of things, right? Required by law for a lot of reasons, and published in a lot of circumstances and kinds of support. So it seems a very broad increase of coverage. And as Rich, I think, just said, meaning that we would treat sustainability information in a way which is more stringent than the financial information, which seems a little bit weird, just apparently maybe, but so I understand that IOSCO is asking in the public interest that the information that is published required by law and subject to some kind of assurance or certification or whatever, it would be more satisfying, securing, give more confidence if the independent requirements are at the highest level. But I would argue that if it's so important, it should be required by law. Because if we ask that for all kinds of whatever circumstances, I think we go further our initial thought, which was same level as audit, not stringent, more stringent than audit when it's not an audit, or audit level when it's not an audit, if I'm clear.
I think that the idea, and I'm sorry for insisting, but I'm trying to understand what is behind this proposal, and I have not had any conversations with anyone, so I'm just guessing. But from putting myself on the shoes of who made the proposal, I think that a few things may be behind this proposal, and one of them is assuming that if the laws and regulations are requiring to provide sustainability information according to laws and regulations, is that because it is sufficiently important to make sure that this information is covered by the most robust ethical and independent standards. If there is a legal requirement, then it's because the legislator said, okay, this is very important for investor protection, so we need to require that information, and therefore we need the infrastructure to be all in place. Because otherwise, and I'm thinking as I'm speaking, we'll have a framework for assurance, for instance, which covers everything, and then we'll have only part of that, a very small part of that covered by the ethics and independent standards. It is already true because we don't cover voluntary and they cover voluntary. It's going to come, okay, it's a phased approach, but without both things, it can look very short. So again, I'm just guessing and trying not to miss anything and not to be stuck into the technical things and try to understand from the objective what it means, so that so that we can discuss and see what's the preferred approach.
But then there should be a little bit more work to assess what kind of circumstances we would capture, and do we agree that these circumstances have their place applying Part 5? Because we have that recommendation, so to apply it voluntarily or whatever, or by consistency, etc. So I don't capture right now what kind of circumstances you might ask in law, one or two indicators, for example, for an industry, a local industry, and it is not based on a general reporting framework. And it's, but you want to have the same level of independence, and an assurance type of work. That's the circumstances.
I don't know. Yes. I'm not even sure that the general purpose framework, in terms of practical terms, means the same thing that in financial information, because we are in the start of this process of reporting sustainability information. So it's natural that there are different frameworks for very, very different specific situations which can possibly not be brought into the same concept of framework. But again, I'm speculating around this, the reason for this proposal, and trying not to miss anything. Okay.
Imogen, would you turn off your mic? Or the other one? Thank you.
Okay, Laurie, please.
I think I have a question more than a statement when I read this. Are we saying that if you do a sustainability assurance engagement over sustainability information, and somewhere over here you did tax information, which is not part of the sustainability information being assured, you'd still have to be independent with regard to the tax work, even though it's not a self-review threat because it's not a financial audit. I mean, you could be looking at anything, environmental issues. Is that what this says? No.
If I can, and we do try to answer that one in the next slides. What my concern was in respect of this proposal was almost the fact that a requirement to provide information by law or regulation trumps everything else. Quite often you can have a requirement that's in law or regulation that specifies that something has to be done, but doesn't specify how it is done. So that goes back to Andy's point about there is a risk if you say, we require you to provide, report on your emissions, but it doesn't say the framework that you use or how you do it. So then you run the risk that it allows the entity to develop its own criteria. And those criteria bring with it the risk of effectively greenwashing, because you can say without a framework, the information is not consistent and not comparable. And there could be an element of bias within that. So from my perspective, that's why we put in the overriding requirement that the information should be prepared in accordance with a general purpose framework from the outset, because there could be incomplete frameworks or entity developed frameworks or inconsistent ways of reporting that actually is poor in terms of what it does from a public interest perspective. But if someone's arguing it's subject to the same level of independence and other things, I think it runs the risk of obscuring. So, and again, from a personal point of view, not with a task force chair hat on, I don't support IOSCO's comments at all. I think we should very clearly stick with the general purpose framework as the driver. And, we still have the option to do something later on under Part 4B.
I'll listen to the others. Rania, please.
Thanks, Mark. So that was really very helpful in terms of, understanding really the issue. But I think I certainly appreciate what you just said, and I think that's a very important risk. But wouldn't that or shouldn't that be addressed within the assurance or the assurance requirements or the assurance standards to make sure that the assurer or the practitioner is comfortable with the criteria or the framework against which they are providing their opinion? So just
you are, I think from memory, Rania, yes, but there's no secure route through that. So one of the preconditions for applying ISSA 5000 requires there to be a reporting framework for you to be able to satisfy yourself that you're being asked to assure information that is consistently prepared to appropriate criteria. However, if you choose not to assure in accordance with ISSA 5000 and you're using a different route, then in theory, you could still run up with a situation where somebody is asked to assure information that has not been prepared in accordance with an established or general purpose framework. And therefore, from a public interest perspective, you've got a concern that you've got poorer quality information or information that contains bias or something else or doesn't give a full picture, that then runs the risk of being obscured because you said, well, it's actually been subject to assurance by someone who meets Part 5 of the code, so it must be all right. Well, actually, the basic product was flawed, and the way in which it was, the criteria that someone chose or someone was asked to use to assure it were flawed, but you use this as a way of trumping that.
I'm sorry, Mark, but we have to discuss this further, but I'm getting a little bit concerned with these arguments about what are we going to do with Part 4B, because if this is true for situations where the law requires information, which for me makes it sure that it is in the public interest because the law does not require sustainability information for any other purposes than for the public interest, then all those arguments would be valid for voluntary frameworks. So we can not go in this direction for many reasons, but I would not refuse or put aside the value of having these situations covered, because otherwise it seems we stop here and we can't move forward with anything else but anything that is report it according to a general purpose framework. And I'm sure that it's not what we want to do. Plus, again, I will recall you that ISA 5000 covers all the assurance reports, irrespective if they are mandatory, voluntary, based on a general purpose framework or whatever. So there will be, in any case, an assurance framework on which this could rely. Again, I don't want to go in any specific direction, but I think that this is the kind of comment and suggestion that we have to address in a broader, having a broader understanding and bringing into the discussion a lot of issues, not only the technical ones. Christelle, I think that you still want to. Sonam, please.
Thank you. I heard in response to Mark's framework or rationale for putting A being general purpose framework, putting at the top. I believe when the law or regulation has a requirement to provide information in accordance with the law or regulation, I believe in most cases, the law or regulation will be very specific about the purpose or objective to publish. And also it will be specific about framework to be used and applied. So I support the proposal moving the current B at the top and then A and C later on. This, thank you.
Thank you, Sonam. Sadia, please.
I note that this was advice for the task force and how they take this forward. I would be interested to know if anyone else made similar comments on the scope and what nature of the comments on scope was going to come through. This shouldn't sway our judgment, but this seems like a substantive amendment. Changing the scope of the exposure draft when everyone was reading it in one way, and now we might be changing it, does concern me that people might not have identified unintended consequences of this.
Okay, thank you for your comment, Sadia. Luigi, please.
Yeah, thank you. And then worried and concerned about this extension because we don't know what and how large is what we are scoping in. There are many reasons that we see nowadays for which laws and regulation require information to be with some sort of comfort. I would not call them necessarily assurance or audit. And some of them, or most of them, has nothing to do with the public interest, basically, because they are not directed to those that need to take investment decision or for other reasons that represent the public interest. So simply considering a request, including the law regulation, the reason why we need to apply the highest approach in order to protect an assumed public interest, I don't think it is probably the right way to deal with this matter. If we would like to consider this point, probably we need to do some more in-depth research and analysis in order to make sure that we do not have unintended consequences in these terms. And probably it should be scoped in a way that we do not scope in inadvertently too many unimportant type of engagements that there is no reason to include in this way. I have no practical example to propose, and I don't know whether someone has now this example to explain why in these specific circumstances is required. But on the basis of my experience, when legislator or lawmaking decided to impose certain treatment. They did in the law or in the regulation or in the application of the implementation of this regulation and law. And this is scoped and included into the exposure draft, because there is a following paragraph stating that it is not only the general purpose framework and the other characteristics, but it is where a specific law or regulation clearly state that a specific engagement should be treated as in this way. So I don't think it is an incomplete approach. And if there are reasons to change the scope, I think that they should be supported by research and by evidence. Also considering that I agree with what it was said before, it would be a significant change. So we need to be careful about the potential consequences.
Yeah, I see that argument as possibly irrelevant, but let's see. David Ray, please.
Thank you. So one of the things that went through my mind as I was reading this was two things. One is the source and thinking about what their mandate is, which is markets. So when we think about the application of Part 5, part of what I was reflecting on is the scope of what they would be looking to protect in the public interest would be publicly traded companies and potentially some PIEs. So back to the point that Andy made a little bit earlier, I could then see quite a large population not being subject to that scope because they're not publicly traded, or they would be on other markets not necessarily covered by IESBA. So I think there is space for the two. That said, I think it's an interesting question around whether or not we would add more confusion by taking an approach like this and potentially having some industries, some companies fall under one, other companies fall under another one. And would that become confusing to the assurance profession when they were looking at application? Could you have disputes in reality? Because there could be debates around what's scoped in 4B versus what's scoped in Part 5. And I think to the point that Luigi made, and I agree with him wholeheartedly, I think there needs to be some assessment for what's the population, what population would fall into Part 5, what would fall into Part B, what would the consequences of something like that be? Could it have an effect that was unintended? I have to be honest, I'm less troubled with the comment about provided by or in accordance with law and regulation, because to me that's a given. It's not even a debate. So it's more about the application beyond the law, because the law will be prescriptive by definition. So those were some of the reflections I had, was just the source, their mandate, and then that naturally would lead to some in 4B, some in 5, but then will that cause other issues or potential confusion in application? So those would be my thoughts.
Thank you, David. Chana, please.
So I go back to the point where we started in terms of the equivalence of the financial statement auditor and the sustainability assurance information. So when I go to that, I think what we have got in the ED works. Laws and regulations could say, if I compare to the financial statements, that you should prepare special purpose financial statements and lodge it with the regulator. So that's not the same as general purpose financial statements. So just because the law says, I'm not convinced that, like Luigi said, that in each instance that there's public interest in it. So I'm comfortable those that are not in accordance with a general purpose framework to go to 4B. I think the way it is, it's fine, because I agree with Mark, because the first hook is the general purpose framework, right? B and C, it has to be a or. It can never be joined by and. I can't sort of see the situation where it's an and. So I'm sort of going back to the original ED, and unless, as David sort of said, can we, and Luigi said, can IOSCO show us what we are not capturing, do we need to capture now, right? What are the ones we are missing that they want us to capture now? So if we have an understanding of that, then maybe we can revisit it.
Okay, Chana, Tomoyo, please.
Thank you, Chair. So I think maybe we have to assume, but we have to be clear what is the intention of this proposal, whether it is to include those specific purpose framework and required by laws and regulation, or whether the 4B scope is too broad and some have to be in 5. If the former case is the purpose, then this change is a bit is a bit too big change. Maybe there will be unintended consequence. So maybe like change A with a general purpose / specific purpose framework, or some kind of change if the purpose is to more include the specific purpose framework which is required in the laws and regulation. I think there's another way to change the wording, but this some people think that it is to just broaden 5 and narrow 4B. So I think we need to consider that. Thank you.
Thank you, Tomoyo. Ken, please. I don't think we have anyone else. Ken, please.
Yes, thank you, Gabriela. I do have a lot of sympathy for a number of concerns that have been raised around the table. I'm particularly concerned about the potential for unintended consequences with inserting the broad provision hooked into law regulation without really understanding the purpose of the particular law regulation in requiring the particular sustainability reporting. And I was trying to come up with an example. I mean, it may be that in a jurisdiction, the law requires every company in that jurisdiction, no matter the size of the company, to report in accordance with a KPI that's related to occupational health and safety. Maybe it's every company has to report whether it does mandatory maintenance of its heating systems, let's say, and there's a report that's required in accordance with that particular law, and every company has to do that. And if that particular law regulation deems it so important that the information be credible and trustworthy, one would presume that the law or regulation itself would specify what type of assurance is needed. That's reasonable limited assurance. But importantly, this board then will need to make a determination as to whether the information that's being reported is in the public interest, because then the code needs to specify whether the engagement would be within Part 5 or Part 4B, because otherwise, by default, it's going to be all captured within Part 5, and would that be in the public interest? Because essentially, you're going to increase the cost of the engagement. Maybe entities might not be even able to find assurance providers because there's going to be limitations as to firms that might be available or being able to carry out these engagements because of restrictions under Part 5, etc. So yeah, there's a lot of unknowns and there are potential uncertainties. And again, this is so broad that we just have to be very cautious.
Okay, I don't see anyone else, so it's clear that the board doesn't support this proposal, and that so it will not subject to changes as far as I understand, and I think that sorry.
And we go back to your scope to see if there were some specific intention, because this is very broadly
Yes, I think it was
expressed.
it was a suggestion from some of you, but and from myself. But I don't think I'm not sure that we have time to.
We're going back to Committee 1. In fact, next week, right now we'll be in Montreal engaging with Committee 1, so we will certainly raise this with them.
Okay, Tom, please.
Just a clarification. It's not a decision of the board not to adopt this suggestion, but as Christelle suggested, we need some sort of what is the particular concern they have for the IOSCO. So there might be some sort of way to deal with this. So this is the understanding we are sharing.
Okay, thank you very much, Tom. And yes, certainly we will connect with IOSCO C1 next week, and we'll see if there is anything that we are missing and that can be easily solved or slightly tweaked or etc. Or anything else to address a little bit their concerns. But I think that most importantly, we need to understand exactly what is the concern and what are exactly the situations that IOSCO would like to see covered beyond what is being proposed at IESA. Okay. Tom, do you still want to speak? Oh, okay, thank you very much. So I think that this is the end of this conversation and this initial discussion on the first preliminary feedback that we could get from the responses. This is work in progress, so it doesn't mean that we have this, what we have discussed here today is the final discussion, not at all. Sorry? Yeah, sorry. Oh, I thought we, sorry, I was, okay, sorry, I was missing that. I was thinking that we were moving to the benchmark. Very sorry. I did not want to preclude any discussion. Okay, you're right. So, Mark, is it you or Sylvia or?
I'll cover non-assurance services, and then I'm going to hand over to.
Okay. Thank you.
I think Christelle on Laura on the final one. So if we can just move on to the next slide, please. You'll remember when we discussed the NAS provisions in part 5, what we'd sought to do is mirror the NAS requirements in part 4A. And we did that because we said we wanted an equivalent approach to the requirements that apply in an audit of financial statements. The work stream sort of continues to believe that that's the right approach for us to take, but a number of respondents to the consultation said that as a result, the NAS section was quite long and quite complex, particularly for non-PAs, although the caveat to that is quite often it was PAs telling us it was long and complex for the non-PAs to apply. We will give further thought when we meet in June as to whether or not we can do anything here to try and make it cleaner and perhaps a little shorter. But we don't want to be in a position where we're accused of going away from the equivalence that we'd sought to put in the exposure draft and which we'd held as quite a high bar. So if in doing that, some people raised particular questions about if you were a sustainability assurance provider, some of the non-audit services that we refer to, you're unlikely to provide. And I agree to that. But if you are a very large global provider, and an example might be, for instance, the likes of an Accenture, that a company of that size has the capability and capacity to perhaps provide a broader range of services than some of the more boutique ones. So we need to think about that. And what we're also asked to look at is, because we draw on the terminology from part 4A, some of the language there is quite profession focused and less agnostic. But if we can just move on to the next slide, just so I can ask the question of the board. Like, firstly, is the board happy that we continue to keep the NAS provisions in part 5 equivalent to part 4A, and that obviously we would look to make any refinements that we could bring back to the board if we decide we can do that while maintaining that equivalence? So that's all I wanted to say on that one.
Thank you very much, Mark. Comments? Laurie, please.
This is the question I was asking. And I think I don't have my head wrapped around this, but if we're talking about sustainability and there are services that firms perform that are outside of that space, the self-reliance threat, the issues that would be raised that require independence might not be there. So I think the list needs to be looked at, but I mean, that's just a thought. I would ask that be thought about, because they're not the same types of services. Those are not financial statement audits, and could in fact be very far off from anything related to the financial statements. So I hope that makes sense. Yeah. Okay.
Thank you, Laurie. David, please.
Thank you, Chair. So I think to answer your question, Mark, I am actually broadly okay with keeping them consistent. If we have differences to Laurie's suggestion and point, I'm okay with that too, as long as we're clear about why they need to be different. So absent a real clear reason to be different, I would suggest consistency is probably more helpful than less.
Thank you, David. Luigi, please.
Yeah, thank you. I think that at least an exercise of considering the relevance of all of these very long part would let's say would be something to consider, because at the end I don't think there is nothing that could jeopardize completely Part 5. I believe that, but it is really more complex than needed, at least for in certain parts. So probably just to say that an exercise to check relevance of all these parts may be something to consider in order to make it easier to apply for everyone. I'm not saying for a group or another group, for everyone, because the matter is pretty complicated per se. Part 5 will not be an easy job for anyone. And if we are able to simplify a bit and considering what it is really needed and relevant for this type of work and these type of activities, I think we will do a very good service to everyone.
Thank you very much, Luigi. Laurie, do you still want to? Thank you. Rich, please.
Thank you. I think when we set out for this, we looked at, well, first of all, I thought we did this because if you look at, for example, some of the things in bookkeeping and a couple other places, we already made adjustments to allow things that would not have been allowed for the financial statement audit. But I think what I was coming back to is we are expressing an opinion, this relates to independence for assurance provider, expressing an opinion of reasonable assurance at one level, and all of the threats, the threats under the code and the fundamental principles are applied, and therefore I don't think we need to revisit what's in 601 to 610 in any extensive way, because I think we've went through that and concluded that if you are expected to provide a reasonable assurance level opinion, you're expected to be independent, and we already have set those standards as to what that entails and the risks and threats that have to be addressed. So I would be along the lines of leaving it largely where it is, absent some very specific example or something that somebody can identify. Thank you.
Thank you very much, Rich. Sadia, please.
The task force has a lot of things to do, and I'm not sure if this is one of the areas that you should be spending a lot of time. I don't think people would have said, we support this and it needs to stay in for each one of them. So the absence of someone staying silent of this shouldn't be an indication that it's not needed. I did read the comment that it should be more focused on examples for sustainability reporting, and I think that should be the focus of the revisions to NAS.
Thank you, Sadia. Anyone else? Tomoyo, please.
Yes, as Sadia mentioned, I think we need some examples, but not the change is not required. Thank you.
Thank you, Tomoyo. Mark, back to you.
Thank you. We'll reflect on those when we meet in July. I'll hand over to Laura now for the final piece of this jigsaw.
Thank you. So I'm going to briefly go through some of the comments that we received regarding our proposed requirement for the sustainability assurance practitioner and the auditor to consider communicating
instances of non-compliance with laws and regulations with each other. And I would draw everyone's attention to that little box on the corner of the slide, because this is just a preliminary analysis and based on a sample of comment letters that were read so far. Even though this sample tried to be inclusive and included regulators and big six firms and public sector organizations, investors, preparers, etc., but it's still a sample, and the analysis is far from complete. And so in terms of the feedback that we received, the majority feedback was the general support for the ED proposal of requiring these two practitioners to consider communicating with each other. There were some dissenting views, and this slide shows the first one. This first view was supported mostly by regulators, including IOSCO. And it's a suggestion to reinforce the requirement that we have in the ED, instead of considering communication, to actually requiring communication with each other. This would be, per IOSCO's suggestion, subject to the entity's permission, preferably in writing. And the reason to suggest this change is that the mere consideration to communicate might lead to an inconsistent interpretation, because the practitioners, depending on the situations, some could decide to communicate and others wouldn't. So another dissenting view is the one on this slide. This one was also proposed by a regulator. So there is a support for the requirement for the sustainability assurance practitioner to consider communication, but not for the auditor to consider communication with the sustainability assurance practitioner. And the reason for this position is that basically the sustainability assurance practitioners might not be as regulated and subject to oversight as auditors. And so any communication that the auditor makes to the sustainability assurance practitioner might not be covered by confidentiality, professional confidentiality, etc. And so there would be a risk of breach of these kind of duties. The final third and fourth dissenting views is no support for the requirement when the practitioners are in different firms or network firms, or even no support at all for a requirement to consider communication NOCLAR. And the reasons for these views, it's because these respondents understand that it's the responsibility of management and those charged with governance to communicate the NOCLAR situation to the auditor or the sustainability assurance practitioner, or because local confidentiality laws may prohibit such communications. Even though in respect of this last argument, I think it's important to point out that the requirement to consider communication that was proposed in the ED was also accompanied by a list of factors for consideration, and the first factor was whether the local laws prohibited such communication. So that was something that was already covered in the proposal. And these respondents make some alternative suggestions, just to turn the requirements into application material, or just have the practitioners to confirm with management and those charged with governance that they will communicate the NOCLAR to the other practitioner. And so in view of the general support that was shown to the ED proposal and the other dissenting views, the workstream 2 has discussed a possible alternative to what was proposed in the ED, and that proposal is twofold. So on the one hand, we could turn the requirement to consider communication into a requirement to communicate, so to reinforce what we currently have in the ED, when the practitioners belong to the same firm. And this would be caveated by, unless that is prohibited by laws and regulations, of course. And it would be done according to the firm procedures. And then the second part would be to retain the requirement to consider communication when the practitioners belong to the same network firm or they belong to different firms or network firms. And in this case, we would retain the list of factors for consideration, of course, subject to analysis of other comments that we have received regarding that list. So why is Workstream 2 proposing this solution? Because on the one hand, it considers the mixed views that we read so far, and this would be a halfway solution between the first view that suggests one of the extremes, which is requiring communication in every scenario. So whether they belong to the same firm, to the same network firm, or different firms or network firms. And so this is one extreme, and view 4, as we saw, would be the other extreme of not having a requirement at all. The second argument is that there are practical challenges with simply requiring communication. If the practitioners are in different firms or network firms, it might not be easy to make that communication. And the third reason is that this approach is aligned with the Accent Code when the professional accountant is providing a non-audit service, and he identifies no CLAR and then communicates with the auditor. It's the same structure. So the code currently requires communication when they both belong to the same firm, and only requires consideration to communicate when the accountants belong to the same network firm or are in different firms or network firms. Then we also read some comments regarding practical challenges with our EDU proposal. And one of them is that some respondents pointed out that there is a risk of inconsistent reporting to management or those charged with governance, or an inconsistent determination of whether to disclose to the appropriate authority if the practitioners are in different firms or network firms. And this could happen basically because the no-CLAR regime has a series of actions that should be performed by the accountant in part 3 and by the sustainability assurance practitioner in new part 5. For instance, they need to obtain an understanding of the matter with the management of or those charged with governance. They should address the matter together with management, and depending on the appropriateness of the response of management, they should also determine whether further action is necessary. And this may include communication to the relevant authorities. And the code currently sets out these actions to be taken both by the accountant in part 3, the auditor, and the sustainability assurance practitioner in part 5. And if they are not the same person or the same entity, and if they belong to different firms or different network firms, then the point that is made by this respondent is that there could be inconsistent or duplicated compliance with the code by 2 different people who have the same information because they communicated with each other. And so the Workstream 2 preliminary proposal in this case or regarding this comment would be to add application material clarifying that the purpose of the communication is also for the practitioners to agree on who is primarily responsible for the actions that are related to the no-CLAR regime, if necessary going forward. And then finally, we have also a suggestion made by one respondent to extend the no-CLAR provisions in part 5 to also cover the value chain entities. And their suggestion is to make this happen when this is relevant for the purpose of ultimately assessing the compliance of the value chain related disclosure of the entity with applicable sustainability reporting requirements. So the Workstream 2 also analyzed this proposal, and the preliminary suggestion is to retain the proposed scope of NOCLAR, which excludes value chain entities. So it would be not to accept this suggestion. And why? Because firstly, this condition suggested by the respondents seems relatively complex and may create practical difficulties. We already have in the ED an indication in Part 5 that the NOCLAR provisions might be helpful when the practitioner is dealing with non-compliance in the value chain. So even though it's outside scope, the same provisions might be applied voluntarily. And the workstream also recognized the benefits of a phased approach, which was something that was supported by respondents regarding the IESA in general, not only in terms of NOCLAR, but the whole Part 5, which is basically to start with a simpler approach and then build on it with time as the market evolves. And I would stop here for comments or questions regarding these proposals.
Thank you very much, Laura. This is an important topic. Let's see how the members want to address it. David, please.
Thank you, Chair. Thank you, Laura, for walking through that. It was really interesting. So if we go back to the first part, when you talked about the hybrid response to the views that were shared, I think I love the creativity that the work group has come up with to really try to balance off the two perspectives. I had two concerns, though, with it. One is that when you think about, or at least when I think about the purpose of NOCLAR, it's about dealing with non-compliance with laws and regulations. Why should the bar be different if it happens to be within a member firm versus between firms? Because if it's really about protecting the public interest, I struggled with that idea of that you would have a different threshold requirement if it's within one firm or one network firm versus between two. I suspect we'll see very quickly that practitioners will just start to move to two firms as a way to deal with that. But that will also cause friction because it will mean higher assurance costs for them, which is already a friction point for the for industry with respect to having one assurance firm versus two or multiple. So just some thought around what is the objective when we think about public interest we're really trying to address, and does this address that? But then to the unintended consequences for how industry, which is the group that ultimately has to deal with this, how they'll end up responding, and the cost envelope for them around this work, because it's already going up, and how they might respond to that, because two firms will inevitably result in higher assurance costs. So that was just on that one point. If we jump to the second one, because I just have a couple of things, and you don't need to respond, but it's just something to think about. So on this particular one, so this is the risk of inconsistent. Oh, yes, that's right. So I think on this one, again, just going back again to the whole idea of kind of crossing through and looking at what the responsibility is to disclose and ultimately, you know, how we end up dealing with it. I think it comes down to ultimately, the firm has a responsibility ultimately, and the firm being, let me step back because I know I use the word firm to mean company as opposed to one of the assurance or consulting practitioners. But when I think about a company, ultimately they have responsibility. The assurance practice and profession has a professional responsibility to make sure that they're addressing, again, in the public interest, these things that are broadly accepted as being reasonable. So I think there's always going to be a tension in my mind between those two things. And I didn't have a strong view as to what your proposal was in terms of it being, you know, good or not good. I think it's just something to be aware of in terms of this tension that exists and how, again, are we addressing it? So I'll jump to the last one where I did have a stronger view. And this is about the value chain. This one I think is really tricky. I think when we get into value chain, as we've seen, and certainly the outreach that I did within the CFO community, they're already struggling with how to think about the value chain in general. And I think we've all heard that over the last, you know, couple of board meetings that we've had. So in this one, I think in practice, it's going to be very hard to implement it in a way that's meaningful and that will ultimately lead. So I think here, I totally agree with the comments about it being practically difficult. It feels to me like, again, if we kind of go back and look at it, the profession as a whole, so both the company and the profession as a whole has to get comfortable with what it's putting out there. And I think if we start to extend the scope well beyond a range and we start to go out 2, 3, 4, 5 layers, and some industries could go even further than that, I think it's going to end up being a really significant burden, even if it's transitioned in. And it might need some time to embed and other solutions come up, technology and other things that help make this process easier. So this might be something to really think about, because I can see this being really quite tricky. So those would be my thoughts just to think about.
Thank you, David. But here in this last slide, you agree with the workstream 2 proposal, which is to right? Yes. Okay.
Yes.
Okay.
Don't make it more complicated.
Okay.
Yes.
Okay. Thank you, Laurie.
Yeah, I'm reminded of those wonderful NoCLAR days when we were all trying to figure out how to come up with a pragmatic approach. And I think we landed, you know, as a profession, as a standard setter in a workable place. I agree with this value chain thing, with the exception is, as an auditor, if someone tells you about something as an assurance provider in the value chain, you're on notice. So you don't get to say, oh, value chain excluded, because once you hear it, you know something. And so I think then the obligation kicks in your role as the group assurance provider, whatever that is. So I just think we need to be careful when we say exclude value chain. If we hear about something in the value chain, you're going to have to do something, because the whole question of NoCLAR was, why didn't the dog bark during the financial issues back in 2007, 2008? And I just, so when I go back, and by the way, I agree with David's comments about NoCLAR's was very complicated. It took a long time to bed down, as we know. We want to preserve that obligation. When I look at, if we go back to the original slide, the bits that are, if you're in the same firm versus not, I totally get those, because look, the reality is there are legal prohibitions around moving data to different legal entities. So I think, Laura, that's what this is about, right? Like if you're in the same firm, there would be an expectation that you'd tap the guy or gal down the hall on the shoulder and say, hey, I saw something really bad, or I heard something really bad. Whereas when you become more attenuated across a network or a different firm, so this makes sense to me, as long as we can keep it as simple as possible in the articulation and the way we draft it. So I'm supportive. Simplicity is good here.
So you are supportive of the workstream 2 proposals?
Yeah.
Even if you share some concern about the last one.
I just want to be careful that we.
What happens when the dog barks? You hear the dog.
If you hear the dog, you need to do something. You know, if you're an assurance provider, I think you, in the spirit of NoCLAR, you need to do something. Now, does that mean if you haven't heard something, do you need to go looking way down the value chain? I don't think so, but I mean, once you agree with that, David? Yeah. Okay, good.
Okay, thank you, Laurie. Sadia, please.
So I noted one of these comments we're from a regulator, and I think that we need to be mindful that the regulatory environment for sustainability assurance providers is very different than the regulatory environment for auditors when we introduce NoCLAR. And with that in mind, I think that the task group proposal is one of balance that will allow for something that works in the now, while regulatory environments and legislation changes to accommodate something we would want to allow for sharing of information that's in the public interest. I think that will allow for a fairer framework rather than requiring certain individuals to have a higher requirement and not being applied consistently in a jurisdiction. I'll refrain comment on the value chain entities, because I think we'll have to see how it works when it's drafted and what's the requirement on it. The other one relating to those charged with governance, am I correct in saying that's actually an amendment that the IAASB was taking on board because of the provisions we've made, and that would be captured in the IAASB standards? Consequential amendment.
I believe that the IAASB will be including provisions for the communication in general between the practitioners and management as well, but not necessarily on nuclear, I think.
Okay. Thank you, Sadia and Laura. Amarjit, please.
So, here I agree with IESCO's comments completely. There is a need to strengthen the communication, and I think I'm not very clear as to why we should not have the information exchange, even if the firms are different and the networks are different. Unless there are very strong reasons, we should go down that path. Otherwise, I guess, otherwise the whole purpose on a substantive side, in terms of risk assessment by one set of auditors based on the information received from other set of auditors, risk assessment and risk disclosure from the company's point of view would be completely lost. So unless there are very strong reasons for not insisting when there's two different networks of firms, or maybe we can find some way around that based on some mutual consent basis, or I'm not very sure of that. I'm not very familiar with what are the practical constraints there, but I think we should have that objective where information is exchanged in all situations. So that is one. Second is on the value chain. I agree. I think we should have a phased approach. While the non-compliance of laws at the value chain level may have significant impact on the company, but there are practical issues, and I guess I agree with the recommendation that we may have a phased approach on that. Yeah, thank you.
Thank you, Amarjit. Yohai, please.
Thank you, Chair. I'd like to make a comment here. Our initial thought was that so now I support the direction for the task force proposal, and my concern was the constant communication was interpreted as optional requirement, and consistent practice is not to be made. So the requiring the communication is a good way. And the point here is it might be a good idea to consider provision that the same level of assurance should be provided whether the SAP and whether from the same firm or different firms. Thank you.
Thank you, Yohai. So Amarjit, do you still want to speak? Chana, please.
Just going back to Amarjit's point, I think when you look at the list of factors to consider, you can come to the same position, isn't it? So unless there's some restriction in law or regulation, you could end up with the same position where you are communicating with the other party, but you have certain things to consider. And to Laurie's point, if it's the same firm, then it doesn't matter because it's already in the same system. So I don't think you could come to the same position either way, isn't it?
Yeah, it can be. It's just what I understand is from the comments from regulators is that it might not be, meaning that you considered, but as it is not a requirement, full stop. Yeah.
Yeah.
But I would argue that it would be a very bad reasoning, because if you make all the if you follow all the provisions, so you have identified, you have analyzed, you've discussed with those charged with governance, and you have no prohibition from law, etc., and you stop there, and then you don't make a follow-up with those charged with governance to get their answer. What did they do with the information? Did they cure? Did they communicate with their auditors? Did they communicate with eventually external parties that they have to communicate? That's all things that should be done. Yeah. The last point is, why wouldn't you report that information to the auditor? Yeah, because it's the only thing we are talking about, right? Well, because maybe you are a small entity with not a lot of practice to do that, because you fear that the way you do it could be returned against you, or you see what I mean? But it might happen that it stop here if you don't require. So considering might be that you have followed all the steps that we recommend, but you don't communicate.
Yeah, so
I don't know that in the assurance framework, if you don't communicate, you have to do something which is traceable, has to be reported anyway. You see what I mean? So what's your point?
My point is the relevant factors to consider. Are you going to model 360-34A1?
It's already the same.
Yeah.
It's just already the same.
Okay.
So there was only one discrepancies between what we do in the extent code and in part 5, which was the question of same firm. So we propose to align to that one and to keep the rest just the way it was done. And I remind you all our discussions about how long and difficult it was to land with a NOCLA setup. And so going further now on the sustainability would make
No,
more
I'm
sense.
happy with that. I was just trying to react to Amajit's point that we can get to the same point as long as there's no restrictions or a prohibition in law and regulation. So that was the point I was trying to make, because generally the auditor is coming from a legislative framework, so they generally have legal protections and legal rights, which in the sustainability space is still developing.
Yep.
So I understand that this proposal.
And by the way, if we asked for a requirement, I would argue that it should be also done in the extent code, which has, no? Okay.
Okay, thank you very much, Christelle and China. Sadi, Rania.
Yeah, thank you. So I think what we are being asked to do is, or the issue at hand is one of messaging. I think that the idea is to have, to Amarjit's point, a stronger message regarding NOCLAR. And I think, although I recognize that it does not align with the extant code, however, I believe that the context today that we are dealing with is different. There is much more, the issue of non-compliance and governance and is gaining more and more momentum, gaining more and more attention. And I think under the circumstances, especially in light of respondents' feedback, I think it would make sense for the workstream to consider making it a requirement unless, I mean, the difference is, and I see Chana's point, I think, I mean, if you keep it this way, or you make it a requirement unless, you would reach almost the same point. I mean, but not exactly, because you are, I mean, when you make it a requirement, unless there are strong reasons for not doing so, then in a way you're asking the practitioner for a justification, for a rationale for not communicating. And so I think that's important, and I think that the messaging behind it is even more important. Thank you.
Thank you very much, Rania. And finally, Ken.
Yeah, I would just ask Workstream to maybe give a bit of further thought as to the rationale for the differential approach taken under the existing nuclear provisions in the code. And I just want to make sure that there's been consideration of the explanations that were given in the basis for conclusions in the original nuclear standard, but importantly in the explanatory memorandum for the original proposal. And I can just very briefly bring those explanation of the rationale for the differential approach to the board's attention relative to the extent nuclear provisions. So if one were to read paragraph 77 of the explanatory memorandum to the nuclear standard, sorry, when the proposals were out for re-exposure. So the rationale was, at the time the board said, there should generally be no impediments to reporting the matter within a firm where the client is also an audit client of the firm. And that is in the context of the firm providing a non-assurance service to the same client. So in other words, there's generally no impediments, and there would be an expectation that there would be internal communication within the firm, unless there are specific engagement terms that would preclude such disclosure. The situation may, however, be more complex and nuanced when the client is an audit client of a network firm. In particular, there may be local laws or regulations that prevent disclosure outside of the jurisdiction. Also, the nature of the engagement itself may limit disclosure outside the firm, such as in the case of certain forensic or litigation services, or in the case of an ongoing investigation into the matter by a prosecutor. In addition, materiality may be an important consideration. For example, if the matter may be immaterial to the audit of the group. So for these various reasons, the board at the time decided that it would not be appropriate to mandate reporting to a network firm, and therefore it was a consideration of the communication. So that is the basis for the current position in the code. But now we have to take that approach in the context of sustainability assurance engagements, and it's a slightly different context, because a sustainability assurance engagement is, as we started, as we know, the starting premise is that it's an engagement at the same level as an audit of financial statements. It is not a non-assurance service per se. And importantly, IESBA has given, I believe, some good reasons as to why we may need to take kind of a look at the list of factors that were set out in the exposure draft. And I think at least one of the factors I did note wasn't quite appropriate, because that factor says that basically articulates whether it's the purpose of the engagement is to investigate potential non-compliance with laws and regulations by within the sustainability assurance client. But that wouldn't apply in the context of a sustainability assurance engagement, because the purpose of the engagement is not to investigate potential non-compliance. The purpose of the engagement is to provide assurance on the sustainability information. So I think there are some nuances there that might be worthy of some further consideration in reflection, and it may be that the current position in the code vis-a-vis nuclear is not directly portable or transposable to the context of sustainability assurance engagements. So not to try to give an answer, but I think it just needs some further thought.
Just want to say that, to my understanding, course, I stand corrected that if the sustainability information pertains to governance very specifically, one of the main pillars is compliance with laws and regulations. And so that is what I think in that case, it becomes extremely relevant. I mean, NOCLAR becomes even more relevant. And so that is something that, I mean, that's why I'm saying the context is quite different. For the audit of financial statements, the focus is on the financial information, and where the auditor or the assurance provider might come across non-compliance. But here it's completely different, and the context is different because with sustainability assurance, in my mind, there's a sort of assertion being made by the entity is that they are socially responsible. There's a higher level of, you know, assertions being made in the reporting, and that's why I feel that NOCLAR becomes even more relevant. Just a clarification.
Thank you. Yes, Laura, please.
Thank you. just reacting to some of the comments, and thank you. And I think, well, I know that Workstream 2 will take these on board and discuss on Friday and in July. But just a couple of notes. One thing, I think non-compliance, it's non-compliance with laws and regulations. So every law and every regulation is as important as the next one. So I don't think NOCLAR is more important in sustainability assurance than audits, because we're talking about laws and regulations. So they all have the same importance, I would say personally. And I also think that we need to consider something that we discussed pre-ED, which is communication between the practitioners is a fallback solution. So the first responsibility of the practitioner is to talk to management and those charged with governance and address the matter with the company itself, with the entity itself. And so we're talking about an extra step. And that's why at the time the Workstream 2 proposed and the board agreed to frame this as a requirement to consider communication, because the primary responsibility would be to address this with the management, and then by management, who also, by the way, have a responsibility to inform the relevant parties, which include, of course, the auditor or the sustainability practitioner. And so this was framed as a consideration to communicate, considering the practical limitations, the laws and regulations, and we had the equivalent of that list of factors that Shana just mentioned as a guidance. And as Christelle mentioned, so this halfway solution mimics what we have currently in the code when we are talking about professional accountants communicating with each other. I think we should, if we're departing from that solution in part 5, I think we need to think about the consequences in part 3. Because of course we're Workstream and we will think about this, but I'm not so sure the situations are that different if we're talking about audits or sustainability assurance, because precisely they are at the same level, or this board decided to set standards because they have the same level of public interest. But anyways, I think, thank you for your comments, and we will obviously reflect on them. Thank you.
Thank you very much for that clarification, Laura. Amajit, please.
Just a quick follow-up, and this is an off-the-cuff suggestion. So can we look at a middle path where, you know, the requirement to communicate would be mandatory, even, I'm just putting a thought on the table, even when the firms are in different networks, give some exceptions, excepting following situations. In all other situations, it would be mandatory. And those situations are anyway listed, which are the factors to consider. So barring those situations, it should be mandatory. That could be one potential solution to look at.
Okay, thank you for that proposal, and that I think that the task force will address. Ken, please.
No, I was thinking precisely of that that avenue, Margit, which is essentially to go with a requirement subject to those factors. If management has already communicated, if there are restrictions imposed by a regulatory agency that's undertaking an investigation, or if there are prohibitions in laws or regulations to make the communication. But if one were to go down that path, as Laura says, we need to give consideration to the implications for the extent provisions, because the extent provisions essentially take that approach of setting out the considerations and leaving it to the judgment and the decision of the firm in that case to decide to make that communication to the auditor. So if, as you say, we make it a conditional requirement, as it were, we need to consider whether we'd have to take the same approach in the extent provision.
Okay, Sunam, please.
On top of what Laura said, my understanding about the 360, the external nuclear provision. I was told many times during this meeting there were a lot of legal challenges, implications affecting the practice. So even though the current provision is not complete, I believe there was a suggestion and conclusion that we are going to implement this provision, and later on we'll come back to see how effectively the provision is taken in the practice. So our plan is to have a post-implementation review, I believe, a few years. So at that time, I believe we can have more consistent position and a consistent approach, not only audit, but also sustainability assurance side. Thank you.
Thank you, Songnam. Well, I think you're the last one wanting to comment. I don't know if Tom has anything to add to this interesting discussion.
Oh, thank you very much. And I think this discussion overall is very fruitful, and I would like to leave. I'm very comfortable with the development of discussion. Thank you.
Thank you very much, Tom. So I think that the group in any way, the task force has anyway some food for thought here. But anyway, I think that in general, the suggestions were welcome. Some considerations to be taken on board, but this is really always a very interesting discussion when we start speaking about NOCLA. Of course we are late, but for good reasons. And I would suggest, if there is no other comment on this, that we break now, but just for 20 minutes. Okay, so we'll be back at 4:45. Okay, thank you. Okay, thank you very much for being back. This is the last session of the day, intensive and productive day, and the last session of the day, still on the topic of sustainability, has the purpose of providing the board with the result of work, research, analysis that has been made by the staff with respect to the EU, the European framework. I will just recall you the background of this exercise. We discussed in March, and I had the opportunity to provide you with some information and some feedback, some thoughts about how this standard, namely IESA, will or will not be interoperable with the European standard. Apart from its material or substantial interoperability, which I'm sure that we will achieve at the end, and that we are very close to that, there is a different question, which is what will the European Commission do with respect to ethics and independence standards or rules for their framework, and how much is the IESA and the European framework coincident, convergent, consistent, if there are areas that the European Commission has not covered and we do cover, if everything is consistent, and etc. This is an exercise that we needed, that we needed to make sure that in our conversations with the European institutions, but also with other stakeholders, that we are sure about what we are saying If we say that this is there is a correspondence, it's equivalent, it's not equivalent, there's some differences, etc. So it's basically a technical exercise of which is very much important to us all, because you will in your outreach and conversations, this will be, at least for you, subject to some questions and concerns, and to understand how should we deal with this relationship with Europe going forward. This exercise was absolutely necessary. So I will give the floor to Sylvia, who has been working with on this topic, and kindly ask Sylvia to present, to provide us with what were the results of this exercise.
Thank you very much, Gabriela. And I recognize that I am between you and the end of the day, so I will try to keep this presentation as focused and brief as possible. And the objective of the session today, as Gabriela mentioned, to provide you an overview of the key areas of the preliminary findings of the comparison of the ethics and independence framework applicable to assurance of sustainability reporting or sustainability assurance engagements in the EU, and also in the IESBA code, so what we in the IESA, and really just to provide you our findings, and also then most importantly to discuss how can we use the information from these outreach, and what should from these benchmarking, and what should be the next step. And with every benchmarking we carried out, namely regarding the SEC, I think we learned that the most important thing is the caveat to provide that what is realistically possible to do during a benchmarking exercise, and how to compare two different frameworks. So as part of this presentation, and also the documents we have circulated to you before, the table of comparison is really just a high-level comparison of the key characteristic of the two frameworks. And also this is a preliminary analysis that was carried out by the staff. So we didn't consult with the European Commission on other European member states. It was mainly a desk research done so far. And the other important thing I wanted to mention, that it wasn't our objective to determine which framework is more stringent or less stringent. It was really just to help the board with its work regarding the sustainability assurance standards. And also, given that, as we will talk about that later, the EU framework choose to integrate the ethics and independence standards applicable to audit and assurance. So we didn't try to prepare a comparison of the currently existent audit framework. So really focusing on what's relevant from sustainability assurance point of view, and what was the decision points that the EU make and could be informative for the board's consideration. So firstly, it's to see what's really the subject of the comparison. On one end, from the IESBA code, we took the IESA as it was presented in the ED. And the EU laws, we considered the directive on the corporate sustainability reporting, the CSRD, and also the directive on the statutory audits of the annual accounts that was amended by the CSRD. So these are directives, EU directives, and the EU directive itself, they do not include requirements for the statutory auditors and the audit firms itself. They require, or they set out some obligations for the member state to transpose the requirement in the national laws. So obviously, one of the limit of these benchmarking as well, that we are focusing on these directives, but these directives need to be transposed in the national laws and regulations. So on the top of these directives, there is also a regulation on the specific requirements regarding the statutory audit of public interest entities. So unlike the directive, the requirements in the EU law, they are directly applicable in the member state. So there is no, it's not necessary to transpose the requirements in that. So just really some background on what was the subject matter that we considered within the EU laws. Also, what what we compared, as I mentioned, the ethics and the independence framework applicable to the sustainability assurance engagement is what is the sustainability assurance within the EU law. It's the EU sets out a mandatory limited assurance of sustainability reporting of large and listed entities prepared in accordance with the EU law. So I just spotted a typo on my slide. Sorry, so it's large and listed entities, not large listed entities that we are talking about. So this is a mandatory assurance, but the EU chose to have a progressive approach and only requires the limited assurance of the sustainability reporting. However, the reporting entity may decide to choose to go with a reasonable assurance. So the framework that applies is the same irrespective of the type of the engagement, similar what we have in the IESBA. And as I mentioned, the EU will consider the mandatory reasonable assurance after a certain period of time. So that's what the progressive approach. And also the sustainability assurance in the EU, they also covers the assurance of consolidated reporting. So there is in the framework, there is a discussion about group sustainability assurance engagements as well. Why is it important? Because just as we discussed before regarding the scope of the part 5, really the focus of the engagements that we determined in the international independence standards in part 5 is similar. So it's like assurance engagement on sustainability information developed in accordance with the general purpose framework, so the EU sustainability reporting framework, and also a mandatory sustainability assurance engagement. So really the focus of the two frameworks are similar or like aligned. The other similarity between the two frameworks are the profession agnostic approach. So the EU framework is also provides or build on a profession agnostic approach and aims to provide a level playing field. So the directive which regulates the statutory auditors, so the statutory auditor as determined is an individual who is registered or licensed by the competent authorities in the member states to carry out the statutory audit, and where applicable, the assurance of the sustainability reporting. So the recitals to the CSRD also acknowledge the benefit of the statutory auditor of the financial statement carrying out the sustainability assurance, as this could ensure the interconnectivity between the financial information and the sustainability information. So this is something that the EU or the Commission also considered. However, they also recognize that there is a benefit of a diversified market, and there would be a need for practitioners, other practitioners as well. Therefore, the CSRD provides the option for the member states to allow statutory auditors other than the auditor of the financial statement to provide the engagement, again based on the decision of the member states, but not only the statutory auditors, but also accredited independent assurance service providers can step into the market if the member states decide to provide that option. However, the member states also need to ensure that these independent assurance providers are subject to requirements that are equivalent to the requirements set out in the directive. So again, same objective is to have a profession agnostic approach. The other characteristic is the equivalence. So the equivalence between the ethics and independence framework between for the audit and the sustainability assurance engagement. However, based on our analysis, this equivalence, it's a bit different between the two framework. While in the IESBA, one of our objectives was that the same standard would apply irrespective whether if it's the statutory auditor who carries out the sustainability assurance or someone else, the part 5 would apply. in the EU framework, there is a slight difference because the directive as a basis sets out a framework for the member states and provides the objective that the member states would follow regarding their ethics and independence standards. And above that, there is the regulation for the auditors that is directly applicable. And this regulation, as it is now, are not applicable to statutory auditors or other sustainability assurance practitioners who are not the statutory auditor of the financial statements. So there is some additional requirements that the auditor of the financial statement needs to comply with regarding their independence in that sense. So I wouldn't go into the specific details, but what you can see on the slides is really explaining that approach, that there are some requirements that only applies regarding the independence of the firm if the firm is the financial statement auditor and the sustainability assurance practitioner, such as the firm and the partner rotation, the threshold, the specific threshold specified in the regulation regarding the total fees from one client. So this is the 15% approach, and the threshold regarding the proportion of non-audit fees to audit fees. So this is the 17% cap that we are going to talk about, and also the publication of the transparency report. So these requirements only apply for the auditor of the financial statement, why these requirements are provided in the proposed IESBA. And other findings, a couple of findings regarding the equivalence. So as I mentioned, the first step in the EU laws is the directive. And in the directive, the EU took the approach that some of the provisions regarding the independence and objectivity that is currently applicable to the auditor should be, or is required to be applicable to the assurance provider as well, or the other statutory auditor who carries out the assurance work, mutatis mutandis. So this is the integrated kind of approach. So there were no changes to the actual wording of the directive, but there is a requirement that the sustainability assurance practitioner should apply these, the member states should apply that to the sustainability assurance providers, mutandis mutandis. The problem or the issue, we believe the issue with this mutandis mutandis approach that we discussed while we were developing the IESBA as well, that it doesn't provide all the necessary means to address the characteristic of the sustainability assurance engagements. For example, in the EU framework, there is no specific acknowledgement or provisions around the different reporting boundary compared with the financial reporting. So they are not addressing the value chain concept specifically, or they are also repeating the period during which independence is required and referring to the period of the financial statements that we have already identified that could be problematic in that space. And also the prohibited non-audit services that we will talk about later, that there are no specific acknowledgement or refinement in the sustainability assurance, in the context of the sustainability assurance. So having said that, it's difficult to state that because, as I mentioned, the directive just provides a framework that the member states should apply. So how the member states develop their ethics and independence criteria, they can address these specific topics, and the directive is quite high level. So it doesn't mean that it's not necessarily covering, but not specifically addressing these issues. But we believe that this is one of the area where there is a difference in approach between the two framework. The next topic quickly is the professional ethics. So the requirement or provisions regarding the professional ethics. The directive requires the member states to ensure that all statutory auditors and audit firms are subject to principles of professional ethics, covering at least the public interest function, the integrity and the objectivity, and their professional competence and due care. So as I mentioned, again, this is the same requirement that applies for the auditors as well, and it should be applied mutatis mutandis. In the directive, there are further requirements related to confidentiality and professional skepticism as well. But in general, the directive itself does not provide a detailed ethics framework as we do in the IESBA or a conceptual framework. It simply determines the objectives that the member states should follow or set out in their own framework, and these objectives are in line with the fundamentals principles of the code. So we believe that if someone follows the ethics provisions in the code, would meet this requirement in the directive regarding having a profession ethics provision for the sustainability assurance providers. Regarding the ethics, the directive also requires the application of the requirements in the regulation regarding irregularities or suspected irregularities that aims to achieve the same objective as IESBA. So the directive also covering what we are intend to cover in NOCLAR. However, this is what we have in NOCLAR is a more comprehensive set of provisions. And also what's not on the slides, that what's in the directive, these irregularities are only applicable in the context of PIEs, so public interest entities. Regarding the independence framework, there are more provisions on independence in the directive itself, and it sets out requirements on the internal organization of statutory auditors and also the organization of the work, so the audit and the assurance work. The directive also requires the statutory auditors and the firms participating in the engagement to be independent and not to assume management responsibility. And it addresses the independence of the network firms too. So regarding the objectives, the framework are similar. Of course, what we have in IESBA is more comprehensive. And what's the similarity as well? That the directive also specifies specific threats to independence, and these threats are the same that we have identified in the context of our conceptual framework to ethics and independence, but in the context of the EU framework is only in the context of the threats to independence. And there is no specific conceptual framework approach in the EU framework. It refers back to a threats and safeguards approach, which is in line with the approach that the code included before the 2018. I'm looking to Kendall, I think it was 2018 restructuring. So it's not a conceptual framework. It's whether the safeguards applied. So it's more of a threats and safeguards approach, if we can describe it. However, this is not just a difference applicable to the sustainability assurance. As I mentioned, it's an existing difference within the context of the audit as well. So regarding the relationship with the reporting entity, this is also something that is addressed mutatis mutandis. The directive addresses certain relationship with the reporting entity and also its related entity that could compromise independence or create a conflict of interest. So you can see in the boxes those relationships that are currently mentioned in the directive, but these are usually just a really high level provisions, so not as close as comprehensive as the IESBA. We didn't even go into the details to try to compare the description of the services or going so far. It's really just to try to see what are the relationship that are addressed in both frameworks. And the similarity is that in both frameworks, they are not covering only the engagement partner or the team members, but they are also covering the individuals who are in the position to directly or indirectly influence the outcome of the engagement. So this is a similarity that between the codes and the EU framework, but this is an approach again that that is applicable both for audit and sustainability assurance. The difference is that unlike the EU framework, with IESA, in the IESA we provide detailed independence consideration for group engagement or others outside of the firm who participate in the engagement. For example, like other practitioners and external experts, they are not specifically addressed in the directive, but that doesn't mean that in the member states transpositions they wouldn't be addressed. And again, it's not something that it's sustainability specific. It's something that it's already there for the audit framework. Regarding the prohibited non-audit services, the directive follows the same approach that it's currently there for auditors. So it provides a list of prohibited non-audit services. So this is a different approach between the extant code and the EU framework as well. That in the EU framework there is a list of prohibited services. Why in the code we provide a principle-based approach in addition to the specific prohibitions. And the directive refers back to the list that it's in the regulation and currently applicable for the auditors, and requires, again, the mutatis mutandis application, except for two services, namely the payroll services and the tax services. So these services are prohibited for auditors, but not prohibited for the sustainability assurance providers. And the CSRD also amended the regulation for the auditors as well, and included a prohibition regarding the financial statement, so the services regarding the preparing the sustainability reporting. So it's an amendment that it's now therefore for the auditor of the financial statement as well. But again, apart from these specific services, the other difference is that the description of the services that doesn't include any refinements, and the other element is that that it's not in the regulation. So unlike for the audit, it is not directly applicable. It needs to be transposed in the national laws and regulation. And the final topic we wanted to point out that could be relevant to the board's consideration is the fees. So both frameworks, the EU and the IESA, address contingent fees and the influence of fees for other services on the assurance fee. However, in the as I mentioned, in the EU framework, if the regulation includes requirements only for the auditor regarding the transparency to the fees, the threshold regarding the total fees from one client, and the threshold regarding the proportion of the non-audit fees and the audit fees. And I will just pause here for a moment regarding the proportion of the fees, because that's the topic that that was raised in a couple of comment letters as well, pointing out that there is a difference between the EU framework and in IESA, but there is a difference already how we address the proportion of the fees for in the context of audit engagements as well. So the EU framework provides a specific fee cap. This is the 70%. So there is the prohibition that the firm cannot go or cannot exceed these 70% fee cap. And the amendments of the CSRD was that when calculating these 70%, if the firm provides both engagement, the firm shouldn't include the fees for the sustainability assurance in that 70% calculation. However, in the EU framework, it's a fee cap, and the EU framework is not focusing on the threats to the independence. While in our framework in the code, we are not setting out a fee cap. We are saying that the proportion of the fees could create threats to independence and providing application material how to address these threats. So yes, there is a difference, but I think that the difference is that how we approach the proportion of the fee. So I don't believe that there is a mismatch between the two frameworks. And also in the last point, that the EU laws do not specifically address the level of the fees, the overdue fees, and the compensation and evaluation policies, which is, again, it's the same regard for the audit engagement as well. And before I pause, I would like to again emphasize that this benchmarking was over the EU framework and not on how the member states would transpose these EU frameworks, and recognizing that the objective and the purpose of these frameworks are different. The code is a global framework, while the EU is a jurisdictional framework that really builds on the laws of the member states. So that's why preparing the comparison is really difficult, but I think we try to focus on the areas that could provide a view on what are the topics that are addressed in both framework, or maybe addressed in a slightly different way. So I think I would pause here and ask for questions and comments. And maybe as a next step, I think it would also good, Gabriela, to hear the board's view on how we should use this benchmarking, and what should be the next step, whether we should prepare a more in-depth analysis, and whether that could be useful for the board's consideration.
Thank you so very much, Sylvia, for the work done and for this presentation. Really important. And yes, I'd like to hear the board not only about possible next steps in the benchmark exercise. I will not say what is my opinion, but I'm very happy with this, what has been done so far. At least unless we feel the need to do more for any specific purpose. I will just recall again that this exercise was needed because we go places, we are always speaking with people, we needed to, and I was feeling that very much, very strongly, that I needed to make sure that I was knowing what I was saying while referring to the EU framework versus the IESBA framework. So for that purpose, because I don't think that I really don't think that we should say things which are not, which do not have adherence to the reality. This goes against our credibility. So I think that this work has been done, and I'm satisfied with that. But of course, let's listen to the board, because I think that this conversation links to the conversation that we'll have tomorrow on implementation, adoption, and etc. It's where we are already. But I'd like to hear from you if you think that more granularity in this this analysis is needed, or if with this analysis we just need to arrange or organize the information in terms of knowing in red characters what is missing in the EU framework, and if that is necessary, and really how to deal with this, considering how do you look at this, how do you see this framework compared to the EU framework, and then what to do with it we'll see probably tomorrow. So I see that there are still already some requests for comments, and the first one, I think it was Christelle. So
thank you, Chair. Thank you for this presentation. Very interesting and high level. So it's very good work and probably hard work to get there, given the structure of the EU text, which is quite different. I wonder if, to help us address part of our issues on the non-audit or non-sustainability assurance fees, or no, services, sorry, not fees, services. I have a question to better understand what's in the EU, which is, I suppose that what is not prohibited is authorized. Or should I suppose that what is not prohibited can be considered if analyzed in substance with some threats? Yeah, so this is my first question. And the second one is their basis for conclusion for not including payroll services and tax services in the new prohibitions for sustainability. And if so, I think it would be interesting to hear a little bit on the ground of non-prohibition. Because, for example, payroll services, well, I think in general, it's interesting to hear about their ground for analysis. Thank you.
You mean the grounds for not prohibiting?
Yes,
right? Okay.
Yes.
Okay.
Yeah.
Okay, Rania, please.
Thank you. So I think it's really a great analysis, a great presentation. My question would be, like, I mean, your conclusion ultimately, like the bottom line that I would be interested to know as a board member is, so what are the areas where they are not as demanding as our code, and vice versa? I think if our code is at all not as demanding in any specific area. I mean, we know that in terms of value chains requirements, their code is silent, or their requirements are silent. So I think that's one point. I think that would help guide us towards future steps and future engagement with the EU and recommendations. Thank you.
Thank you, Rania. Sylvia, do you want to respond or yeah?
As you prefer, Gabriela, we can take more questions, but I'm happy to respond.
Okay, so go ahead.
Thank you. So, Crystal, what is not prohibited is not allowed. So also in the EU system, there is the directive that provides that general requirement on independence and the threats and safeguards approach. So just because it's not specifically, there is no prohibition, it doesn't mean that it's allowed, but the list is a bit more concrete regarding the services that the prohibitions in the IESA. And the background for not requiring the payroll and the tax services, I don't specifically know. We can dig a bit deeper on that, but even in the tax services, for the audit engagements, there is a member state option. So the tax was a bit different for audit engagements as well than the other engagements. And just responding to Wanya's point, the conclusion, it's really difficult to say because again, the EU framework was written for the member states, so they need to transpose these requirements. And I think it's hard to say without seeing the member states' laws, where are those specific points. And as I mentioned, just because the value chain is not included, it doesn't mean that it's not covered. I think it's just the guidance the EU framework provides to member states, how they develop their own framework is different. But my sense is that if we go into interoperability, that the two standards can work together, so there is no fragmentation. So if a member state decides to use the IESA, I think they would meet the requirements in the EU framework to provide all those to build up an ethics and independence framework that is currently required in the
question. So my question is the reverse true? if they decide to implement the EU directive, would they be in compliance with the IESA? I think that's the key question.
Yeah, I think, if I may, Sylvia, I think it's difficult to say it that way. And we usually, unless it's absolutely clear, we try not to step into that space without being absolutely sure. Don't forget that this is a very, not very, but a high level analysis. This being said, for me as a lawyer and used to work with the European frameworks, and we are benchmarking to the European framework, then what each country does, it's a different thing, but what is there as requirements for the countries to do something. I think that with a little bit more work, we would very quickly come to the conclusion that there are a few areas, not many probably, which are not covered. And then it depends on the relevance that we attribute to those areas. So I think it's we should, for the time being at least, be careful in terms of saying, well, it's not equivalent, it's much less demand. I agree with Sylvia. I think that anyone adopting the IESA, adopting it really, not saying that it adopts or that they have done something in that respect, someone adopting the IESA will be in compliance fully with the European requirements. If it's true the other way around, I'm not going to say. But to your question, Christelle, about you would like to have more information about why payroll and tax is not covered. I don't have an answer, but what I can tell you is that in the Brussels seminar, there were people highlighting that our standard was too much because it, for instance, and as an example, should not cover that areas, and they were from your country, so maybe maybe it would be important to ask them, because I did not have time to have that conversation in detail, but I saw that there was a strong feeling that these concrete services should not be covered. So this is consistent with what, I don't know if they were saying that because Europe doesn't cover it, or if Europe doesn't cover it because they were considering that they should not be covered. But I don't know if it's the chicken or the egg, but for this purpose, it's irrelevant.
Bruno might tell me if I'm wrong, but I think a tax service was forbidden in France for auditors. Now, who asked to the Europe to pull it out for sustainability? I don't know, but the fact that it was pulled out means that for sustainability assurance providers, it might be authorized to provide also tax services.
The argument was that it didn't make any sense, that there were any threats to independence coming from that the kind of services, so that it should not be included. So I remember having this conversation, but I can't say more than this because, of course, I couldn't have an in-depth conversation further than this very superficial, but very, very, very strong comments shared. So sorry, Sylvia, sorry.
And sorry, on those tax as well, because we hear the comment that this is something that a contradiction, which I don't believe, because if someone applies the general requirements on independence and providing those services, that would provide a self-review thread that would be already still prohibited under the EU framework as well. So I don't think that as a green light for tax services based on the EU framework either.
Okay, thank you very much, Sylvia. Amajit, please.
Thank you. So first, I would like to compliment for this good work. I know it's a very painstaking job, but having said that, so I think it would be useful if we can very sharply define why we are doing this. What is the end game here? Obviously, to my mind, it's promoting our own code, promoting the implementation of our own code. That should be one of the objectives for this kind of exercise. And if we agree on that objective, then I think while we've done it, I believe, without engaging with the authorities in EU, right? It's a desktop exercise. So if you engage, going forward, if we can engage, I think it would be more useful. And then when we are doing it in consultation, we could also publish this kind of study, highlighting, what the gaps are and what is the way forward. Just one last point, I think IESBA is also doing something similar. So they've been engaging with the different jurisdictions, but their objective is very clear. They want to promote the standards, and they want to, gently nudge the jurisdictions towards they want the local standard to converge with their standards, or let the local jurisdiction adopt their standard in toto. So I guess we could have a similar approach, and that would be useful. Yeah, thanks.
I can respond to you, Amajit. That's why I started by saying that this conversation links with the conversation that we'll have tomorrow on adoption, implementation, and those things. Of course, this conversation or this exercise started because we were having since more than 1 year ago, almost 2 years, very many attempts to engage with the European Commission to see if there was something that could be done in terms of setting up a convergent, consistent framework for ethics and independence, which is the most noble objective that we can pursue. The European Commission has now its own framework. They decided, because in the initial draft of the CSRD, I don't think that they had a plan to do anything in this space of ethics and independence, probably driven by our insistence that they needed something. They included those amendments in the CSRD and the audit directive via CSRD, but on this very much mutatis mutandis basis, so without a real tailor-made, fit-for-purpose framework for sustainability. But still, they have it, and it's what we heard about. Now, what the objective of this exercise is really because going forward, we need to know what to do with our code, with the European regime, and etc. It's more or less easy to say in theory how it would like, for instance, with IESBA standards. It depends on political or whatever you want, strategic decisions to be made. It's not that evident with the European framework because of this already existing standard. Plus, I would recall you that we have ISA 5000, we discussed this morning, which says it has to be the ethics, the IESBA ethics code, which, by the way, if it brings other consequences that I haven't mentioned today, but I will make a point on that. But ISA 5000 says it's IESBA, or at least as demanding. So for the European Commission to, if they adopt ISA 5000, let's see, it has to be clear if this is equivalent, not equivalent, etc. This is a journey. It's not an end point where we are. It's really preparing and moving forward in this journey of speaking with the European Commission, trying to establish something which is interoperable or complementary or whatever. And by the way, and I know that others wanting to speak, but this, I don't know, I told you that the CAOB is preparing, received a letter from the European Commission and is preparing an interim guidance. It's not a framework, but guidance for sustainability assurance, where they will probably mostly take ISA 5000. It would be very, very interesting, and I was very sorry, and it was very regrettable that the European Commission didn't even mention the ethics part to the CAOB. So the CAOB says, we don't have a mandate, we are not going to do anything, it's not for us. But it would be very interesting that when setting up this framework, that something would be said. And for me, the ideal thing is that they mention ethics and independence because it's part of an assurance framework. An assurance framework cannot go without an ethics and independence framework, and that it could be, okay, there is the European one, but there is the IESBA one as well. Something like that would be desirable to avoid, again, fragmentation, doubts, and etc. And in addition, the fact that the changes were made in the directive and not in the regulation, as Sylvia rightly mentioned, means that the 27 European countries will do different things in the context of this directive, and so there will be some fragmentation across Europe, plus the fragmentation against other jurisdictions. But that's what. So, Amajit, to your question, yes, it's very much about adoption, implementation, and all these things that we'll have to care about going forward. Sonam, please.
Thank you. Thank you for Sylvia. I understand that the directive is very broad and high level, leaving a lot of discretion to member states. My question is, if there are any member states that have transposed this requirement or this directive into national law or regulation, and plus adding more stringent provisions. If so, I'm wondering if we need to be aware of those requirements or national transposition. That's my question. Thank you.
Thank you, Sungnam. Yeah, in the context of the directive, there are quite a lot of member state option as well. So first of all, these profession agnostic approach, whether they would allow independent assurance providers in the market, that's also a decision, and I believe that will impact the decision on the ethics and independence framework as well, whether they would apply the framework that is available currently for auditors, or they will add further requirements or national laws for sustainability assurance practitioners as well. But yeah, I think it's a good point. And sorry, responding to other parts of your question, yes, the member states can introduce more stringent provision, but cannot be less stringent, and maybe that's something we will also consider.
And thank you for your question, Sunam. This is really important, and I must say and confess that I'm not completely updated. The European countries should be finalizing, because the date is 6th of July, but I haven't heard of any country which has already transposed. Maybe I'm wrong. Oh, France, of course. France, yes, France a long time ago. I'm so sorry, Christelle, of course, and with very, very groundbreaking decisions with respect to profession agnostic. But apart from France, I don't know, but maybe I'm wrong, and there are already countries which have transposed. Sorry, Hungary as well. Oh, so I'm really not updated. Okay. But that monitoring of the transposition status and the options would be interesting. Also, because for the implementation, etc., from now on it will be a little bit of a door knocking on the door, even if it's a bit late, because they are making the transposition decisions already. Vanya, please.
I would say that it is very useful to keep this kind of study, and congratulations, Sylvia, you were brilliant. And one of the things that I think that is important, because as you said, European Parliament is a local regulatory, not a global one. So in a few months, maybe years, people will ask, what is the difference? Because if they are, for example, a Brazilian company that has business in Europe, they will have to comply with both. If they already use IESBA in Brazil, and what should they be doing in order to be in compliance with EU? That's the kind of questions, even to IEESB requirement, that at least as demanding as IESBA, companies and governments will start asking, what are the difference? What should I do? If they do not have this answer, they will have to redo the work in order to be sure that they will be in compliance with the others. So I think that for educational purpose, that's why IFRS Foundation did that, in order to, because they are global standard setters, and so they want to be able to answer this kind of questions. I think it is very useful for us to have the answer as well. So I know you are too busy right now with the the standard itself, but it's something I understand that this kind of study should evolve, and even that consultation that you did not yet have with the parliament itself, it be useful in the future, so we can have a formal answer to this kind of question.
Thank you very much, Vanya. Luigi, please.
Thank you for the presentation. I have three types of comments here. One more general, then some details, and then some proposed action to complete the work. To complete the work, because I think this is the starting point of a benchmark, but it is not a document that I would use as it is now. And the reason is that, as you mentioned before, you compare a framework with a very detailed code with the intent to show that the code is better, or at least it is complete. And as it is written now, I'm not sure it is the right way to pose the question or the matter, especially if we would like to to have an objective in order to use this one. And the reason I'm saying that is because we have at least 3, if not 4 layers in European countries. We have the 2 layers you mentioned and compared that are just framework, so the regulation and the directive, but they are really general framework. And then we have at least an implementation in each member state, and most likely also an addition that could be different in different member states. For example, in my country, the addition is the IESBA code, maybe with some differences, but it is the IESBA code. And I will go back to this matter in my third comment. So basically, I think that this comparison, sometimes it is too detailed when we go to the code. And I understand the reason. It is to show that the code is needed, is better. We know, I agree with that, but probably the way you are presenting and you are highlighting certain things may have, let's say, different consequences or a different understanding in certain readers, probably. So a more balanced approach and an activity to complete the analysis, I think it is needed. Then there are some details comment. I found certain conclusions that are not really consistent with what it is written into the framework, not considering the implementation and the additions. As an example, in slide, I don't know which number is it, should be 7. Maybe it is a matter of wording, where you say it does not address the specific characteristic of sustainability assurance engagement, such as prohibited non-audit services. In the following slide, you highlight that there are prohibited, a list of prohibited services, so there is an inconsistency here. And in fact, there are. Another example of an issue that should be clarified in slide 12, you say that both framework prohibit contingent fee, but let's say contingent fee with respect to the audit or assurance engagements, not contingent fee as a general concept, and this is probably something to fix. Again, in this slide, you were saying that EU laws does not specifically address compensation and evaluation policies. This is not really the case, because in Article 24A, if I remember correctly, there is a specific provision on remuneration, and it is more restrictive than the IESBA code in certain respect. So this is something to fix. So in the presentation, there are some elements that require some amendments in order to be, let's say, not to be challenged when presenting this presentation, these conclusions. As a third comment, I think that in order to complete this exercise, we have, as usual, several scenarios. One could be to consider all member states or some of them and go through the third and fourth layers and to have the comparison. Frankly, this is my personal opinion, this is not really useful. The other thing that I think may be useful is to say that there are the additional layers and to highlight which countries has adopted as additional layer the IESBA code. This could make the difference in dealing with people that we would like to engage on with this benchmark, because we are demonstrating that notwithstanding what it is happening, a number of member states already implemented it, so they are ready to implement the new version.
Okay, thank you very much, Luigi, and Sylvia will certainly look at this comments and refine if necessary in accordance before we decide exactly what to do. Again, this was a very pragmatic approach for myself. I did not want us to say things which had not at all adherence to the reality, so that we needed to have at least a vision of what's there, what's here, and etc. But yes, it's important not to have any kind of inconsistencies and then not to allow anyone to challenge the conclusions. Then we'll see what to do with this. But I think that your suggestion is relevant about seeing which countries adopt the code and how are they going to deal with this in terms of the new sustainability reporting framework. Thank you. Mark, please.
Thank you. So we talked a lot when we were developing the material to go in the ED about the importance of equivalence. And in a sense, it drove the proposals. We should be equivalent to the requirements that apply in an audit of financial statements. And, you know, I know that that's something that we certainly benefited a lot from Jens's experience about the requirements that are applicable in the European Commission or in Europe that the Commission and the Parliament have set. Whilst we are in an unfortunate position where there is no clear statement at the moment about the use of Part 5 of the code as the basis for ethics and independence requirements in sustainability, this exercise does at least demonstrate to us that were we asked to prove that, and were we asked to carry out a more detailed exercise to do that, we could do it. So our basic assumption that we needed to produce something that was equivalent, we have done. Okay, there are areas where we are more stringent. There are questions around some individual elements. I think from what I remember on the issue around remuneration, it was the fact that remuneration has to drive audit quality, I think, from the directive. I don't think anyone's really quite worked out how remuneration drives quality. But nevertheless, I think we've got a really good basis to be able to say, were we asked to demonstrate through any assessment that what we've got is equivalent, we could do that. I don't think in response to Sylvia's particular question, what are the next steps? I don't necessarily think there are next steps immediately, but there may be a case as, you know, work moves forward that there will be other jurisdictions in which a similar beneficial assessment could be carried out that would allow IESBA to engage and continue to argue as to why the code is a high standard of supporting strong ethical and independence requirements in the sustainability space. So, you know, I think we've got a good outcome. We've demonstrated we've got a good place to build from where we asked to do more to demonstrate the value of what we've done. And that's a model that we could repeat if it was helpful in negotiations or discussions with other jurisdictions. So I certainly think the effort's been well spent. And it's something we should bear in mind as a model for other things.
Thank you very much, Mark. Yes, I'm sure that this work was very welcome and time well spent in this. At least from my side, I feel much more confident today when speaking about what's there in the CSRD than I was 3 months ago, where I was always a little bit afraid of going, going wild and saying things which were not true. And this is important. This also will allow us probably to start thinking about things like interoperability and things like that. So this is a basic, fundamental instrument for us to move forward with negotiations, with interoperability, with even, I don't know, if there was that possibility, asking the framework that is going to be developed by the CAOB to cover areas which are uncovered by this framework. I don't know. I think that there is a reflection to be made upon this for the time being. I think that the request is give a second look here, namely in the light of Luigi's comments, and see what should be refined, and maybe highlight in a more visible way with the differences that we found, namely in areas which are not covered by the EU. And then we'll see. I think I would not oppose publishing it like we did with the benchmark that we did with the SEC and sharing it with the European Commission. I don't know. This is for another discussion about what to do with this product, but it's certainly a very good work and very welcome. And I know that it was developed under difficult circumstances, so thank you very much for the team for doing it. And this is it for today. We are a bit late, almost 20 minutes, but I think all the time that we spent here today was very, very necessary and important. So I wish you all good rest for those who are going to go immediately to think about other things. For those who still have to work, task force meeting, namely the EIOC, I wish you a good work, and we will be here tomorrow again at 9. Just one question, Ken, and asked you, since tomorrow we have the activity, and the board activity is different from what is usual, should I don't know if we have time, if people have time to go to the hotel, recommend that you already come prepared and dressed for camping and not exactly for a board meeting?
I second that.
Comfortable, you will be okay, no problem, comfortable and ready for the program, and Astio has shared the instructions, so don't forget about that in case you don't have time to go to the hotel.
No shorts though.
Okay, thank you very much. See you tomorrow.